Welcome everyone to my Quickbooks Online Tutorial. My name is Fula Kamara and I am the founder of F Kamara CPA. This series is your one-stop shop for mastering QuickBooks Online, a powerful tool that will simplify and streamline your business financial management. Whether you are a newbie or an experienced business owner, we have got something for everyone. From setting your account to tracking income and expenses to creating detailed financial report, we've got it all covered. Our videos are packed with practical tips and step-by-step instructions. Don't forget to subscribe and hit that notification bell so you will never miss a video. Without further ado, let's get started. If you want to become a pro advisor, then this tutorial is also for you because we try to cover all the topics that are tested in the pro advisor certification. Starts from onboarding the client into QuickBooks. Then we have the chapter 1, which is QuickBooks Online Navigation, and then we have until closing the books, which is the chapter 48, and then chapter 1, which is the QuickBooks Online Navigation, and also this is going to walk you through how to set up your QuickBooks. So first of all, you can access the test drive, which is the sample company, by going online to this site. That is so once you've verified, and then it will take you to this company, this sample company. So this is a sample company, and then in terms of how to become a certified pro advisor, that is, if you want to become a pro advisor, you can visit this site. So this is where you do your registration. So this is the site where you can sign up for your pro advisor certification. As you can see, you have the QuickBooks Certified Pro Advisor, then you have the QuickBooks Online Advanced. So this is the advanced certification. Then you have the payroll certification, and then the desktop. So this tutorial is for the QuickBooks Online Pro Advisor certification. So this is the site where you can sign up. Okay, so you can click sign up to become a pro advisor. So here you enter your email address, your first and last name, and then you can put in your phone number and the password, and then click continue. Since I already have an account, I'm not gonna submit this, but yeah, this is where you go to sign up to become a QuickBooks Online Pro Advisor. So once you sign up, then you go to your account, you will be able to set up your account. So here, this is the sample company. So here you can see the different centers. You have the dashboard, and then the banking center, the sales center. So we have all these. So if I want to go to the dashboard, I just click on this QuickBooks, the QB, and then it will take me to the dashboard. So you have you can find the dashboard under the business overview. So this is the area where you can navigate, and then in terms of once we have signed up, we can go to our account. But for this tutorial, we are using the sample company, which is the test drive. This is the sample company that we're using for this tutorial because I don't want us to save any changes, because in this sample company, any changes that you make to this sample company will not be saved. QuickBooks Online has been organized based on the workflows. Like, you have the customers, the vendors, the employees, and others. Under the customer, there you find the invoices, and then you have the estimate, credit memos, etc. And then the vendors, under the vendor, there you find the expenses, checked, bill, and then pay bills. And then the employees, there you can find a single time and then weekly time sheets, and the employee, add an employee, etc., etc. So on the other, there you find the bank deposit, transfer, journal entries, etc., etc. So which makes it easier for navigation. So let's say if someone who doesn't have like experience in how accounting works, so they will look at the customer. On the customer side, they know, okay, if I have an invoice, if I want to invoice a customer, I go to the customer tab, then I will find the invoice there. Then also you have these centers. So in the sales center, there you find all sales, invoices, estimates, etc., etc. And then you have the customers and lead, which is also another tab, but we will discuss all these in detail once we get to those respective chapters. So the next one is use the magnifying glass icon for search, tips, and recent transactions. So if you've just entered a transaction and then remember that, okay, I have just entered a transaction, but you are not sure that whether the transaction has been posted or not, you can use this search to find the most recent transactions. Then you can also use keywords here to search for anything that you are looking for. Then the next one is the notification. This is where you get notification from QuickBooks if there is any announcement that Intuit might want to disseminate. You will see them through this notification. And then so for the settings or the gear icon, this is where you do all the settings or configuration of the QuickBooks Online account, company account. So you have the account and settings, and then you have the here your company. This is where you customize your company. And then the list, this is where you find all lists, and then you have the products and services, recurring transactions, attachments, etc. Then if you have tags, custom fields, this is where you find them. And then for the tools, you can see we have other checks, import. This is where you import data from different sources, whether it be a list or maybe the banking center, you want to import a bank feed. This is where you go. You can also do it in the respective centers. Then you can import desktop data where if you are converting the client's QuickBooks from the desktop version to QuickBooks Online, this is where you do that as well. Profile, you have the feedback. This is where you provide feedback, and then you have the privacy policy. So you also have here you can switch to the accountant view, because the business view. So QuickBooks has two views. You can either be on the accountant view or the business view. So you can see the business view has few menus, and then but for some menu, until you click on some of these menu before you can see the detail. Whereas for the accountant view, everything seems to be direct and easy to find. So if you go to the accountant view, you can see all the reports. You can see where you can generate a report. Whereas for the business view, you have a different way to find reports and also all the other centers. So you can see, then you have my accountant here. So this is where you client invite accountants. Mind you, this QuickBooks Online, this is the QuickBooks Plus subscription. So the accountants, the QuickBooks Pro Advisor account is not the same as this, but all the functionalities are the same. So on the QuickBooks Pro Advisor, you have the center for the client, where you can see the client information, and then you also have areas where you can take the Pro Advisor training. Let's switch back to the accountant view, and then you can see so in the dashboard, this is the QuickBooks dashboard. So the dashboard serve as the starting point to access all features of QuickBooks. So if you go to the business overview, you can see most of the features of QuickBooks, because you can see the sales, invoices, menu, and the tile for the invoices. So if I want to look if I want to see the detail of all these tiles, I can just click on any of these, and then it will take me to the drill down. So you can see all the invoices. So if I want to go back to the dashboard, I will just click on this, take me back to the dashboard. Then if let's say so the business overview section of the dashboard includes the current status of the profit and loss. You see, you have the profit and loss. This is the profit and loss. You can see that currently this business has a loss of 645. And then you can also see the banking center. You can see the banking, all the accounts that are linked to this company. So you can see there is a checking account which is currently linked or connected. You can see savings and also credit card account. Then you can see if we go back to the dashboard, you will see the expenses. So you can also see the sales. So currently there is a total of 3,000 sales. So it will take you straight to the report. You can see here if you want to go back, you either click back, so it will take you step by step. So now it will take you one step back, which is the reporting center. So if I want to go back to the dashboard, I will just click on this. And then, so the next one, we're looking at the invoicing. So you can create an invoice by navigating to the plus, plus, and then invoice. So the plus new, whenever you want to create a transaction, you can click on plus new, and then it will take you to, you can see all the options, whether to create an estimate or an invoice. So once the invoice open, you can also customize. So here you have the option to customize this. You can either make a recurring transaction. So we are going to go into detail. This is just navigation. So if I want to customize the style, I can click on the customize, and then so let's say if I want to change the templates to look something different, I can change it to whether make it modern, or I can select any of these templates. And then if I want to change the color of this highlight, I can make it orange. So this is where you change all these. And then the font, if I want to change the font, let's say maybe I can make it Courier. So you see. And then if we go back to the template itself, you can add a logo here. So you can click here to add a logo. So if I want to make let's see, then once I click on this, click the plus sign, it will add a logo. And then if we go to the content, so the content, you have the option to select either the header or the body, and then you can select the footers. So on the header, you have the option, you can change this name here, that is the display name, and then you can add a phone number if you choose to, or you can add the address, also the website if you want to add your company website. Yes, you have the option to do that. So you can either change this, so from a form, then you can, anything that you unselect, it will show that field name. So you can see it will show whether it is an invoice, and then the number, if you choose to show the form number, it will show the invoice number. So if you check this off, so the invoice number will disappear. So if I want to show the invoice number, yeah, it will show that. So this is how you change, and then for emails, you can customize the email, whether you want to get a full detail invoice. That is, if you send this through an email, if you want it to show a full detail, this is what you click on. Or if you want to get just a summarized one, this is what you click on. And then if you want it to be attached as a PDF file, you can do that. So you can also preview this to see how it looks like. You have the option to, so you can see this is how the invoice will look. So that's the invoice. So once we have created, we click done. So once we've created the invoice, let's say if we go back to the invoice, let's say we want to see the recent transaction relating to, we can see this. These are the invoice, the most recent transactions. Let's say you made a transaction and then try to verify whether the transaction went through. You just click on this clock, and then you will see the most recent transactions. So here, as you can see, you can check off what you want to display here on this gear icon as well. Then you also have the help. So yeah, that's the invoice. So after we've created an invoice, we also have the option to receive payment. So we only create invoice for on credit transaction. Like if we sell something on credit, then we use invoice to record that sale. And then so now we have the account and settings. So for the account and settings, you can see this is where you make most of the customization. Like if you want to change the company logo, you can add it here. And then if you also want to, so if you want to change the company name, you can change it from here. If you want to like also add the EIN number, that is the employer identification number, you can check this and enter the EIN number and click save. So the company type, you can select whether it's an LLC or sole proprietor, and then after that you save. And then you can also see the contact info, the email address, and then the phone number if you want to add that as well, the website. So if I want to add the website, you can add it here as well. So, and then the address, etc. And then so you have the usage. This is where you see the number of chart of accounts that are still remaining, because the plus has up to 250 chart of account. So currently the business has used 44, so of the 250. So this is where you check for the client subscription level, because all the subscription has limit for certain things. So you have the number of users. This has 5 users, so they have not used any of those 5 users. So this is a plus subscription. So you can see the tags. You can get up to 40 tag groups, but you can get up to 40 tag groups, but you have unlimited tag. The sales, this is where you customize the sale. You can turn on a lot of things here on the sales center. Yeah, you have the option to change the preferred invoice times, whether be it net 30 or maybe net 10. So this will appear on the invoice. So here you can customize what we show on the invoices. Then if you want to add like transaction numbers, the service date, if you want to add that, then if there is a discount also, you want to show that for deposits. So once you turn the sliders, you can click save. And then for purchase, you can do the same. Whatever you want to do here, you can whether you want to track inventory, you can turn that on. That is if you have the only one that the minimum subscription that will allow you to track inventory is the Plus is the minimum one that track inventory. So if your client is planning to track inventory, then they need the Plus subscription. So we're going to discuss more in detail for all those as well. So yeah, that's for the account and settings. And then you can also change, like for example, if I go to advanced, because sometimes QuickBooks, if I remain inactive for like 1 hour, the default is 1 hour. After 1 hour it will log you out. So if I want to change that, so 3 hours, I will just change it and then click save. So now if I'm inactive for 3 hours before it will log me out. So then yeah, that was, and then so if now let's go to the chart of account. So for the chart of account, currently let's look at the chart of account. You can access the chart of account in two ways, whether you go to the settings. So on the settings you can see the chart of account, but we can also access this same chart of account from the accounting. So if we go to accounting, so we have the chart of account. There also you have the option to do the reconciliation, but yeah, we can also do the reconciliation. If we get started, we will be able to do our reconciliation. We enter the ending balance and then the date, the ending balance from the bank statement, and then the date. So once we enter those, that is the year, the month end date, and then we click reconcile. It will show us the difference, and then we can use those to reconcile the account, the specific account. So here on the reconciliation, you can reconcile different accounts. So whether it's the savings, yeah, I mean whatever account you want to reconcile is what you select from here. So for the chart of account is also called the list of account. It's contain a complete list of the business account and balances. The chart of account is categorized into two sections, that is the balance sheet and the income statement account. All those that you see has run report, these are income statement account. Then all those with view register, these are balance sheet account or permanent account. But you can also run report by just clicking the down arrow and then run report. You can edit some of these accounts, even though you have some accounts that you cannot delete. In general, you cannot delete an account from here, but you can customize these accounts. You can rename them. Some of them you can rename, but some you won't be able to rename. Even if you rename them, they will revert back to their previous names after, if there is any transaction in some of those accounts. But yeah, we'll go into detail once we go to that chapter. You can see on categorized assets, you can make some of these accounts, you can make them inactive, like, because for some you can make inactive, like if you want to clean this up, maybe the client has specific account based on their industry. Maybe they have some accounts here that are specific to certain industry, and then you can make them inactive. Like for the open balance equity, this you cannot make it inactive. So you see, so because you can make it inactive, because this is an account that we always need. If you set up a new client into QuickBooks, you might have some opening balances, so that's the reason why we need this account. Then also we have the chart of accounts. Currently you can see there is no account numbers here. We don't have any account numbers. Even if I run the balance sheet report, you won't be able to see any account number. You see, there is no account number right now. So because we don't have account number in the chart of account, so if I wanna show the account numbers, as you can see right now, there is no column for account numbers. So then also notice that the QuickBooks, there is a QuickBooks balance and then a bank balance. So the QuickBooks balance is the records that you put into QuickBooks, the registers, whereas the bank balance is what is shown in the bank. You can see that these two balances might not be the same because of due to the timing of transactions. So maybe today you might receive a check from a customer, and then you record that in the receipt payment, okay, in the sales receipt, sorry. Then maybe it might take you few days for you to deposit that check into the bank. So that's the reason why sometimes you might see the bank might have XYZ and then the amount might be different. So how do you show the account numbers? So to enable the account numbers in the chart of accounts, go to the chart of account, then account and settings, and then advanced, then look for chart of account, and then turn this slider on and then show account numbers, and then click save. So once you're done, go back to the chart of account. So you see now we have the account numbers. So if I want to say, okay, let me add some account numbers, I will just click on the pencil icon, and then I can add maybe, so I will say check-in will be 1,000, and then savings I will be 1001, and then we have the account receivable, maybe I will just say 110, and then yeah, and so on and so forth. So once you're done, you click save. So now we've got account numbers. You can see that the account numbers also have them, you also have them before the names of the account names, before the account names. So you can also view the register. So you only have the register for all those assets, that is balance sheet items, you have the register for those, whereas for income statements, which are temporal accounts, they don't have any register because they don't even show any balance in them. You can see the balances are zero, whereas for all the balance sheet account, they have something in them. Okay, and then so once we have added the account numbers, we can go back to the reporting. Let's see how the account numbers will be displayed in the balance sheet. So now you can see the report show the account number. So yeah, that's how you modify the chart of accounts. You can also rename some of these accounts, but we are going to discuss in detail. You can rename these accounts as well. So let's say you have the option to edit any account that you want to edit. So you can either change this the account name, you can give it a different name, or you can categorize it into different category, whether be it an expense or income account. So you can do that. So mind you, you have specific account. Let's say if you say this is a savings account, it's an asset, and specifically is a bank account, so you cannot categorize it as an expense. So you see, you also have to keep that in mind. Then yeah, so this is where you do the edit, and then like I said previously, you can make an account inactive. So you can say make it inactive, and then once you make an account inactive, you won't be able to make it active again until you click on this gear icon above the action column, and then click on this include an inactive account. So once you click on that, you'll be able to make it active again. So if I want to make this active, I can just click here, and then it will become active. But previously, you won't see, if this was not checked, you won't see that account. So just remember the name here, which is the repair and maintenance. It was deleted. So this is the only way, because you cannot delete an account. but you can make it inactive, you can rename it, you can customize it, but yeah, you can delete. Even the vendor list and also the customers, you can delete them, but you can make them inactive, which is equivalent to delete. So you see it is gone. So now if I want to look at to make it active, I can't see it until I go back to the gear icon. So that's the chart of accounts. And then so for the report, so QuickBooks has 3 types of report. So for the report, you have the standard, you have the custom report. You can see right now there is no custom report, and then the management report. So the standard report, you can see we have 3 favorites. These favorites are the report that you've added as favorites. So let's say, for example, if I look at watch here, we currently have 3. So if I click on any of these, it will be taken into the top. So now we have 4 on the top. So favorite makes it easier for you to just click whenever you wanna. If it is something that you run all the time, then you might want to make it as your favorite so that you don't have to scroll down to find it. And then you have different, on the standard report, you have the business overview report, which is audit log, balance sheet, comparison, and then the profit and loss. And then who owes you. This is the account receivable. These are the ones that people that owe you money. So account receivable aging. You have the detail and the summary, so you can run some of these reports. You can run them and then you can customize them. So you see sales and customers, you have the customer contact list, to a list of all your customers, deposit detail, so you can see all the names here of the report that you can run. So we have what you owe, so you can either owe the taxing agencies, and then also you can owe the vendors. Then we go back to the expenses and vendors. You can see the expense and vendor. You can see the reports that you are able to generate here, the 1099 transaction detail reports. You can also run some of these other reports. And then for the sales tax, you have the option here to run the sales tax liability report. And then of course employee report, also you can run the employee contact list. So you have for my accountant, which is you can run the balance sheet, the GL, general ledger, the journal, and then the profit and loss, etc., etc., and then the payroll report, of course. And mind you, this tutorial does not cover payroll because payroll has its own certification. So if I want to customize a report, I can say, for example, the balance sheets. If I want to customize this balance sheets, I will just click on the dots, and then it will take me to customization. So if I want to say this year, and then I want to show all negative numbers in red, and then what else? If I want to show the preparer, so if I want to show the customer, you can check all this, the vendor. Then if I want to show the dates this report was prepared, we can show all that. So once you finish customizing, you can click on run the report. So now, as you can see, this is the report, the balance sheet. So if I want to, you can see now the negative numbers are in red. So if I want to save this customization, I can click save. So once I click save, if I want to see all the customized report now, I can just go back to the reporting tab, and then I click custom reports. So you see, this is where we have the custom, because now previously we don't have one here. So now we have a custom report. And then for the management report, So this management report, you have the company overview and then the sales performance and the expense. So for these, you have the option to preview, but if you want to like do edits to some of these report, the best practice is to copy. You can either duplicate or you can copy. So normally you can just duplicate this report and then edit the duplicated version, so that, because these templates sometimes you won't want to mess with them. So if you are a pro advisor, if you are accessing the client version, you might only have option to see two version of this report, of the report, the template, the management report, whereas the client has 3 versions. So if you go now to this report, you can see, but we are going to cover all this. Here you can see the cover, the company logo, so you have all the options that you can change here. And then so this, you have the table of content, and then you have the preliminary page where you can add your summary. And then if you scroll down, you can see that you also have the report, the profit and loss. So this is actually pulling from the reporting center. So there is, you can either add something here or you can delete, but you can change the content from here. So you see, you can change the numbers from here until you go back to the source. So you see, you have the option to add new report or delete whatever you want to delete. Okay, so once you're done, you can click save. So yeah, we're going to discuss that as well. When we go to reporting, we are going to discuss that in detail. So I thank you, and that's the end of chapter 1. Thank you so much for watching. See you in the next video. Please don't forget to subscribe and click on the notification bell so you won't miss any video. Thank you. Welcome back. So today we're going to look at chapter 2, which is the onboarding client into QuickBooks. So clients are able to set up their own QuickBooks online, but they might not possess the necessary skills and experience to do it correctly, which could lead to issues later on. That's why, as their pro advisor, it is your responsibility to set them up correctly, and the steps you need to take will depend on whether the client is already using QuickBooks Online or if the client is new to QuickBooks. If the client is new to QuickBooks Online, you will have to set them up from scratch. Some clients are already using QuickBooks Online but have switched from another bookkeeping firm to you. In such cases, you will have to review their existing QuickBooks Online setup to establish its health and understand their overall business. That's what brings us to the client onboarding template. Client onboarding template is a pre-formatted tool that guides you through the onboarding process when integrating a client into your firm. So to access the client onboarding template, you go to your QuickBooks Online Pro Advisor account. So if you are new to this channel, if you haven't seen chapter 1 of this tutorial, I advise you check out chapter 1 to know how to set up or sign up for the Pro Advisor, that is the QuickBooks Accountant program. To access the client onboarding template, we have to go to the QuickBooks Pro Advisor account. So you see, this is the QuickBooks Pro Advisor. So once you log in into the QuickBooks Pro Advisor account, you can see you have the client. This is where you set up a client, a new client. You can click add client, but yeah, we're going to discuss all this. And then you have your team. This is where you add users. Like if you have a team, you know, let's say if you have like other employees who are working for your firm, you can add user from here. We have also the Pro Advisor, which is this tab. So this Pro Advisor, you have the Pro Advisor benefit, and then you have the Pro Advisor training. On the work, this is where you access the client onboarding template. So you can see you have the client onboarding template here. Let me create a new project. Once you are there, you can click create project. So you can select from a template. So if you want to select from a template, you can select client onboarding template. So these are the best practices. So you see, it provides all the steps involved in onboarding a new client into QuickBooks. So we can call these testing version 2. Okay, so for which is it, for my firm or for a client? So I will select for my firm, because this template is just like a to-do list that will have a list of the tasks that I need to accomplish. So you can either select repeat, that is if you want to repeat this process, that is you can repeat, you can click repeat. You can add like detailed note to remind yourself. I would say this is just a test. And then for the task, you can see you have meeting with new client and sign contract. So when are you gonna meet with the client to sign the contract? That is to provide an engagement letter, because you have to issue an engagement letter to the client which explain the terms of the engagement, that is the services that you will be providing. So that way, that will prevent a misunderstanding, along the way. So you have to explain, you have to let the client sign the contract or the engagement first before you can get started on working on anything. So you gather the client detail. So you can, when you click on any of these tiles, you can either add or remove. So you see there is an option to remove this step if you don't like it. Yeah, so you can collapse. So now I've collapsed that as well. So you can change this date so to whatever date you prefer. When do you plan this to be due? You can change it to maybe so this is due today, so you can change it to another date, but for some reason it won't let me change. So it's like this is driven by this first date. So if I say the first date here is the 7th, so QuickBooks is assuming we are going to do all these processes, this step today in one day. Okay, that's what the software is kind of like suggests. So after you've gathered information, and then so to gather information or data from the client about the client, we use what is called the new client checklist, which we're also going to look into shortly. So we use that to complete the client profile and then to gather information that will help us set up the client in QuickBooks. And then we have create the new QuickBooks Online subscription. So once we've gathered data using the new client checklist, then we can create the QuickBooks Online subscription. And then we also can set up client company information, and then we import list. That is if the client has an existing list of customers. If the client is new to QuickBooks, but they may have been doing business and they may have been using other sort of like bookkeeping tool, maybe Excel or any other tool, or maybe QuickBooks Desktop, the desktop version. So in that case, we might want to import a list of customers or a list of product, list of vendors, so that it will save us from typing a lot of information. Payroll setup, that is if the client has like a QuickBooks payroll, so we need to set them up as well. Mind you, payroll is covered in a separate program. We don't cover it for this QuickBooks Online tutorial, because the QuickBooks Online has different certification. You have the payroll certification, then you have the QuickBooks Online, which is like the intermediate, and then you have the advanced, which is also a different certification. So you can customize the sales template as well, connect app. There are apps that integrate well with QuickBooks Online, so you can connect some of those apps based on the client's needs. So then we also have connect QuickBooks payment. So there is also option to connect the QuickBooks payment, because QuickBooks has like a payment option, which is a default payment option, wherein you are able to request payment from credit cards and other method of payment, like bank transfer, so you can receive payments from customer based on. And then we also have train your new clients, then connect bank feeds, so you can also connect the bank. So you go to the banking center where we have a whole entire videos. We have an entire video dedicated to just banking, so how to connect and troubleshoot the bank feed, troubleshoot connection, then set up repeating project. So we can do that as well. So once you're done, you click save, and then so once you save, you can see the tasks here. These are the tasks that you've saved. So yeah, so if you can put it as a to do or in progress, or cancel. So you can change the status. Whatever task, you can change the status, whether it is in progress, or this is a good tool for you to organize yourself in such a way you won't miss anything, you won't miss any step along the way. So yeah, that was the client onboarding template. So when onboarding client, so now we are going to look at onboarding a client. Okay, so onboarding clients who are new to QuickBooks Online. So if you have a client that is new to QuickBooks Online, meet the client and gather information. So just like I mentioned, once the client has signed the contract and agree on payment agreement, you can provide a detailed onboarding plan and introduce the client to the team. So let's say you have a team of individuals, maybe 5 employees. You have to introduce the new client to the team, and then you can use the new client checklist, which I've added the link to the description below, so you can access the new client checklist through the link that I've added to the description. So that's the tool that will help you to gather information. Okay, that is a good tool to help you with onboarding clients. So let me just show you how that tool looks like. So you can access the checklist by going to this website. So if you click on the link that I've added to the description, it should take you to this client checklist. So once you download it, so sometimes it take a while to open. So yeah, this is the new client checklist. So this is the checklist. On the client checklist, you have the profile. This is where you fill all the client profile information. So you can see there is a company name, the legal name, and then the industry. So yeah, you can read through all these details. So this is the tab for the client profile, and then the need assessment. This is where you assess the client's need. You want to know which subscription is best for the client. So first you have to know, because some of the subscription, not all features are available in all the subscription. So you have some subscription levels are available in the QuickBooks Plus, and then some you have them in the advanced, and then some in terms of the users, like for example the QuickBooks Plus has 5 users maximum, and then the Essential has like 3 users, and then for the Simple Start has only one user, and then the Self-Employed has only one. So the Simple Start is mostly suitable for self-employed individuals who doesn't track inventory. So that's the kind of subscription. But yeah, we will go into detail on all those requirements. So you can see here is the features. So once you've answered to the questions here, then if you go to the next tab, you should see your responses will also carry over to these other tabs. You can see my response is yes to estimate. So meaning you can use estimate. Is available in both the QuickBooks Simple Start, but there is no option for self-employed. There is no accounting estimate. I mean, they cannot make any estimate. Like for example, the customer might ask, how much is the cost of XYZ? If I need like a design of my roof, how much is the cost? So with that, you have to prepare an estimate and send it to the client. So based on that estimate, you will be able to generate a purchase order to buy the items that you need to prepare, to do the client's work. So some of the subscription, the estimate is not available, like for the self-employed, whereas for the Simple Start, you can access the estimate here. There is Simple Start, anyone with the X, it means it has the estimate. So if it is not, if it is blank, it means it doesn't have any. So that's how you read. So once you've added the responses, then you can also determine if the client is going to track mileage. You can also add that as well. So if the client is going to track mileage, you need the vehicle to set them up. You need the vehicle make and model, and then the year, and then the ownership status, and then you also need to add the purchase date, the cost of the vehicle, and then also the date when the vehicle was placed in service. Then we want to know like the odometer, that is the mileage, that is the total number of mileage that the vehicle already has. So you need to know all of that. And then so you also have this other tab, which is further questions. These are just additional questions. Then you have the QuickBooks Self-Employed. If the client is a QuickBooks Self-Employed, you have to ask these additional questions as well. So for you to be able to recommend the best QuickBooks Online solution, so you can use the QuickBooks Online. You can use this new client checklist to determine which of the solution is best for the client. So once you've added all the responses, so once you've completed you've got the client's profile, so you can go back to so now our next step is to sign up the client. Okay, so we can sign up the client. Okay, so we need to sign up the client now. So we say, so we need to sign up the client to QuickBooks Online. So once you've identified the appropriate QuickBooks Online solution, you can sign them up. To do this, navigate to the client. So in order for you to sign up, we can navigate to the client, and then you can either select a business. Who is your client? Is the client a business? We can say business name, say, let's say, so let's say, so the email, let's say we wanted to we can add the email and then the phone number. You can add the phone number. If you need to add more info, you can select this. So you can add the client's first name, let's say John, and then so for the phone number, okay, let's say the website we have. So yeah, this is the additional information. So then you can customize the client's homepage and the sales template by adding the client's logo. So once you've selected the right subscription level, because I don't have, I mean, we're not going to use any clients here right now because I don't want to subscribe. Mind you, you also have like, so if someone subscribe, like let's say if you add a client and then to QuickBooks, you add them as your client, and then they can get, if you set them as your Pro Advisor discount, they can get a 30% off. Let's say if this is 140, 30% off will be the discount, so they can get a 30% discount from that. Okay, so this is the actual price. Let's say the 200 is the price, but if they have the 30% off, this is what they will be paying, the 140. But if like for example, if they select to get the direct discount, they can get still the 30% off on the advanced subscription, and on the plus they can also get 30% off for the first 12 months. So after that 12 month, then it will go back to the 200 for the advanced, and then it will go to the 90 for the plus, and then for the essential it will go to the 60. So this is something that I'll cover in detail. So we can customize the client and then add the logo, and then we can also add QuickBooks time and payroll. As you can see, you have the option here to add the QuickBooks. Select the QuickBooks payroll, whether the elite or the premium or the core. So you can, once you're done, and then you can click save. So for now we're not doing because we are not adding any client, so we can just close out of this. Yeah, so mind you, we are using the Pro Advisor account. See, the views are different. You can see your book, and then you have the overview, the dashboard, etc, etc, and then also you have the client, whereas the QuickBook Plus version, it doesn't have that. You see, this is the QuickBook Plus version, which is the client file. So here you don't see any option for clients or Pro Advisor training, but you do have the option to switch between the accountant view and also the business view. So we are in the accountant view of the QuickBooks Plus subscription. So this is a great way to test drive. Like let's say you want to set up a client, but the client might want to look at the functionality of QuickBooks. You can let them do a free trial on this, like a quick test drive to see how QuickBooks works. So yeah, let's go back to the training. So you can either add payroll, and then from there you can configure and customize the product. Since no two clients are the same, you will need to customize each client product by adding custom payroll setup and sales forms template. Also review their current vendor or customer list to determine if you can utilize existing data for import into QuickBooks Online. So you see, once you've added the client, you can customize their template. Okay, so you see here you can customize how the templates appear. Okay, so you see like the invoices, you can change the templates, the content. So let's say if I want to change the template here, you can change it. So then you can add a logo here to make it to personalize this company file, so that when they send an invoice, their customers will see that this is coming from XYZ company. So yeah, that's why you need to customize their template. If you have not, you can watch chapter 1 of my video. I've covered some of this, but it's something that we'll also look into once we progress with the recording. Then you can also provide training and mentoring, right? So once you have completed, once you've configured, so let's look at what we need to do first. So you need to configure, and then so this is the first one. We need to configure the client. We need to configure the client's company, and then 2, we need to provide. So we need to provide training and mentoring. That is, we need to help the client with training. If the client has like accounting employees who will be, or let's say if the client needs some help with training, how this works, we need to be able to provide that kind of training, you know. And then so for clients that are using other bookkeeping tools, for clients using such as Excel or QuickBooks Desktop, we need to import or migrate the data into QuickBooks Online. So then also we talk about like gaining new clients already using QuickBooks. So if you are gaining new clients who are already using QuickBooks Online, in that case, if the client is already using QuickBooks Online, they will just need to invite you as their accountant. So how will the client invite you? So let's go to the client version. So this one, which is the test drive, the one that I told you about. So if the client go to accountant, my accountant, this is where the client will invite you. Let's say your email is fcamaracpa, right? Let's say your email is info at, so the client will click invite, and then you will receive an email. So once the client invites you, you will receive that email, and then you will accept the invitation. Then you will have access to their QuickBooks. So that's how the client will invite you to their book. So click done. So yeah, and then use the client overview screen to get a snapshot of the client book. This screen can be found in the accountant view. So to access the client overview screen, you click client, and then you go to overview. So this is where you see the client. You can see the number of connected apps. So you can see all the list of clients that you are currently, whose books you are currently able to access. So you can see a list of clients that you have access to their book when you click client. So this is the Pro Advisor version of QuickBooks. So you have access to look at the client. So you can see if here, this is where you add client, and then once you add them, they will be in your client list. So this will be your list. So here you can select the client also. Once you've added them, you can jump into them. You can see this is the toolkit that you cannot find in the other subscription, like the QuickBooks Plus, the Essential, the Advanced. You won't find this accountant toolkit. This is only available to the Pro Advisor. So here you can jump to a chart of account, journal entries, reconcile, report voided or deleted transactions, which is also the audit log. So then close book. Then you can open a new window. Let's say you want to open a new window, you can do that as well. So from this, and then Pro Connect Tax Online. So that Pro Connect is a tax software, a QuickBooks software. The Pro Connect is a tax software which is used by Intuit. Then you can reclassify transactions with some limitations, and then report options, write off invoices, prep for taxes. So this is where you can do that as well. So then you have the client overview, and then you have the bookkeeping. So once you get your clients into QuickBooks, you can access their payroll and then bookkeeping and then the client overview. But the reason why right now you won't see information, because there are a lot of summary that I'll be discussing in detail when we get to that chapter. So all these tabs will be explaining what kind of information you will be able to get from there. And then the company setup. So just like I said previously, so now we have company setup. So we have the company setup, and then also we can look at the banking activities. So the company setup provides information about the complexity of the client's QuickBooks Online. So like I said, you can see the number of apps. So let's take an overview of, so the client overview. Let's look at the Pro Advisor overview. Let's say my book, but this is the training file. This is not my Pro Advisor account, because that's why you don't see anything here. But so this is the training file. So you can see when you open this, you have the option to connect a bank, right? You can see here the company setup. So on the company setup, you can see that we have 0. So if the client has like a bunch of apps connected to their QuickBooks Online, you can see here they will show the number of apps. And then for the subscription here, you can see advanced, right? So we have access to the advanced. As a Pro Advisor, we have access to the advanced. And then we also have the payroll, which is the payroll early. And then we also have the sales tax, which is not yet enabled. Okay, so yes, so you have that option. And then so for the banking activity section, displays the cash on hand and then the checking. So if we go to, let me use the client version. So if I go to banking, we can see that we have you can see on the banking aspect, you can see the connected accounts here, right? You can see the account that are linked to the bank, that are linked to QuickBooks Online. So you can see there is a checking and there is also a savings account. Okay, so but the one that we're talking about, like when you bring a client into QuickBooks, the one that I'm talking about, you can see, like for example, under this section of this, okay, when you bring this client into QuickBooks, you can access their books just like I'm doing now. This is my own book. So this is the Pro Advisor account books. You can see here they say your book. So you have the overview. So if it is the client's book, you can see the banking activity. So under the banking activity, you can see the bank balance, which is derived from the banking center, shows the last reported balance, the in QuickBooks balance as well. Just like I discussed in chapter 1, the chart of account, it shows you the in QuickBooks balance and also the balance as per bank. So, and which could include feature date transactions. So that's why most of the time you will see that the balance per book does not agree with the balance as per the bank because of timing. So because you might have transactions which are not reconciled yet, so you have some reconciled and unreconciled transactions through. So because of that, the numbers will not be the same. That's why you perform on a monthly basis. You do your bank reconciliation, and then for unreconciled, and reconcile through columns provide detail about the account reconciliation status. So if you look at the column for once you click on the banking activity, it's just that this is not connected. So if this was connected, you can see the reconcile and unreconciled columns. Also, that will show you information about the client's reconciliation. When was the last time they did reconciliation of their book? So reconciled totals indicate the number of unreconciled transactions and the date when the books were last reconciled. So that's we also have common issues. So we have common issues relating to QuickBooks. So whenever we deal with QuickBooks, so we have some common issues. Some clients are not accountants, so sometimes they don't know the double entry aspect of QuickBooks. Like as accountants, we already know for how to categorize some of the assets, the transactions in QuickBooks. So because the client might not know how to classify some account, you might have some issues because of that. If they classify the wrong account, the transaction to the wrong account, so that might lead to issues. So common issues, once you bring in the clients, there is a tab called the common issues. So in that common issue tab, it's just that, like I said, I don't have a client right now in this, but you will have a tab called common issues. So that common issue tab, like this one, that like you can see, you have what is called undeposited funds. So once you bring in a client, you can see common issues like undeposited funds. What are undeposited funds? Undeposited funds, these are funds that when we receive these funds, we have not yet taken them to the bank. We have them on us, but we still have not had the chance to deposit them into the bank. So that's the reason why we call them undeposited. And then we also have uncategorized assets. That is, we have assets that we buy, but we have not categorized them to the correct account. So this one, QuickBooks will move them into uncategorized. And then uncategorized income, also we have income that we have earned, but maybe we have not categorized it to the right income account in the profit and loss account. So then we also have expenses, also the same. Then on the aging side, the AR aging, which tells you the number of days the receivable has been outstanding. So the AR aging will tell you if there is a risk of bad debt. That is, there is a risk that the customers might not be paying their debt. Let's say if the AR, it all depends also on the company cycle, but the moment you started seeing some AR balance is greater than 90 days, that might be a signal of bad debt. But it also depends on the company cycle. That is how what is their practice in their industry that the company operate, because some industry might have AR that are outstanding for longer period, but that is not a bad debt. So, and maybe the risk of bad debt is really small. Then also AP aging. When you look at the AP aging, you can see that there is a possibility. If you see the AP aging will help you. So we have a report that will be discussing as well in a different chapter about the report that we can generate to get this AP aging and the AR aging. So the AP aging will tell us the payments that are coming due. Okay, so that will tell us that. Then we have the opening equity balance. Also, this will most of the time will have like a zero balance. And then negative assets and liability. How do you get like a negative asset? Sometimes, let's say we have an AR, account receivable, which is a debit, which is a positive balance, and then the AR, the customer decide to pay something maybe in advance, so that is a liability. Like if there is a credit in the customer balance, it becomes a liability. In that case, we need to classify it as a liability instead of an asset. Also, sometimes the materiality of that account might determine whether we can leave it as is or maybe we need to reclassify that. But all AP accounts payable should have credit balances. So if we have like a debit balance in the account payable, meaning we need to reclassify that. That will only happen when we have like maybe the vendor gives us a credit. Like if we buy something, maybe it was going to be like 24,000, then maybe we pay the 24,000, but because of we return some of the items, and then they decide to refund us, I mean, like, or give us a credit for that difference. Maybe we pay 24 and then the vendor, we only receive 20,000 worth of goods, and then the vendor gives us a credit for the remaining items. So that's will lead a debit balance. So because they were our vendors, they have a credit balance. So now that they owe us, they become our debtor. So that's the reason why it will have a debit balance. So in that case, we need to reclassify that account if it is a long-term something. If it is maybe just few days, it doesn't matter, but we can reclassify it if it is going to be there maybe for more than a month, and then maybe we have to close the book before that. So that's the reason. So, and then we can see adding deposits without designating an income account can result in uncategorized income account. So just like so, then it's the same thing for expense as well. So when we add expenses from the banking center, so because if we say we connect our account to QuickBooks Online, so the banking center, we can connect accounts here. So if we connect our account, then it will pull data from the banking center. Some banks will provide data for up to 90 days of transactions, so we'll be able to access up to 90 days of our banking transactions. So if it pull that data, okay, so that might lead to uncategorized expense. So because if we provide, except where we put like rules, because we also have a whole chapter on rules, how to set rules. So we can set rules here in the banking center that will put automatically credit or debit account that we've identified or we've selected in our rules. So we can instruct the QuickBooks Online that based on specific criteria, for every transaction that meets this specific rule, then do XYZ. So we have a whole chapter dedicated to that. So then we also have the tag. So the equity opening balance. So the opening balance equity account should always be 0. So just like I said earlier, this account should always be 0. So the opening equity account balance should always be 0. If you see a balance in this account, it's most likely because an amount was entered in the opening balance field during the creation of a new vendor, customer, or maybe a balance sheet account or inventory. So if we see a balance in this account, is because we've created a new customer or vendor or inventory item. Then in terms of the negative assets and liabilities, so these have the contrary account. Then also the transaction volume. The transaction volume, it talks about this section group the number of transactions for the last 30 days. The date range can be changed to view transaction for period longer than 30 days. So that's the end of chapter 2. Thank you for watching. Please don't forget to like, subscribe, and turn on the notification bell so you won't miss any video. See you in the next video. Thank you. Welcome everyone to QuickBooks Online Tutorials. My name is Fuller Kamara and I am the founder of F Kamara CPA. I am a CPA and a QuickBooks Online Pro advisor. This series is your one-stop shop for mastering QuickBooks Online, a powerful tool that will simplify and streamline your business financial management. Whether you are a beginner or an experienced business owner, we have got something for everyone. From setting your account to tracking income and expenses to creating detailed financial report, we have got it all covered. Our videos are packed with practical tips and step-by-step instructions. Don't forget to subscribe and hit that notification bell so you will never miss a video. Without further ado, let's get started. Welcome back. Our topic for today is identifying the right QuickBooks Online subscription for a client. So we have different types of subscription in QuickBooks. So we have the self-employed. This option is designed specifically for independent contractors who file Schedule C of the 1040 tax form. It supports a maximum of 1 user. And then we have the Simple Start. This option is designed for sole proprietors, LLC partnerships, and other small businesses with basic needs. It supports a maximum of 1 user as well. And then we have the Essential. So this option includes all features of Simple Start, but with additional functionalities for businesses with more complex needs. However, it is not suitable for clients with needs to track inventory, create purchase orders, or manage budget. It supports a maximum of 3 users. And then we have the Plus. This option is designed for small businesses that employ staff, manage inventory, track multiple jobs, and need budgeting capabilities. It supports a maximum of 5 users. And then finally, we have the Advanced. This option is for growing businesses that are approaching mid-market size. It supports a maximum of 25 users. Now we know the various types of subscription that are available. So now gathering requirements. When gathering information about the client, you need to use the new client checklist, the one that we went over yesterday. If you are new to this channel and you want to know, you want to see the walkthrough of the client checklist, please refer to chapter 2. I have a whole playlist that you can take a look at. So in the client checklist, you need to know the 3 W's and the 1 H. That is understanding who the client is, what they need, when they need it, and how they want it done. So the who is talking about to know your client and their goals and understand their background. The what is talking about understand the structure of the client's business. The when talks about determining how often the client run reports and be aware of their internal and external deadlines. Then also the last one, which is the H, consider how you can help the client by planning the deliverables, whether be it the 15 days, the 30th day, and the 60 and the 90th day mark. So like I said, please refer to chapter 2 for a walkthrough of the client checklist. I've explained the client checklist in chapter 2, so that will help you understand the information that you will need to obtain from the client and the relevant questions that you need to answer in order to assess the client's needs. Because it has, like the chapter 2, the client checklist has the client profile tab, and then which is the company profile, and then we also have what is called the need assessment, where the functionality that the client may need and helps you better understand their business. And then we also have the QuickBooks Online features and solution tabs, which is there. This tab helps you and your clients to identify the best solution that you can select from these various subscription level. So that tab is there to help you decide which solution works best for the client. And then the mileage tab, this is used to collect profile information about the client's vehicle. So like I said, I've already gone through this in chapter 2. So we have like questions that you can ask the client for the respective areas. We have like the sales and receivable. So for the sales and account receivable, we want to ask if they need invoices for their product, and then we also want to ask if they are going to make any estimates for projects, and then we also want to know if they will be collecting any sales tax, and then if they have different prices for different customers, wherein they are setting like price rules. So we want to know that. And then for the expense and the account payable, expense and account payable, we want to know if the client offer products for which they need to buy components. And then we want to know if the client have any loan in order for them to set up the company. That is, if they obtain funding from third party on a credit basis. That is, if they took a loan to set up the company. Then if they say yes, then we want to know if they are going to be making any repayment of that loan. Then we also look at the bills. If their bills need any approval, maybe they might have a first person approval, or maybe they might have like a second person approval. So we want to know if there is any approval level by someone else before they can pay their bills. Then also we want to see if they have like multiple currencies, if they trade in multiple currencies, because we also have to configure that in QuickBooks Online. And then for the payroll and the employee and payroll. So for the employee and payroll, we want to know if the business is run solely by the owner, or are there any employees. Even though yes, like for LLC and the sole proprietor, because most of the time they do have employees as well. So for employees and payroll, is the business run solely by the owner, or are there employees? So we want to know if there are employees. How many employees does the client have? We want to know the number of employees. Do they offer a retirement plan like 401k or any other employee benefit like health insurance? We want to know that. That is if we're setting up the payroll. And then we want to know how they track the time. That is, how do they track? Are they paying their employees on an hourly basis? If they are paying by hourly, how do they track time? And then we also want to know other expense tracking. So for other expense tracking, we want to, this is where we capture other expenses. Then the company might track mileage and income tax in that tab. Then we also want to know like the other daily needs. So for the other daily needs, this is where you track any inventory tracking requirement the client may have. So you also have to be aware that QuickBooks Online uses the FIFO method. That is the first in, first out. And then we also want to know like industry specific requirement. So for the industry specific requirements, we may need to anticipate any pinpoint or industry specific needs. Like for example, we want to know like the client industry to understand what are the specific requirements in that industry that they operate. And then if we also want to know if there is going to be any need for specialized application. You may need to use the specialized application tab to identify any additional apps that fully cater to their needs. And then we also want to know like their reporting needs. So their reporting need, we want to know which report that best work for them, like what kind of report, and how often do they run those reports. Like we want to know if maybe they might need just the balance sheet every month, or the P&L, or maybe both. Like they might need the balance sheet and the P&L, that is the profit and loss. And then they may also need like the AR aging report. So we want to know all that kind of requirement. And then also we want to know about other requirements. So do they have any other solutions they would like to convert to QuickBooks? Like if they had like a QuickBooks desktop, do they have any QuickBooks desktop that they would like to convert to QuickBooks Online? And then we also want to know the total. We want to know the total number of transactions per month. You can use this section to assess the transactional volume and the scope of the client's business. If the client has large volume of data they may need. So if the client has a large volume of data, meaning they may need the QuickBooks Online Advanced. So that's the end of chapter 3. Please don't forget to like, subscribe, and turn on the notification bell so you won't miss any video. See you in the next video. Thank you. Hello friends, welcome to the channel. My name is Fuller Kamara. Our topic for today is billing options. When you add a client via QuickBooks Online Accountant, you can either sign them up for QuickBooks Online at the time of setup, or you can sign them up later. You can choose one of the billing options. That is, you can either select the Pro Advisor discount, you can select direct discount, or you can choose the revenue share. You can also choose whether to add the QuickBooks Online payroll. Please note that you can sign them up for QuickBooks Time at this stage. However, QuickBooks Time is included in the premium and the elite subscription of the QuickBooks Online payroll. So the Pro Advisor discount, I know we've gone through some of these during our chapter 1 walkthrough. The Pro Advisor discount, this is selected when the accountant is paying the client subscription fees and bills the client for both the subscription and bookkeeping services fee. Client will enjoy a 30% discount for the duration of the subscription and has the option to cancel at any time. Whereas for the direct discount, this option is selected if the client wants to pay their subscription fees to Intuit themselves. The client will first receive a 30-day free trial and get a 30% discount for 12 months from the enrollment date. For the revenue share, by enrolling into the revenue share program, you will receive 30% discount of the bill price they pay each month for 12 months, and 15% of any employee fees. And then also the client will receive 1 month free trial and a 50% discount for the next 3 months. With the revenue share program, the clients are billed directly. So in this case, so now let's go to QuickBooks Online and see what we're talking about. So when we go to QuickBooks Online to set the client, if we want to set up the client, we go to Client. So once we're there, we can select Add Client, and then we can say the company, the business name, and then the email address, and then we put in the phone number. So we can add the business name, the email address, and then we put in the phone number. And once we're done, we can select the subscription. And then for the billing option, if we are billing the client, we can select the Pro Advisor discount. And then if the client is paying directly to into it, then we can select the direct discount, which is 30%. And then after 12 months, the price will return back to the original price. So you can see that for the advance, we have 140, right? So the original price is this, which is the 200. Whereas if you get the 30% discount, this is what they will be paying. And then we have that is for the advance. But if the person select the plus, then the original price was 90, and then if they are going to get the discount, which is going to be 12-month discount, they will be paying this amount. So you can see that then for the essential, the original price is 60, and then if they paid if they get a 30% off, then this is what they will be paying. So once you are done, and then you can select save, or you can also add the payroll, which is whether you can either select the premium or the core. So that's the end of chapter 4. Thank you. Don't forget to subscribe to my channel and turn on the notification bell so you won't miss any future videos. See you in the next video. Welcome to the channel. Today we're in chapter 5, which is adding QuickBooks Time and QuickBooks Online Payroll. The benefits of QuickBooks Time and QuickBooks Payroll. Clients could benefit from time tracking and or payroll solution. For QuickBooks Time provides clients with the capacity to record, manage, analyze time. Using QuickBooks Time can offer commercial, operational, and management benefit. For the commercial benefit, it leads to accurate timekeeping and billing. The application and its data also provide insight into the true headcount cost of a project, leading to improved job costing and profitability. Customers can be assured that any headcount related costs are fair. And then for the operational benefit, accessibility and location tracking. Being a cloud-based timesheet, QuickBooks Time can be accessed anywhere. GPS tracking can help management know who is clocking in and out and from which location. It also provides geofencing. This feature automates location-based reminders for employees to clock in or out. And then another benefit is management benefit. Integration with payroll. The timesheet integrates seamlessly with payroll, thereby eliminating the hassle of manually collecting, verifying, and submitting timesheets. This simplifies the process of running payroll and invoicing, making it a breeze. Some of the benefits of QuickBooks Online Payroll include a full-service payroll solution suitable for all business sizes, eliminates the need to post or manually sync payroll activities as it fully integrates with QuickBooks Online. A convenient and easy to use interface. It provides businesses with access to payroll reports, offering the insight necessary for making informed decisions. QuickBooks Online Payroll can function as a standalone, but it becomes more powerful when integrated with QuickBooks Online. The QuickBooks Time subscription includes QuickBooks Time Premium and the QuickBooks Time Elite. The QuickBooks Time Premium, this version includes all the functionalities to plan, record, manage, and approve employee hours and contractor. The QuickBooks Time Elite, this subscription includes all the benefits of the QuickBooks Time Premium plus additional features such as mileage tracking, geofencing, timesheet signatures, enhanced reporting, and project estimates versus actual analysis. Both QuickBooks Time and QuickBooks Online Payroll have standalone and integrated versions. The QuickBooks Online Payroll subscription includes the QuickBooks Online Payroll Core and the QuickBooks Online Payroll Premium, and also the QuickBooks Online Payroll Elite. The QuickBooks Online Payroll Core, this offers all the features your client needs to automate tax payment, including unlimited pay runs, auto payroll, garnishment and deduction management, expert product support, 401k plans, health benefit, 1099 e-filing and pay, next day direct deposit, new hire reporting, and a self-service employee portal. The QuickBooks Online Payroll Premium, this includes all the features of the core plus same-day direct deposit, QuickBooks Time Premium expert review of payroll setup, and then HR support center and workers' compensation administration. The QuickBooks Online Payroll Elite, this package includes all the features of the other subscription plus 24/7 expert product support and a personal HR advisor. QuickBooks Time Elite, multi-state filing with no additional fee, tax penalty protection, and expert setup. Adding QuickBooks Time and QuickBooks Payroll. You can add the QuickBooks Online Payroll and QuickBooks Time either as or after you've set up the QuickBooks Online company. So what I was saying is you can just go to client, and then so if you are adding a new client to QuickBooks Online Payroll, when adding a new client, you can just select, go to client when you are in your Pro Advisor account, and then select add client. So once you're there, you can, so we've covered all these steps. So now it's just adding the payroll. You can click and then select any of the payroll of your choice, whether the Elite, the Premium, and then you have the Core. So you have the option to add any of these, and then once you're done, you click save. However, adding QuickBooks Payroll to an existing QuickBooks Online subscription, so if we're adding a QuickBooks Online Payroll to a client who already has a QuickBooks Online subscription, we can go to the gear icon and then select the subscription and billing. And then once we're there, we can click client bill subscription, and then we can select, if we already had the clients in our QuickBooks Online account, Pro Advisor connected, navigate to the QuickBooks Online accountant, go to the subscription and billing, and then from the gear icon, select client bill subscription, and then add payroll from the client action drop down. But since we don't have the client, we haven't added the client, so that's the reason why we could only see add a new client. And then clients can add Books Payroll and QuickBooks Time themselves by navigating to account and settings, and then select billing and subscription. They can then select learn more for the product they want to add. Clients can download and install QuickBooks Time app by selecting the apps and then find apps. So they can select apps and then select this find apps, or they can go to apps.com, to this website. They can also find the QuickBooks Time by going to www.app. You can find the apps also by going to this website, this web address, and then search for QuickBooks Time and then select get app. Yeah, so those are the options. They have the option to choose either a QuickBooks Time Premium or Elite, so they can search for the apps, so you can see, once they search, they can see the QuickBooks Time, you can see the reviews and then the pricing options, you can see all the price, and then to add it, they can just select get app. So, and then they will be taken to the setup screen. To add the QuickBook time for a client, you can just go to the App Center, find the QuickBook time, and then select get app now, and then select the correct client from the drop down. So once you click on this setup, get app now, pop-up will open, and then you will select the right client from the drop down. Clients who sign up for QuickBooks Online Payroll Premium and Elite will automatically get the QuickBook time included with their QuickBooks Online Payroll subscription. They simply need to activate the product from QuickBooks Online. That's the end of chapter 5. Thank you for watching. Please don't forget to subscribe and like and share this video. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fula Kamara. Today we are in chapter 8, which is managing the products and services list. As clients add new products and services or discontinue them, they need to keep their product list updated. Here is a list of available product types. The first one is inventory. The inventory is only available in QuickBooks Plus and Advanced. So the QuickBooks Essential Simple Start does not have inventory. These are items that are bought and sold with quantities on hand being tracked. An example of an inventory item is smartphone. So smartphone in an electronic store which is ready for sale, that is an example of an inventory. Whereas we also have non-inventory. So non-inventory, these are items that are bought and sold, but their quantity on hand are not tracked. These might be used in the installation and delivery of product. Example, the paper supplies the company use for printing is an example of non-inventory items. And then we also have services. These are provided to the client's customers. So an example of services like audit service, bookkeeping services. So whatever services that we provide to the customer or the clients provide to the customers, these are services. And then we have bundle. This is a collection of products that are sold together. Example of a bundle is a gaming console. Gaming console is an example of a bundle. So we have, like, for example, the PlayStation, Xbox, and then normally they might include other items like additional controller or few months of online service subscription. So this is an example of a bundle product. You sell these together. The products and services can be found in the product and service center. So let's go and look at the product and services. So here, when you go to sales and then product and services, so this is where you find the product and services. So now the first thing is creating and using product categories. This allows you to group items of the same type. Categories help you easily find product or service and are very useful when running sales and inventory report. So product categories help us when running sales and inventory report. So in order for us to create a products and services category, we select more and then manage categories. So once we select more and then we select manage categories, and then we can select new category. So once we select new category, we can give it a name. So once we're done, we click save. So now we've got our new product category. And then to add a subcategory, we can still select more. To add a subcategory, we select manage category, new category, and then we check the box, say this is a subcategory. So if we say under bookkeeping, we can say books cleanup or reconciliation, and then we check this box as a subcategory. So where do we put this? Under which main category? So we say bookkeeping. Okay, so meaning this reconciliation will be in the bookkeeping category. So the subcategory is reconciliation, but the main category is the bookkeeping. We click save. Okay, so now we can see bookkeeping, which is the main category, And then we have below it, we have what? The reconciliation, which is a subcategory. So you can see the indentation here shows the main category and then the subcategory. And then to assign a product or service item to a category, let's say we've already had the item, right? But we want to assign it to a category. So we can go to the product and services category. Let's say we have a product, let's say rock, right? We want to assign it to a different category. We can just select edit. So under category, you can see currently it is under the design category. So once we select edit from the action column, and then we can select the appropriate category here. So let's say rocks, we can now change it to whatever category we want. We can put it under landscaping, and then so this pop-up is saying this item might have special tax considerations. Select to confirm. So we can select to confirm, and then we can say whether this item is taxable or non-taxable. So we can either say it is non-taxable, or if it is taxable, we can select how the type of tax category we can put it in. So we can save non-taxable. So we'll discuss the sales tax. We'll discuss this in detail when we go to sales tax. So for now, let's just say it's non-taxable, and then click save and close. So that's how you reassign a product or service item to a category. And then you can also create a product category when adding a new product or service, whether be it inventory, non-inventory service, but not a bundle. We can add product or service to a category when adding the product or service that are not a bundle. Let's say, for example, we want to add a new service, right? We can either add inventory, non-inventory services, but we cannot assign a product or a service. We cannot create a product or service category when adding a new product relating to a bundle. So we can only do it for either inventory, non-inventory, or service. So let's add a service. Let's say our service is tax preparation. So that's the service, no SKU. So we are going to discuss I sell this product category section later. So now we can assign this to a category. Let's say the category we want to assign to this is not available, so we can create a new category. We can call these as tax. So we click save. So now we've added the tax service category, and then we click save. So once we click save, then we've assigned this to a category. So now let's look out for the tax preparation. See, tax preparation is now under the tax services, you see. And then we have pest control, refund and allowance is under the pest control category. So that's how you add a product to a category when creating or adding a new product that are not a bundle. But if it was a bundle, we cannot do that. Let's say, for example, if we say new, then we say bundle. You see, bundle, you don't have the option to add a product or a service category. There is no option for us to do that. So that's what I was explaining. And then setting up products and services to sell or purchase. In the product or service information panel, the client has the option to tell QuickBooks whether they sell this product or service to customers or purchase this product or service from a vendor available in QuickBooks Plus and Advanced. So we have the option to tell whether we are selling this product or service to a customer. You see this check mark. This is where we indicate whether we sell this product or service to a customer, or I purchase this product or service from a vendor. So we have that option. See, so selling the product or service, we have to fill out the following: the name. We can give it the name. Let's say tax resolution. Under which category? Let's say tax preparation, tax services. So if we check, say I sell this product or service to a customer, then meaning this will pop up whenever we create an invoice. So we can enter the description of the item, then the chart of account. This is under service, so we can put it in the service account. So we can put the rate. How much are we charging for this service? We can either say 1,000, This is just an example. So then any sales tax related to this. So let's say if we want to assign this to a sales tax category, we want to assign a sales tax to this, we can select any of these. So you can see these are the suggestions, whether licensed or professional, like attorney or accountant, without tangible personal property or data security. So we can select this. This is just for example. So once we select, we can check this purchase, because this is only available in QuickBooks Plus and Advanced. If we choose this option, we will need to fill out additional information. Like if I say I purchase this, you can see we need to add the description on the purchase form, that is for purchase order, what the information that will appear in the purchase order, and then the cost, how much the cost of this, if it is an item that we buy from vendors, but not in this case. So that's why we don't check this part. So yeah, once we're done, then we can click save. Yep. So, and then once we click save, now we can see tax resolution is now under our tax services. So you see the check mark shows this is taxable. So if we want to edit this, we can select edit and then make changes. And then once we're done, we click save. So that's how you add a product or service and also edit a product or a service. So you see there is an option to import. We've gone through this in our previous lecture. So we can run report from here. Let's say if we want to run report. So this is a report of the product or service list. Okay, so this is how you run the report. We can customize, save customization, or we can go back to report list. See, now it took us to the reporting directly. So let's go back to the product and service. So product and service setting, QBO allows client to customize certain product and service features. To customize the columns and sales form, we go to the gear icon and then account and setting, and then select the sales from the left navigation, and then scroll to the products and services, and then here we can customize, we can make changes here. Okay, what we can select what information we want to show in the forms. So if we say track quantity or price rate, this will track the inventory for us, the inventory price. Okay, and then it will track the quantity, add quantity and rate field. So you remember when I was filling out the product and service, there is an option to add this rate. So we can select what information we want to add here. So you see we have price rules. This is in beta. So this price rule, we have a whole topic on a whole chapter on this one. You can set up the price rule, you can turn it on. This price rule applies whenever we have special prices for specific product, or maybe we have like a promotional discount for specific product or customers at a specific month. Let's say the month of December, we offer a promotion. Maybe we say 5% off for all tax preparation. This is just an example. So we can set the price rules here. We can use the price rule. We can turn this on. If we turn this slider on, meaning the price rule will apply. We will cover this when we go to price. But yeah, this is very useful when you have like price rule. You set certain rules for specific customers, or you set certain rules for a specific month of the year. You say, okay, this month from January 1st to January 31st, the price for tax preparation will be 10% off. If you set that rule, then after that month, after the end of January, then the price will return to its normal price. So yeah, that's what the price rule is talking about. So here you can toggle this slider on and off. So yeah, that's the end of chapter 8. Thank you for watching. Don't forget to subscribe, turn on the notification bell, and then share and comment. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 9, managing customers and vendors. The client can add, edit, and remove customers or vendor information. QuickBooks has both customer and vendor centers where they can add new customers or vendors and mark existing ones as inactive. To open the customer center, let's go to QuickBooks Online. So to open the customer center, we navigate to the sales and then customer. The customer or vendor center provide information about each customer or vendor's current open balances and their contact details. Selecting the names here in the list allows the clients to view additional details about the customer. From here, we can see the billing address, the summary, that is the open balance, and then we can see the overdue payment. So we can see overdue payment. To add a new customer, we just select new, write the customer name, an email address. We can come up with any email, and then we add the phone number. Let's see. So once we've added all the information, we can add the address here. Let's say we can put in my business address. And here, once we go to the bottom, then we can click save. So this is how you add customer. To delete or remove a vendor. So mind you, the process for both customers and vendors are the same. So let's say if we want to add a vendor, we can just go to expense. Instead of sales, we go to the expense center and then select vendors. So here we can add a new vendor. So this is where we add vendor. So we can use the same information, the name, the company name, and then the vendor display name. So once we say here Fuller, you can see the company and then the name will be here. And then once you finish entering all that information, if you like, you can put an attachment. You also have the option to navigate through this by clicking these tiles. So if we click on this, it will take us directly to the address. If you click this, it will take us to the notes. And then if we click this, it will take us to the additional information. And then if we click this, we can minimize. So once we need that navigation back, we can just click here. So if we want to go back to the top, we just click here. So this is how you navigate. So this is how you add a vendor. To remove or delete a vendor, please note that we cannot delete a vendor or a customer. We cannot delete them. However, we can make them inactive. Let's say if we want to make this inactive, we can just select from the action, we can select the down arrow, and then we make inactive. We cannot make a vendor that has a balance inactive or a customer with a balance inactive. So here we can include inactive, and then once we include that, then we make them active again. So this is how you make a vendor inactive. So to make a customer inactive, we go to the sales center and then select customer, and then let's say we want to make this customer, the process is the same. We can just select the down arrow and then make inactive. So once we make inactive, you see Amy has an open balance. Making this customer inactive will cause adjustment to be created. So that's the reminder. We should not make customer with a balance inactive. Only customers with zero balances that we can make inactive. So let's say we want to make multiple customers inactive. We can select 1, 2, 3, and then use the batch action, and then we can make them inactive. So whenever we want to do like a bulk process, we can just select and then go to the batch action. Whether we want to create a statement or send an email or make inactive or select a customer type. So that's how you make a customer inactive. To edit the customer or vendor details, we can open the customer or the vendor information. So let's say we want to make a customer, or we want to edit a vendor, a customer's information. We click on the vendor, so you can see edit. So here we have the option to make changes. We can make edit, whether to delete something or add information. So we have that option. And then once we're done, let's say we want to add a website. So once we finish, then we can just click save. So that's how you edit. And then for customer types, this feature is used to group or categorize customers into different segments. For example, we can categorize customers into referrals, or maybe based on Facebook ads. So in order for us to do that, we can go to customers. From the sales center, then we select customers, and then we click customer type. So currently we don't have any customer type, so we can select new customer type, and then let's say referrals. So maybe we want to group our customers based on whether we got those customers from referral, or maybe from LinkedIn, or if we get those customers from Facebook. We can, whatever method we want to use to categorize the customers, we can do that. So we can save and then save. So now once we've created the customer type, we can go back to the customer. We can assign customers to customer type by, if let's say for example we want to assign just one customer, it's not a group of customers, we can just click on the customer, and then once we click on this customer, we can click edit. So once we click on the edit, we scroll down to additional information. So on the additional information, you can see customer type. So here we have the option to whether select referral or Facebook. So let's say Facebook, and then once we select that, we click save. So now we've assigned this customer to a customer type, that is Facebook. So now by looking at the customer list, we can know, okay, where we got this customer from, whether it's from a referral or from Facebook. We can determine based on that. And then let's say we have maybe a bunch of customers that we want to categorize into customer types, but going through one after the other to assign these customers into customers list, customer type, will take too much time, too much of our valuable time. And QuickBooks has a solution for that. Let's say we have 3 customers we want to assign to the same category, like let's say referrals. We just check, and then select the batch action, and then select customer type. So we assign this to referral. So now you can see that we have assigned this to referral. By assigning this to referral, at this point we cannot see the customer type, which customer types do each of these belongs to. So there is no way we can check until we click on the gear icon above the action column, and then check the customer type. So now once we click check, we can see there is a column now for customer type. So if we scroll down, we can see that there is a referral, and then we also have Facebook. Okay, so now you can see we have the customer types into referral, Facebook. So that's how we create customer types and also customer. So here if we want to make these customers inactive, we can select and make inactive. From here we can send reminders. So from the customer side, you can see here you have customers estimate, you have 0, then unbilled income, you can see 750 unbilled income that relates to Amy and video games. So then we have overdue invoices. So if we want to just see the customers based on these different balance categories, let's say for overdue invoices, you just click on the overdue invoices, and then you can see that these are the ones with overdue balances. So we can run a report and then maybe reach out to them. Then if we want to see customers with open invoices and credit, we just click on the open invoice and credit, and then we see all these invoices with open all these customers with open invoice and credit, and then we can see their balances as well. And then so for recently paid, we can see here the customers that recently paid. So yeah, that's how you add customers. Then you can also run a report to show the customer type. You can run a report by customer type. Let's say the report name should be the sales by customer type. You see it comes up. So once you select this report, so currently you can see this is zero. It doesn't have any information, so meaning we have to customize this. Let's use custom date. We want to generate a report from January 1st to date. So once we click save, so now you can see we have the customer by, the sales by customer report. You can now see some of them. We have some by, we have those that relate, 11 relating to Facebook. We can also minimize this into, so we can click on this arrow and then it will minimize, and then if we want to expand this, we can just click on this. So now we can see we have 8 referrals, okay, and then we have 11 customers from Facebook. So once we finish, we can export these. We can export these to Excel, CSV, or PDF. So yeah, those are the options. So yeah, that's how you run the report, or a sales by customer type detail report. But we will cover this in detail when we go to reporting. Thank you for watching. Don't forget to subscribe, turn on the notification bell. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we are in chapter 10, adding and managing users. When a client adds a user to QuickBooks Online, they can choose which area of the business the person has access to and what the person can see. Some user types have predefined permission levels, while others can be customized. User types and permissions. So we have the first one is a primary admin. The primary admin has access to every part of QuickBooks Online and can manage all other users. By default, the primary admin is the person who set up the QuickBooks Online account. So if you sign up the client, you are the primary admin. However, you can reassign the role to client once you have invited someone for this role and they have accepted the invitation. Please note that there is only one primary admin per company. So the next one is the company admin. So the company admin has full access rights to all areas of QuickBooks Online, including company settings. Only the primary admin can add the company admin. Then we have the next one is the standard user. So the standard user, when you set up someone as a standard user, you can control which area they have access to. You can give them access to everything or limit their access to areas relating to vendors and customers, or restrict their access for them to be able to only manage certain non-accounting features. You can also allow access or restrict access to payroll by enabling the checkbox to allow payroll access. Then the another one is custom roles. So for custom roles, you can only find this user type in QuickBooks Online Advanced. So only the advanced you can find this custom role. You can refine the permission of the user to allow access only to specific aspect of QuickBooks Online. And then we have the report only. So for if you assign access to user as a report only. This can only be found in QuickBooks Plus and QuickBooks Advanced. This role can give them access to almost all reports, except for payroll and contact information related report that this individual will not have access to. And then the last one is track time only access. These users can only view the time card features. They are only able to change their own timesheet. So now let's go to QuickBooks Online to see how this works. But the only issue, we don't have access to the live QuickBooks version because this is only for a demo. Like, this is the example company, which is the Craig Landscaping. So we're not going to use any live client, so we won't be able to have access or see details in this version. But for informational purpose, I just wanted to walk through to show you how you can, where to access the client books, where in the client books where the client will be able to manage users. Okay, so then so for the client, most of the time they have option to go to my accountant. So in my accountant, this is where they invite the pro advisors. But when the client have like employees, they have to, they may have to give them access to QuickBooks Online. So the user that I was talking about is not this one. It's not the my accountant. We're talking about the user itself, like people that are working for the client. Maybe they may be employees of the client. So how do you add those users? How can you direct the client? Or how do you explain to the client where they can go to add those users? So you can go to manage users. So when the client, if the client want to add someone, they can click on manage users. So for now, for this version, this is just for training purpose. We don't have like the option to add. So this is just for informational purpose. You can see the accountant, and then we can see the users. So for here, to add a user, from the gear icon, like I said, you have to go from the gear icon and select the manage users. So once you're there, select users tab. Okay, this one, not the accountant, but you have to select the users tab. Add user. So normally the add user will be somewhere around here. So you can click add user. So once you click add user and then select the correct user type. So if you select add user, so you have to determine which user type you want to add. Are you going to add a primary admin, company admin, standard user, or are you going to assign like a custom role for QuickBooks Online Advanced? Or are you going to give this user access to report only, wherein they don't have access to any other areas, but they can just run reports with the exception of the payroll related report and contact information report. So they don't have access to these, only the report. Or are these track time only users? So once you've determined that, you specify the access right, and then you click next. So once you click next, and then you select add the user's name and email address, and then save. So once you finish, you can add the username and email address and then save. So once you add the username and email address and click save, then the user will be prompted, will receive an email notification as to the process, the steps that the user need to take in order for them to have to gain access into the QuickBooks Online. Okay, so this is for example. So I've logged into my pro advisor, to the training account, just to show you how to add a user. So for the Pro Advisor account, this is not the client account, mind you. This is different from what we've seen in the past. Like this is different than this. So this account is not the same. So here, so this is the QuickBooks Plus, which is the client version. This is what the client will see. So then now we have the Pro Advisor account. I just wanted to show you what I've just explained, how it looks like. So if we go to the team, so for the Pro Advisor account, the client's version will look similar to this. You remember when we look at the client version in terms of the manage user, when you click manage user, you won't see anything, but this is how it should look like. You will have the email, the person's name, the job title, if any, and then the email address, and then the access right. You see here you have the primary admin. Then also you can see edit. So if you want to like edit, if the client want to edit somebody, they can just click on the edit. Yeah, they can just click on this edit, and then it will take them to this screen. This is where they can modify or update the name, and then the last name, and then the email address. But let's say if, because I'm the admin, I can delete it. But let's say if I had another user listed here, you can see from the action, you can just, there should be a drop down menu where you can select delete. This is how you delete a user. So the process is the same. It's just that for the client, you go to manage user. That's from the gear icon. That's where the client can add a user. Whereas for these, you go to, for the Pro Advisor account, you go to team. Yes, so that was the end of chapter 10. Please don't forget to subscribe, turn on the notification bell, and share the video. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 11, adding apps. The benefits of apps. The QuickBooks Online platform allows developers to create apps that integrate with it. As such, this allows data to flow easily from the apps into QuickBooks Online. Intuit has rigorous testing process for prospective apps to ensure they meet strict requirements. Selecting an app. The accountant or a user with admin access can see all the apps available from the App Center from the left-hand navigation. Click on the app, you can see My Apps. So the My Apps, these are the apps the client already have downloaded. And then Find Apps, this is the tab where they can find the apps that they can download. For example, they have different options. So they can get apps, get customers. So if you click on this down arrow, you can see customer management, apps relating to marketing, and then get paid. Once you select the browse category, you can select any of these apps. So let's say for customer management, so these are the apps that relate to customer management. So if you want to manage your customers, this is where you go to download any app that you can integrate to QuickBooks Online. You can also filter these by ratings, like whether be it a 5-star or 4-star rating. You can do that here. Once you select, you can see that you have the overview, and here is the review section. Gives a rating snapshot and reviews from people who have used the app. By selecting similar apps, the client can find the shortcut to other apps that are similar, helping them choose the best one to meet their needs. So premium apps, these are purpose-built apps that integrate well with QuickBooks Online. Most apps in the App Center have a free trial period without the need to provide credit card information. It is not recommended to test an app with a live company. It's best to create a trial company for testing purpose. They shouldn't use it on a live company because some of these apps might make changes to the way QuickBooks Online operate. Before subscribing to an app, make sure to check the billing policies, whether they are billing monthly or annually. Also, read the privacy statement from the website to understand how it shares data. Once the client has selected an app, it's easy to add it to the company account. However, only users with admin access can add and manage apps. So adding the app to the QuickBooks Online, just like I said previously, you can select it from the App Center. They can click Get App Now to download it. So this is where they click to download the app. So this is currently inactive on this version, which is the QuickBooks Plus sample file. But yeah, this is what they click to download the app. Please note that installing an app could make changes to the client's data. So now once they've installed this app, then they can go back to managing. So to manage app, you can click on My Apps. So it's just that for now, since there is no app, that's the reason why you couldn't see. But when you click My App, you can see the apps that the company has already installed. All active apps can be found here. And the client has the option to launch an app or disconnect an app from here. So most of the time, admin users who are the only ones who can connect an app can also disconnect it. That's how to add an app and also manage an app in QuickBooks Online. Thank you for watching. Please don't forget to subscribe, like, and share. See you in the next video. Thank you. Hello friends, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 12, customizing sales forms. QuickBooks Online has out-of-the-box forms, that is sales invoices, estimate, etc., that the client may want to customize. Sometimes the client may also like to change the information within the form. To see options for customizing forms, you go to the gear icon and then custom form style to add a customized template. To add a custom field, you go to the gear icon and then custom field, select add field, add a custom field, name the custom field, let's say description. So you check this box, then you can turn on the print on forms, on printed or email transactions. And then once you're done, click save. Please note that the custom fields are not available in QuickBooks Online Simple Start. However, up to 3 sales forms are allowed in Essential without purchase orders. Up to 3 in QuickBooks Online Plus for sales forms and purchase orders, and 12 for advanced. So now let's go to custom form style. This is where the client rename and configure visual design of forms. To create a custom form style, we have to select the gear icon, custom form style. From the drop down next to the new, we select invoice. The custom form style has 3 components. We have the design tab, the content, and emails. In the design tab, you can change the template. You can change the default option by selecting change up template. Here you can select modern, fresh, bold, and friendly. So you have the option to select from these options. You can also make a logo edit. So you can select make logo edits to change the logos. Click add to change a logo. So yeah, this is where you change the logo. You want to change the color, like the size. You can make it medium, small, or large. So you have the option to, and then the placement, you have the option to place it on the left or place it in the middle, and then you can place it on the right. So this is where you change the placement. You can also hide the logo if you don't want to show it on the invoices. If you want to show it, you can click show. Then also you can try the colors. So here you can change the colors of the headers. So you see, you can give it whatever color you want to give it, green or blue, black, whatever color here you can give. You also have the option to change the font, and then we change the size to 12. So yeah, that's how you make changes. And then we can also edit the print setting, change the margins, whether we want to change this to 0.25, we can adjust here. And then if maybe we make changes but we're not happy with the changes, we can reset to the default margins. So for the content, this is where you make changes of the content. Like for example, if you want to make changes to the headers, you can change this name. Let's say we can change this name to something else. So we can change this, or we can press Command Z and then undo. And then so we can also add the phone number. If we want to change the phone number here, we can add a phone number field. So you see, so now we can see that we've added the phone number field here. So this is where you make all that change. And then we can also add an address. For the city, we can change it to maybe Dallas. The state, we can change it to Texas. The zip code, we can say, yep. And then for the website, we can change these websites. So we can just click this so that to display on the form. So let's so now you see, you can see the website here, form names, invoice. If you want, you can change this to something else, but yeah, this is the default name. And then the form number, if we want to show the form number, if we check this, it won't show the invoice number, you see. But when we click on the form number, it will show the invoice number. You see 1, 2, 3, 4, 5. If we like, we can use custom transaction numbers. So we can change the custom, we can add custom transaction numbers if we like. We also have the option to change the shipping. So we can add like a shipping cost. So let's say we are charging 3.5. So if we check this, the shipping cost will be included. As you can see, it's currently 3.5. For the body, we can change the body of the invoice. That is, if we want to show some of the details in the invoice, we can show that. You see, you can see the summary, the total amount due. It will get a summary, but if you don't want to show the summary, you can click on that. And then also for the date, we can show the date. So if we don't want to show a date, we can just check it off. So you see, we have the option to show the date. And then the product, you see, we can add a product or service by checking this. You see the item name, you can include the quantity and the rate. So you have the option to include that from here. If you like, you would remove the quantity. If you like, you will remove the rate. But if you just want to include the quantity and the rate on one line, this is what you do. You include it in the description. So when you check this, it will include the quantity and the rate in the description. But if you want like the quantity and the rate to be on a separate line or column, you can check this off. Okay, you can check this. So now you see you see there is a column for quantity, and then there is a column for rate, and then the amount. If you want to show the amount, you can check that to show the amount. Then you also have the option for SKU, adding SKU numbers, but this is only for inventory. So on the more option, you have the option to group activity by day, month, or week. On the footer, this is where you can customize the discount. If you want to add a discount, you check this off. You check this, you can see the discount 2%. And then if you want to add a deposit, you can check this to show the deposit, which is currently at $10. Here you have the option message to customer on invoice. So this is the option we have, and then you can change the message that you want to show when you send this to the customer. Say currently you say thank you for your business and have a great day. So we can also change the font, how we want it to display here. So if you want like a 12, the font size at 12, you can see it's got larger, a little bit larger. And then we can also add text here. Let's say, okay, you can see this is the footer. If we want to zoom it to increase the font to 12, we can do that. See, and then if we want to change it to center to the left or the right, we can do that in the center, and then we put it to the left, you see, or we can put it on the right. So yeah, we have that option to do it here. We go to the email. So the email, we can choose whether we want our invoice to appear as a summary, a summarized detail, or we want it to be a full detail, or we want it to attach as a PDF. So if we check this, meaning it won't attach as a PDF, it will just appear on the email, summarized detail. But if you want the invoice to be attached as a PDF, then we can check this. So the subjects, we can change this subject if we like to something we want to change it to. Let's say we can say, so we can change it to invoice from F Camara CPA. And then we also have the option to check this off. That is, if we want to include the greeting like there. So if we check this off, we won't have this greeting. So if we want, we can say use greeting, like we change this to, or we write the customer name. That is, if we want, we can say the customer full name. That is, we have the option to change the customer full name. Let's say if we are sending it to customer B, this field will dynamically update to whatever we put here. If we say customer full name, then the full name. If we say the customer first name, the first and the last name. So you will have that option. So that's how you change that. And then in the content of the message, your invoice is attached. Please remit payment at your earliest convenience. Thank you for your business. We appreciate it very much. Sincerely, Craig Design. So, and then we also have like want to send reminders. So we can send the reminder. As you can see, subject reminder, and then we use the same information. So the content will be we are sending a reminder to let you know that the invoice, to let you know that invoice number, so this will reference the invoice in question has not been paid. If you already paid this invoice or have any questions, let us know. Have a great day. This is how you customize sales forms. And that's the end of chapter 12. Thank you for watching. Thank you to my amazing subscribers. We've just hit 1,000 subscribers. I really appreciate that. You guys are the best. For those who are new to the channel, please don't forget to subscribe, turn on the notification bell. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 13, working with estimate and purchase orders. Estimate are non-posting transactions that your client can send to their customers, showcasing the cost of products or services. The client can use estimate to track progress of transactions, transfer the detail to purchase orders, and then to invoice to bill for the work. To create an estimate, let's go to QuickBooks Online, navigate to the sales. Then once we're there, we can select all sales. Once we select all sales, select new transaction and then estimate. So we also have another option to go to the estimate. We can also click the plus new, then estimate. So this is the shortest way to go to the estimate. So once we're there, then we can select the customer from the drop down for whom the estimate is being created. So let's say in this case, Amy Bird. Set the estimate date and the expiration. So we have today's date automatically populated here to the estimate date, and then the expiration. We can select whatever dates that we want to put in there. Let's say today. If there are any tags, but we can skip that for now until we go to tags. Enter the job details in the product or service column. So here, let's just say design, and then the quantity here, let's say 3. So 3 at 75, then we get 225 as the total. And then once we're done, we've entered the detail, we can adjust the quantity and the rate. We click save and send. So once we click save and send, we will get this preview where we can see whether we are fine with the detail. If not, we can go back and do some edits. Otherwise, everything looks good for me. Then we can just click send and close. So we got this pop-up because this is a sample company, so the email address is not active. So that's the reason. Let's say if the purchase order was not enabled. In order to enable that function, we can go to the gear icon, account and settings, select expense. You can see purchase order, but in our case this is already on. The slider is already on. You can see you can change this slider to on and off. Then you also have the option to add custom transaction numbers, but we're not gonna do that in this case. So once you finish, you click save and done. So in our case, we can just exit out of this since we already have it on. Using an estimate to create a purchase order. So now let's say from that estimate that we've just created, we want to create a purchase order. Then we can also go to the same sales and then all sales, select the money bar. Once we select the estimate, you can see currently we have an estimate with a status pending of $243. So in order for us to convert this estimate into purchase order, we can click edit. So once we click edit, we can select the customer. So we can find the estimate and then select the customer. So let's say Amy for this case. And then once we've selected the customer, then we can change the status of the estimate. But yeah, in real life, we have to wait until the customer accepts the estimate, then we can change the status to accept or close or reject it. So in our case, we can just say accept. So once we've accepted the estimate, then we can click save. So once we've saved the estimate, then we can select from this invoice, create invoice, and then we say copy to purchase order. So once we select copy to purchase order, then we can select our vendor. In this case, let's say Brooks Bessie, and then ship to, that is our customer. So once we select ship to our customer, and then we can now add the rate. So since as you can see, the quantity has already been automatically populated, so we can change the rate, let's say 40 or let's say 50 in our case. So now you can see the total amount is now 150. So once we've updated all the information that we need to update, and then we can click save. So we can click save and send, save and close. So once we've saved and closed, now converting the purchase order to an expense or bill. So in order for us to convert that purchase order to an expense or bill, we go to the expense and then vendors. So once we're there in the vendor, we can see this is the open purchase order that we have here. So we have the option to create a bill or an expense. So let's say in our case, we want to create an expense from the drop down. We can just click create an expense. So once we select create, we have the option to choose the payment method or whatever we choose. But in this case, we can select add. So you can see this is our open purchase order. We can select add, and then it will automatically populate. So we've saved ourselves the hassle. Once we click add, then we can save and close. So that's how you create an expense from a purchase order. Converting an estimate to an invoice. From the left navigation, we select customers. So once we select customer, from the money bar, we can select estimate. So now we can see the open estimate. So once we select estimate, select the correct customer, but in this case we only have one customer. We can look from the action column, which is this, and then we can click start an invoice. So once we click start an invoice, we can see that this is the estimate. Our current open estimate is 243. So we can just click add from here. So once we click add, so you can now see this is the total amount for the invoice, which we selected from this open estimate. So once we done, then we can just click save and send, save and close. So that's how you create an estimate and also create a purchase order and invoices from an estimate. And that's the end of chapter 13, working with estimates and purchase orders. Thank you for watching. Please don't forget to subscribe and share. If you like the video, please like and comment. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fula Kamara. Today we're in chapter 14, Customers Statement. Sometimes customers may have outstanding balances or would like to see a summary of all transactions with a client's business. Quickbooks Online offers 3 different types of statements. We have the balance forward, open items, and transaction statement. So for the balance forward, this statement shows a list of invoices and payments with the balance for the range selected. It's perfect for situations where the client wants to provide customers with a summary of their outstanding balances. Whereas for open item statement, this shows a list of all open or unpaid invoices. It's great when the client wants to provide the customer with details of all unpaid invoices, unapplied payments, and credit memos. Then we have the final one, which is the transaction statement. This shows all transactions between the customer and the client's business between 2 dates. This is useful where the client has a large volume of transactions for a customer so that they can see how the payment have been applied. So let's go to QuickBooks Online and see these different statements and how to generate these statements. So to create a customer statement, we go to the sales menu and then select customers. So once we select the customer tab, we check the customer for whom the statement is being created. Let's say in this case, we want to create a statement for Amy's birth. So we check this customer and then from the batch action, we select create statement. So once we select create statement, then on the statement types, we have three options to select from. So let's select first the balance forward statement. So for these, we can just select balance forward. Once we select, so the statement date, let's say today's date. The statement start date, we can select any range that we want to generate a statement for. So for completeness purpose, let's just say July 1st. For the end date, we can select today's date as well. So in this case, this will generate statements from July 1st to August 25th, 2023. So once we've selected the date range, and then we can select apply. So once we've selected apply, we can see that we have a total balance of $239 for this customer. Okay, so now after we've generated the statement, now let's go to print or preview. So let's just preview and see before we can send that to the customer. So once we click the print or preview, then this is what we see. So for the balance forward, you can see the company's name, street address, we have the statement. So then we can see to the customer, that is the customer we're sending this statement to. Statement number is 1005, and then you can see the date of the statement and then the total amount due. So we can see the dates. For the columns, you can see there is a date and then activity column, amount, and then the balance. As of June 30, that is the end of June 2023, there was a balance forward. So this balance forward is normally known as the balance brought forward. That is the ending balance in the previous period becomes the beginning balance in this month. So since our month of coverage is just between July 1st to August, so the balance forward, meaning this was the beginning balance of 205. So that was the balance as of the start. They also have some payments that were made in between. Whenever the customer makes payment, that will reduce the customer's balance. If there is credit sales to that customer, that will increase the customer's balance. So as shown, there was an invoice as of July 8, 2023, invoice number 1021. So this amount increased the balance to the 559. We have another invoice, which is the 1021. So this invoice increases the balance by 459. So which brings us back to the 559. And we also have a credit memo. So credit memo is when we give the customer a credit as a result of maybe there was a back order. So that difference, maybe the customer say, okay, you can credit that difference so that whenever I have another purchase, then they can just get that amount offset. So that's the reason why sometimes we give credit memo. So credit memo can be as a result of many reasons. Maybe there was a delay in providing a service to the customer. We say, okay, we can give a credit of $100. So that's the reason why we have the 100 minus the 100, which is the credit memos, which brings us back to the 459. And then we also have on July 27, there was another invoice number 1001 of 108, which brings us back to the 567. And then there was another payment of 108, which brings us to the 459. And the customer made another payment July 29, 2023, which is 220, which brings us to this ending balance. At a glance, you can see the total amount due to the customer is the 239, but when you look into the activity, you can see how they arrive at this 239. So this statement will help the customer to understand the invoices or the payments that have been applied to their to their account, and then what payments they've made that has not been reflected in this. This is also a form of control, wherein if we want to make sure that the the customer payment has been recorded. So if we send this statement to the customer, then the customer will be able to identify a payment made previously but that has not been applied to their account. So they can reach out to the company or the clients. We can investigate to know exactly what is causing that discrepancy. That's the main reason why we're sending this statement. And we also have the open item statement. So for the open item statement, this is for a specific date. So you don't have like a range. Let's say as of August 25, 2023. So once we click apply, you can see the same balance. We still have the same balance. So let's preview for the open item statement. So for the open item statement, this is what we see. This is the only open item. It only shows what is open as of August 25th. You see? So which is the 239. You see, it doesn't provide like the detailed transaction for all these activities. It only shows amount that is still open, as you can see open now, or the amount that is still outstanding. So that's what shows in the open statement. So just take note of that difference. And then if we go back to the transaction statement, this also has a range. So you can set up a range so we can maintain the same range from the start date, which is July 1st, 2023, and then to the end, which is August 25th, 2023. So we click apply. So once we click apply, we can preview. We can see the transactions. So you can see these are the transactions that took place. This is the difference. So you can see in this statement, you won't see the open balance or the ending balance. There is no open balance or ending balance from looking at this. So you can see the total amount received is 228. That is the net amount received during this period. Is 228. That's the net amount. 220, which is the invoice, the payment received for invoice 1029. And there was also a credit memo, which is the 100, which reduced that amount. We have another amount that was received, which is the 108, which brought us to this total 228. For the invoice, you can see we had like an invoice of 459 and also another invoice of 108, which then minus the credit memo, which brought us to the 467. So this is very useful if we want to show the client all transaction between the customer and the client. So this is the type of statements that you send. So it doesn't show like the ending or the beginning balance, but it does show the transactions that took place within a specific range. So the customer will see exactly. So this is how we generate a statement. So once we finish, we click save and send. Once we preview, we can click send. Note that customer statements are not stored as standalone documents like invoices or receipts in QuickBooks Online. Instead, they are generated on the fly based on the transaction data and the date range you specify. As such, you don't delete them in the same way. However, you can certainly change data that would appear on a statement, such as editing or deleting a specific transaction. So if you've sent a statement to a customer and need to amend data that appear on it, you need to just notify the customer separately, or maybe you can regenerate another statement and send it to the customer. Let's say we want to make amendments after we've sent the previous statement. Then maybe we decide to make some changes, or we've applied one of the outstanding payments. We can go back to the customers and then select the correct customer, and then from the batch action, we say create statement, and then we can click save and send to the customer. So that's how you create a customer statement and make amendments. Thank you for watching. Don't forget to subscribe. If you like the video, please like, share, or comment. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we are in chapter 15, credit memos and customers refund. Clients may experience situations where they've completed a project earlier than expected, purchased more material than they used, or the customers has returned faulty items. In these situations, the client could either refund part or the full amount or offers a credit against future services or products. Client can send refund to customers using refund receipt. Understanding credit memos. A credit memo is a posting transaction that can be applied to a customer's invoice as a partial or full payment. A credit memo does not refund the customer, so it's not a money out transaction. Credit memos reduce the account receivable balance, but not cash. Clients may be tempted to edit the original invoice instead of creating a credit memo. But this is not the best practice to change a transaction once the client has sent it to the customer. Editing existing transaction can cause confusion and is not good for record keeping. This can become an issue, especially if the original invoice relates to the prior year, because making changes can cause the books to go out of balance with tax returns and previously reported amounts. Some clients may be tempted to bill for less in the next invoice. The client will have to edit the item cost or price or invoice for less than what was supplied, which could affect the books on the back end. The best practice is to create a transaction in QuickBooks Online for each exchange between the client and customers. This can clarify the timing and sequence of events with a customer. Sometimes the client may decide to refund in cash and not record the transaction. It is important to capture all transactions, whether paid in cash or not, to ensure the completeness of records. If the client fails to record the cash refund to customers, they will pay sales and income taxes on the sales transaction and receive no benefits from the return. Credit memos can be issued at any time. Customers can be given credit as part of a loyalty program or referral incentive program, or they can be given credit memo as a result of goodwill gesture. The client can set up a referral scheme by adding a new service item called "Thank you for referring us" that is mapped to a discount income account. They can use this item when creating credit memos. So now let's go to QuickBooks Online and see how to create a credit memo. From our sample company, to create a credit memo, you navigate to the plus new icon. And then once you click plus new, you select credit memo. You also have the option to create a credit memo by going to the sales, select all sales. From the new transaction, you select credit memo. Let's say we are creating a credit memo for Amy Sanctuary. So to create a credit memo, you select the customer from the drop down. You select the product or service. Let's say in this case, design. We fill in the fields for customer, product or service. So we fill in all the details. So once we finish, we select save and close. Applying credit memos. By default, QuickBooks Online automatically applies credit memos to existing invoices or new customer invoices. This feature is controlled by automatically apply credit settings in the advanced section of the account and settings, the automation section. So to turn it off or on, you can go to the gear icon, account and settings, advanced, then you go to automation, you select, you can see by default, automatically apply credits. The slider is on for this. So to turn it off, you can just click on this, select save. Automatically applying credit memo feature is great for clients with simple account receivable. However, clients with high volume or more complex AR workflow should use it with caution. Clients can disable it, can disable the slider, just like what we did. So clients can disable this at any time, because sometimes if you leave it on to automatically apply credit memo, let's say if the customer has like an open invoice, the credit memo will be applied automatically to the oldest open invoice. So that's the reason why sometimes if the client has a large volume of invoices, it is always advisable to turn it off so that they can apply the credit memo manually. So once we finish, we click done. So applying credit memo to an existing invoice. So in order for us to manually apply credit memo to an existing invoice, first of all, let's create an invoice. So we go to the plus new and then invoice. We select the customer, let's say Amy. Once we select the customer, the date, we can leave it today's date, and then the due date, which because it's a net 30, so the due date is 9/26/2023. Then we enter the product or service. In this case, let's say customer design. Once we finish, we click save and close or save and send, whichever option we prefer. So we can click save and close in this case. So we've created the invoice. So now to apply the credit memo to the existing invoice, we click plus new and then receive payment. So once we click receive payment, we select the same customer, Amy. So now we can see the invoice that we want to apply the credit memo to. We select that invoice, which is the one that we just created. As you can see, initially the invoice that was selected is the previous invoice, the oldest invoice. So because we want to apply the credit memo to the correct invoice, that's why we've selected to apply the credit memo manually. So in this case, we select the correct invoice which we want to apply the credit memo to. So once we select that, and then to the credit memo, you can see this is the credit memo. So we check the box for the credit memo so that the credit memo will apply automatically to this invoice. So once we done, we click save and close. So now we have applied that credit memo. If we create the statement for this customer, we can see the transactions. So as you can see the credit memo, the invoice that was created, and then the credit memo that we created. So initially we created the credit memo for 75, which was automatically applied against the existing invoice. Then we create another credit memo, which is the 75, which is applied against the $75 invoice. So this is how you apply credit memo. So now let's go to customer refund. Some cases, credit memos are not the right solution. In such cases, the client will need to refund money to a customer. So meaning they will have to pay the customer the cash. The money will be taken out of the client account to pay the customer. This could be due to faulty goods or one-time job that came under budget. In QuickBooks Online, the client can create a refund receipt. This is a money out transaction from the specified payment. The difference between a refund and a credit memo will reduce the account receivable balance, but not cash. Whereas for refund, the refund will reduce the cash account, because the money will go out of the account. So to create a refund, we select the plus new. Once we select the plus new, and then we select refund receipt. Choose the customer from the drop down. So in this case, let's say Amy. Once we choose the customer, we can see the date will populate automatically to today's date. We can change this date to whatever date we prefer. So we can select the bank account from which the amount will be coming from. We select, let's say, checking. The account balance currently is 1,201. So the check number will be check number 71. So this is where the refund will be coming from. Then we select the product. Which product are we refunding? So let's say design. So we are refunding the customer the $75. So once we select, then we can click whether we click save and close or save and send. So in this case, let's say save and send. Then we click save and close. That's the end of chapter 15. Thank you for watching. Please don't forget to subscribe, turn on the notification. See you in the next video. Thank you. Welcome to the channel. My name is Fuller Kamara. Today we're in chapter 16, setting up QuickBooks payment. Every trip the client takes to deposit customer payment means less time to complete more important tasks. Making a trip to the bank to deposit money could take longer and could lead to cash flow issues. QuickBooks Payment can help in situations like this. QuickBooks Payment allow clients to email invoices containing a payment button that enables the client customers to pay online instantly. The client can also accept payment over the phone if they have a signed authorization form on file. There is also a feature to set recurring invoices to be automatically sent and paid. QuickBooks Online Pro Advisor gets special rates on QuickBooks payments, plus the same discount for their clients as well. You also have the option to choose pay as you go or on a monthly price. So let's go to QuickBooks Online and see how to set up QuickBooks payment. Setting up QuickBooks payment, you select the gear icon, go to account and settings. Please note that QuickBooks Online payment is not available on the example company, so we're going to use the Pro Advisor account for demonstration purpose only. So to access the QuickBooks payment, we select the gear icon from our Pro Advisor account, and then we go to company settings. You can also access this on the live version. You go to the gear icon, then select account and settings, and on the left navigation bar you can see payment. So once you open the gear icon and then you select payment, you can then see the two options you have. So you have an option to get paid through setting up the QuickBooks payment, or you can connect your existing QuickBooks payment account you have from another QuickBooks account. We're going to discuss both of these two options. So to set up the QuickBooks payment, we select more. So once we select more, we can follow the prompt. You can see we have the various rates. So QuickBooks checking account and envelopes. Here are the fees for the QuickBooks payment. If you swipe or tap, you can get like 2.2% plus 25 cents. If you use KID, then you have the 3% plus 25 cents. So these are the various fees you have. In terms of the business, you can put in the website, the business website, industry, whether be it accounting, audit, or bookkeeping services. Whatever industry you are in, you can select that. So I choose accounting, audit, or bookkeeping services. And then you also have the option to edit this detail here. So you can see the profile information here. You have the legal business name. This is just for the training. This is not my Pro Advisor account. This is the training account that I created. We also have the business type. We can say sole practitioner, then we go, or LLC. So once we click save and continue, it will take you here where you will use the information to verify that you are the business owner. You can put in the first and last name, then the mobile number, and then the last 4 digits of the social security number. Then you also have the date of birth. You can enter the personal address and include the apartment number and also the zip. So you enter this information here. Once you finish, you save and continue. Just follow the instructions until you get to the point where you can finally select activate payment. So just keep selecting save and continue and enter all the on-screen information. Once you get to the final point, select activate payment. So that's how you set up the payment. Then you can also set up payment by connecting to an existing account. connecting to an existing QuickBooks Payments account. The QuickBooks Payment is also called QuickBooks Merchant Services or Intuit Merchant Service. You can also call it Intuit Check Solutions. So these are the different names that they call it. Clients with one of these can easily connect to a QuickBooks Payment account. Clients with a direct bill plan can connect their existing merchant's account in the billing and subscription. So clients with a firm bill plan needs to contact support to connect their existing merchant account. So for clients with direct bill plan, they can connect their existing merchant account in the bill and subscription. So let's see. If you go to billing and subscription, so you see there is you won't be able to access it because this is just a sample company. So let's say account and subscription, you see something is not working, give us a minute. So yeah, because this is a sample company, we're having trouble opening that account. But all the other information is still the same. The concept is still the same. So if you want to connect the payment, you can still use this. For the Pro Advisor account, you can use this option. If you already have a payment account with Intuit, you can just click connect and then you follow the prompt, then you will be able to connect to your existing payment account. But it's just that for this is the Pro Advisor training account, so that's the reason why, and we don't have like an existing account to connect. So but the procedure is still the same. So for clients with a direct billing, they go to account and settings. So they go to account and settings and then subscription and billing. This is what they click to set up their payment. That is if they choose to do it directly without the Pro Advisor setup. If the clients choose the firm bill plan, they will have to contact the QuickBooks support by selecting the help. So if they click contact us, so you can see the contact us from here. So once they click contact us, this is how they contact Intuit. So they can type in whatever question they have here regarding their payment detail. So the number to contact for special pricing, so this is the number they will reach out to in order for them to get the special pricing. And that's the end of chapter 16. Thank you for watching. Please don't forget to subscribe, like if you like the video, and turn on the notification bell. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 17 using QuickBooks Payment. So I skipped this tutorial because I wanted to make sure all our tutorials are hands-on, but just for completeness sake, so that's the reason why I wanted to go over this with you guys, just to make sure we cover everything that you need to know. Once the payment has been set up, it is easy to link it to a payment method such as credit cards or debit card. The client will get an immediate notification that payment has been made. Clients even have the option to add payment links, adding a payment method for invoices and sales receipt. So in order for us to be able to use the QuickBooks Payment, we first need to add payment. So to add the payment, we go to the gear icon and select all list. So once we select all list, you can see we have the payment method. So we can select the payment method. So this is where you add the payment method. If you select new, you have the option to add a name, let's say MasterCard. So once you select it, you can say this is a credit or debit card. So you check this debit or credit card and then click save. Please note that the clients will have to repeat this process for any other payment method that they want to work with QuickBooks Payment. Here you have the option to edit. You can edit this, change it or give it another name, or you can run report from here. So you see, you can also make inactive. So if you want to change this to make it inactive, you can make it inactive. Then you can also, if you click on this gear icon here, you can include inactive, that is payment method that you've made inactive but you wanted to include renew them to make them active again, you can click on the gear icon. You can also print from here. So, but I'm not gonna print anything at the moment. When creating an invoice, the client can select which payment method. So let's say we want to create an invoice. They can choose how they would like to be paid by selecting the edit option. So once they select the edit option, they can go to the payment method. Because we haven't set these payments yet, so that's why it will take us to this setup page. Because if we had set this, then the client will just have the option to choose which payment option to include by selecting the edit, and then they can check the box next to the payment option or payment method that they need. But in this case, since we haven't set up this yet, we can just click continue, and this is where you can set up the payment. You can add the legal name, that is the first and last name, and you can put in your phone number, the last 4 digits of your social security number, and the date of birth. Then you can also put in your personal address. Then you have the zip code. Once you finish, you can click save and continue. So you just follow the prompt. Then you also have here the rate. So for each of the payment method, you have the rates that are applicable. That's how they set up the payment when they are creating the invoice. This is how they can choose which payments method. Then once they finish, they can just save and send. So once the client has created the invoice and selected which payment method or the payment option, they can send it via email. Once the customer receives the invoice, they can tap the review and pay in a browser, and then the customer can enter their payment information and select pay. So the customer will receive a payment confirmation and can download the receipt directly from the browser. If the customer don't want to pay immediately, they can schedule to pay later using the payment date box at the bottom of the screen. Then once the payment is made by the customer, the client gets a notification and the payment status is automatically updated in QuickBooks Online. And there is no need to record payment or deposits in the QuickBooks Online. So this is one of the benefits of using the QuickBooks payment. And then also using QuickBooks payment with receipt. You know, we have invoices, then we also have sales receipt. For invoice, we issue invoice if the customer is going to pay like later. Whereas if we sell something and then the customer pays immediately, meaning we're going to use sales receipt, which is this one. There is no need to create and send an invoice if the customer pays at the time of sales. The client would just need to create a sales receipt in this case, which will record both the sales and the payment on the same screen in QuickBooks Online. The customer can then be emailed the payment receipt for them to have a record of the sales. If the client selects like credit card as the payment method, because you can see here they have the option to enter the customer name, they can choose the customer name, and then most of the time if we populated like the customer data, email, the address will all pop up. So the date, and when they select the payment method, whether be it a MasterCard, to process the payment, the client needs to enter the credit card details and save, and then send it to the customer. So that is if it is a credit card. Then there are also instances where the client might choose to use payment links, instant deposits, QuickBooks Go payment. Clients using QuickBooks payment have 3 additional features to make things faster. They can either use the payment link, the instant deposit, or the QuickBooks Go payment. So each of these have like different use case. So for payment link, these are single use links that clients can send to their customers in email or text messages. The links automatically expires once the customer has made the payment. So take note of that. Payment links are great if the customers are expected to pay immediately. So you, in terms of like the use case, use payment link if you expect the customer to pay immediately. Otherwise, online payment option added to to invoices would be better. Let's say, for example, you have the customer on the phone right now and then they are willing to pay. It is better to use like the payment links. But if you know the customer will pay at the end of the month, then you are processing the transaction right now, meaning, or creating the invoice right now, meaning it is better to use the invoice, the online payment option added to the invoice. It's easy to create a payment link. You just need to navigate to the sales. So once you are on the sales, then you can see payment links. So here, this is where you create payment links. So just click get started. It will still take us to this setup page, but just follow the prompt once you get here and then complete all the necessary details. So you can select the payment link to view the status of the link. That is, if you send a link, you will be able to monitor the link to see the current status. Then we also have like instant deposits. If the clients need payment quickly, they can activate instant deposit themselves. There is an additional 1% charge per transaction for instant deposit. Clients can deposit a minimum of $1 and then a maximum of $2,000 up to 3 times per day. To schedule instant deposit for certain days of the week, you can just go to the account and settings and then you can go to the payment. So once you select the payment tab, like I said, this will also take you to the setup page. So you see, once you click learn more, because the reason why it took us to the learn more, because we haven't set up this payment information yet. So if you click continue, it will still take us to this setup where you can enter all this relevant information. Once you've set up everything, you can go to the deposits speed section and then select change. So in the setup, your instant deposit schedule pop-up will show, and then you will be able to select the days you want to get instant deposits for, and then schedule and save, and then you can save the schedule. So like I said, we won't be able to do like a practical application for some of these, but I just wanted to show you where to find those, just in case you are in an exam or you have a client, then you wanted to set up the instant deposit or payment link, you know where to go to complete. Because there is one thing, as long as you can read, QuickBooks will walk you through the process. The only thing, you need to know where to go, you know which section of QuickBooks to find something, because if you know where to find things, then you will be able to process most things, because there is most time you will get the instructions, step-by-step instructions. Then you also have the QuickBooks Go payment. Clients with QuickBooks payment can also use the Go payment app to accept payment on the go. So that app, you can either download it on your phone, which is the Go payment app. As long as you have the QuickBooks payment set up, you will be able to receive payment on the go. So that's also another option. So you can also set up like recurring payments using the QuickBooks payment. So to create a recurring sales receipts, you can go to recurring transaction from the gear icon. So if you click recurring, and then you can click the new and select the sales receipt. Let's say you want to make a recurring transaction relating to sales receipts. Once you select the sales receipt from the drop down, and then it takes you to this screen. So this is where you set up the recurring. So if you haven't seen our previous tutorial on recurring transaction, I suggest you watch chapter 27, that is creating and using recurring transaction. We have the recurring template here. You can give it the name. So once you give it the name, you can select whether schedule, reminder, or unscheduled. This is a schedule. Then you can fill all the details, recurring sales receipt details, as you would on any other sales receipt. You can enter the date in advance, let's say 5 days in advance, and then you can select the customer. So once you select the customer, you can either check, these are the options, whether to send automatic email to the customer, and then whether be it monthly or on a quarterly basis or yearly basis or weekly. So whatever works for you, you can do that. If you are billing the customer on a monthly basis, you can do that also. Maybe you want to do it on the first of every month and you want this to repeat every 1 month. Then you can select the start date. Let's say if you want to get the start date maybe on the 1st of December, you can do that. So if it has an end date, you can choose by what end date. But if you don't want to put any end date, you can leave it as is. So, but yeah, if you want to get like the detail on setting up a recurring transaction, just check out chapter 27. Then once you finish, you click save the template. So you can save the template. Please note, if this is the first time the client is setting up a recurring payment for this customer, the client must have a written authorization from their customer to charge a recurring amount. Just a side note there. And when entering the credit card details, ensure that the process credit card box is checked so that this will tell QuickBooks to process the payment via the QuickBooks payment. Then you can complete the rest of the detail as with any other receipt and save the template. So because currently we don't have like a payment method set up, so that's the reason why you won't see the information that we were talking about here. Recurring invoices with autopay. The autopay feature enables customers to automatically settle their regular invoices. So in order for us to enable the auto pay, they need to use the invoice template. So auto pay feature is only available in the invoice template from the, so let's say we want to set up like an auto pay. So in this case, instead of the sales receipt, we select invoice instead. So we can use the invoice template. So once we click the invoice, fill in all the necessary information, we change this to schedule, days prior, let's say 5 days, and fill in the necessary detail. So we can check automatically send emails, and then on the online payment option, we can select the payment method from here. Let's say we can click this, check this. You can also set up, like, since we have not done any setup, if you click that, it will also take you to this setup page. If the client want to give the customer the option to pay either by credit card or bank transfer, you can check this payment option. After the setup, you can click save, and that's the end of chapter 17. Thank you for watching. Please don't forget to subscribe, like if you like the video. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 18, basic sales tax and tax setup. Making sales tax less complicated. Clients who sell products and services need to follow tax regulation of their state. However, it can sometimes be challenging to keep track of more than 40,000 different tax laws across the United States and how much sales tax to collect every time they make a sale. As a pro advisor, you can set up the client sales tax information for cities and states where they do business. The sales tax is based on the location of sales and the type of product or service. Identifying the client's sales tax requirement. In order to set up a client sales tax, you would first need to find out what the sales tax requirements are for their business and location. You may have done this as part of your initial requirement gathering with the client needs assessment tool. Here are possible questions to ask the client. What is their company's address? When did their last tax period start? Which agency do they need to pay their sales tax to? When did they start collecting sales tax for each agency? And then what is the filing frequency? Do they do business in more than one state? So those are the questions. So now setting up the sales tax, let's go to QuickBooks Online. From the left navigation, then we can select taxes, then sales tax. So once we select sales tax, we can select get started. Then here you can see that the address automatically populate. So we click next. We can also select the different agencies that we have. So here you can see we already have some of these agencies. We have California, Tucson, then we have Arizona State Tax, and then Tucson City. So these are the various agencies that we currently have. So we have to match these agencies. So once we've selected the agencies, let's say California, then we have all these agencies, then we can select the rate. So this is the official agency name. So we can also select for Arizona. You can see for Tucson, it automatically populates. You can see that it's at 9 point. That is the combined rate for Arizona State and also Tucson City. So that gives you the 9.1. So you can select from here. So for the state, you can look for Arizona. So Arizona State, which is the Department of Revenue, and then the Arizona Department of Revenue. Then we also have the Tucson City. It's still Arizona. So instead of the state, this is the county, right? We select save. So once we finish, we select save. So these are the active rates. So these rates are pulling directly from the Intuit database of rate. So you can see you also have the option to make changes. So if you want to change, you can select change and click next. So if we're good with this, then we click save. So now this is the sales tax center. So now we are going to set how frequent is the clients filing their taxes. Is it a monthly? Is it a quarterly or yearly? So we want to know that. So we can set the frequency. So in this case, let's just say quarterly. So for this case, we can select quarterly as the frequency. You see, you have option monthly, yearly, or quarterly. So I choose the quarterly. So it all depends on an agency by agency. So here you can see the payments that are due, currently due. Then you can also see the due date. You can see the amount. Then you can see for various, you can filter for various agencies. You also have the tiles for each agency here. You can show more detail. So you can see the taxable sales, for example, California. You can see the taxable sales is $4,636. Then the non-taxable is $30. We have a tax liability of $370.94. These are the various menus you can see. You also have the option to run a tax liability report from here. Then you can see the sales tax settings. If you click on that, it will take you to this. Here you can edit the agency. Okay, you can see the rate all pull up from here. You can add the custom rate if you want to get like a custom rate. Let's say California has 19% instead of 8. This is just an example. You can change the rate here and the name. So this is where you make those changes. Then you can see if you click on the pull down, you can make them inactive. Then you also have the option to edit when you are going to start, like the start of the tax period. This is currently saying January. So if you want to change it, you can change it. Then the reporting method, whether you want to do it cash or across. So you have all that option. You can also make them inactive. Then you can add an agency from here. You see, so you have the option to add an agency. You can give the agency name. You can select the agency from here. Let's say Alabama. You can select the frequency, then the date, the start date, whether be it you can go as far as wherever is the start date, and then the reporting method, whether cash or accruals. Then once you finish, you can select save. So you see, this is how you add an agency. So now we have that here. This is how to add an agency. Then also selecting the right sales tax category. By default, QuickBooks Online applies the regular state tax rate to product or service items. This appears as a taxable standard rate. So we have the option where you can enter the tax. Like for example, if we go to invoice, create an invoice. So when creating an invoice, you can see this is currently the taxes that we have in place. You have the California. If we select California, California, then California rate will be applied. So basically we have the taxes here. So selecting the right sales tax category for a product and service, all this information that you are seeing for specific, let's say if we say engineering, design, it has its own tax category, whether it is taxable or not. The area where that information is pulling from, whether this product is taxable or tax exempt, is actually coming from the product and services. So here, so when a product and service was created, you can see that, let's say if we want to edit a product or a service, you can see that currently the tax is based on the standard rate, so which is the based on location. So we can change this to non-taxable, or we can give it to like a special tax rate. Let's say if repair, we can select the specific rate. So now if we say done, you can see that when we click done, save and close, then this particular item now will be taxed at that rate. You see, so you can see the combined part and labor charge for non-warranty. So that's the tax that will be applied. So if we want to change it to maybe non-taxable, we can do that as well. So you see now it will show as non-taxable. If we want to go back to the default, we can go to the default, which is the standard rate, and then we click close to tell QuickBooks Online that the customer is exempt. So let's say we have a customer that is exempt because especially like the state, local, and federal government, non-profit organizations, resellers, like those who are buying for wholesale, then providers of raw material used to produce other goods. These are all exempt from sales tax. How do we tell QuickBooks that this customer is exempt? So we go to customer, like when creating a customer. So here we can see, let's say Amy, right? So if we want to make these customers exempt, we can either do it when creating a customer or adding a customer to QuickBooks Online, or when we edit, we select the edit. You see, when you select the edit, you can either use these tiles to navigate. So we go down here, and then you can see that on the taxes, we can say this customer is exempt. We check this. So once we finish, we click save. So that's how you make a customer as exempt from sales tax. So the sales tax calculation, sometimes when the client creates a sales form such as an invoice, QuickBooks automatically calculates the sales tax based on several factors. For example, if we go back from plus new and then invoice, sales tax category of the product or service being sold. So these are the factors sometimes that the clients that QuickBooks use when you create an invoice. You can see this is the tax, this is the portion of the sales tax. So QuickBooks will calculate the sales tax based on the tax category, the sales tax category, and also whether the customer is subject to tax or is exempt from tax. Then we can also see the state where the client is registered. So all that factor also take place, and then the location of the sale, where the sale took place, the location where the sales took place. Then you can also see how the tax is calculated by selecting see the math. So if you click see the math, it will show you, let's just add a dummy transaction, so we can see how the sales tax is calculated. So we can see how the tax is calculated by selecting see the math. So here currently you can see the customer, they say this customer is not tax exempt, so meaning it's taxable, meaning this customer is subject to sales tax. So currently this customer's default tax rate is based on location. So we can change that by selecting the edit. Okay, if we select the edit, we can see you have the option to make edit, or we can say make this customer tax exempt, or we can just select another rate. So we have that option. Then you can see the location and address based on where you sold your item. That's how the tax was based. So you can change that. You can change this address by putting another address. So you have the option to change the address, save and continue. The tax is also based on the product and service. Once we finish, we can click save and close or save and and send. So you have all that option. For me, I will just click save and close. So you have those options. Now let's go back to the QuickBooks Online. So the QuickBooks Online sales tax calculation based on location. By default, QuickBooks Online calculate the sales tax based on locations, on the address, on the seller's address. When the client creates an invoice, QuickBooks Online will display this address in the location section. So for example, if we click on the invoice, you can see that we have the location of the sale. So QuickBooks Online will calculate the tax based on this address. However, if there is an address in the ship to field, like for example, if you click on this shipping information, if there is an address here, the tax will be calculated based on the ship to field, based on the ship to address instead of here. So you can see now the shipping, the location address now changed to ship from. So now the tax will be calculated based on that location. You can see the changes how the tax is calculated by viewing the math. So you can see now, you see the tax is calculated based on the merit drive. So if I change the location, if I remove the location there, let's say if I delete this location, then I go back to see the math, you can see the tax calculation now will be based on the shipping address, the location where you are shipping the product from. So that's how the QuickBooks Online calculated tax. So update the address, you can do it on here as well. Like for example, if you want to change the address, you can change it from location of sale. You can update it directly from here. So you have that option. Then nexus, sales tax nexus refer to the connection or level of contact between a business and a taxing jurisdiction. Nexus is to establish when your business starts selling or operating in a state. At some point, your business activity meets economic or physical nexus threshold. Once nexus is legally established, you are required to register as a seller in that state. You will start to file sales tax for those specific agencies. Okay, let's say for example, you are like Amazon. Amazon has a location in Texas, but they are selling products to customer in maybe California. So nexus require, if the sales reaches a specific threshold to customers in California, let's say the sale to customers in California meets a specific threshold, or maybe Amazon has a location in California, then they will have to pay sales tax to California. So that's how nexus works, because even though some business might not have a location in a specific state, but since they have activities, like they are selling stuff to that state, even though they don't have a physical presence, but people can buy their product from online, then if they meet specific threshold, or they will still have all tax to that agency. So some states have like destination-based rules. The destination of transaction take precedent. So if the state has like a destination base, that is wherein taxes is levied based on the destination of the product, where the product is going to, then the sales tax is calculated and collected based on the location, district, or county of the ship to address. Then we have, some might have like origin based rule. So if there is an origin based rule, meaning the tax will be calculated based on the origin of the product, where the item is shipped from. California has a hybrid. District and local taxes are calculated and collected based on ship to location, while county taxes are calculated and collected based on ship from location. So that's the end of chapter 18. Thank you for watching. Please don't forget to subscribe, like, and share. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 19, setting up bill pay powered by Melio. Bill pay powered by Melio allows clients to pay and schedule vendor bills with ease from the office or from their phone. Bill pay is available to clients using the QuickBooks Online Essential to Advanced. The bill pay feature helps clients streamline their account payable process by importing and paying all bills from inside QuickBooks Online. It also allows them to schedule future payments and never miss a deadline or incur a late fee. Clients can choose from multiple options. Another benefit is that vendors don't have to create an account or set up anything. All they need is to decide whether they would like to get paid via check or ACH bank transfer. Bill pay is available online and on the QuickBooks Online apps as well. Setting up and using Bills Pay. So in order for us to set up and use Bill Pay, we have to navigate to the expense center. From the new transaction drop down, we can select bill, or alternatively we can select plus new and select bill. So we have those two options, and then you can complete the instructions. Let's just select create a bill from here. So once we create, you can complete the instructions. So once you've entered all the information that is needed, you can click save and schedule payment. So once you click save and schedule payment, it will take you to this screen. So here you can select the plan. Like for the basic plan, you have 5 free ACH payments per month. Then you can also automate bill creation and also automate match transactions. So you have that option in the free plan, but you also have additional fees, like for the ACH payment, like $0.5 per transaction. Then you can also for check payments, you have like $1.5 per transactions, whereas for the premium and elite you have $77.5, that is $7.50, and on the elite you have $45 per month. So these are the various plans that you have. So you can see the things that are included in these various plans. So for the premium, you have 40 free ACH payments per month, and then you also have automated bill creation, auto match, and then unlimited 1099 filings. Then so you see, this is what you are missing from the basic plan. You have it in here, and then you have it in the 1099. You also have it in the elite. So those are the various options that you have. But since this is not like a paid subscription that I have right now, you won't be able to select a plan, because if I say, let's say we choose the plan, you will see QuickBooks Pay isn't available. So subscribe to the pay, you need to have a paid subscription to QuickBooks Online. So you see, that's the reason why we couldn't set that up. Just follow the instructions. It will ask you how you would like to connect your bank account. You can select and continue, and then you can select your bank from the options and continue to proceed. Because like for connecting bank account, we've gone through that. Just check our bank transaction tutorial. You'll be able to see or know how to connect a bank account. Then you can proceed and enter your login credentials, and also you can select the right payment account in QuickBooks Online, and you can select link my bank account to establish the link for payment. Now select the choose a method to use to pay the vendor. So like this, I won't be able to go through the practical, like I said, because this is just a trial version of the QuickBooks. So you won't be able to see like the practical application of the bill pay. It's only available to paid subscription. So that's the reason why I won't be able to like walk you through the setup process, but it's easy as long as you know what to do. So like I said, you open this schedule payment, and then it will take you to the various plans. You can select the plan that you need and follow all the screen's instructions. Then you will be able to set up that bill pay. So finally, you can review and confirm and schedule the payment. So once you've scheduled the payment, you will be able to track the status of the bill payment. For you to be able to track that, you just need to navigate to the expense screen. So which is this. So once you are on the expense screen, you can see you have some bills that are paid, you have unpaid, then you have those that are, if you import the bills like from your computer, then this is where you find those bills. So you can review those and then mark them as paid, whatever option you have. So you can select view online payments. The status screen shows the following. It will show us which account paid the bill and then the date QuickBooks Online process the payment. Okay, for example, if we open this, so if you view this bill detail, it will show you like the account which paid the bill. You can see we paid it through cash. Then also the dates, the QuickBooks Online process the payment. You can see the dates here. Client can access bill pay from the expense page or the bills list. The client can specify the payment method for each vendor. So they have the option to specify the payment method for each vendor, how they would like to pay their vendor. Bill pays is the default in QuickBooks Online. However, if your client would rather continue to access the print check option or mark a bill as paid, they just need to follow the step from the expense page, and then they can select here the action from the action column. They can select mark the bill as paid. So once they mark the bill as paid, they can select the bill, which we already select here. They can select which bill they want to pay, but since we already select, but let's just add it again. So they can select which bill. So let's add it again. So now this is selected. So once you select the bill that you would like to pay, then you can select save and close. So you see, so now that bill will now be on the paid section. So you see, so you can now see the bill is now on the paid. If you have the Melio app, you have access to some of these features. You have the accountant portal, that is, you can access your clients from one dashboard. Then also you have the approval workflow. You can schedule payment, then the client approves the payment before it goes to the vendor. So you have that workflow also. You can add multiple users who don't have access to the QuickBooks Online. You can add them to the Melio as well. They will be able to have access. Then for the invoices, vendors that use Melio can send their invoices directly into the Melio app. So some of those vendors that use invoices, they are able to send their invoices directly to the Melio app. Then also syncing, you'll be able to sync with QuickBooks Online because the Melio app syncs with QuickBooks Online, which means bills entered in the QuickBooks Online will appear in Melio and vice versa. That's the end of chapter 19. Thank you for watching. Please don't forget to subscribe, like if you like the video. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fula Kamara. Today we're in chapter 20, which is managing receipts and bills. Adding bills and receipts to QuickBooks Online. The receipt tab in the banking center is the hub for adding and managing bills. Users can upload bills, whether be it in PDF, PEG, GIF, or PNG format in multiple different ways. Uploading a file. So we can upload a file to QuickBooks Online. Let's go to QuickBooks Online and see how this is done. So to upload a file to QuickBooks Online, we have three different ways of uploading files to QuickBooks Online. We can upload from computer. We can also upload from Google Drive, and we can also upload through forward from email. So to upload from a file, you can simply just select, just like uploading any file to a website. So the quickest way to upload a file, you can either drag and drop it here. Let's say a receipt, for example. You can either drag and drop it, or you can click on this icon and then select the file that you wanted to upload. Here we have it. So in the for review section, this is where, when you upload a file, this is where you can find the file you've just uploaded. Then you can also upload from Google Drive. So if you click on Google Drive, It will take you to where you can sign in. You can follow the prompt and upload the file or documents that you wanted to upload to QuickBooks Online. So you just click and then use your Google Drive account. You can use your Google Drive account email and then follow the prompt and upload the file. Then you also have the option to forward from email. You can upload the file through forward from email. So first of all, you have to set up the email address that you will be using. Let's say this is my email address, then I can follow the prompt. Since this is the sample company and I don't want to like set up my email, but once you enter the email address, you click next, you follow the prompt. It will walk you through the process of setting up, but you can only do it if you are the admin. Only an admin can register a custom email, and there can only be one active custom email per company. So to specify the users can email a receipt. They can select manage forwarding email. Then they can use the slider to give access to existing users as well. So that is after it has been set up. But most of the time, I don't use the forward email because there are way better ways to upload files than to forward it. But I just wanted to let you know that this is also an option to upload files to QuickBooks Online. After you've uploaded the files, you also have the option to upload files through the mobile app. The QuickBooks Online mobile app is a handy tool to upload receipt as well. Using the QuickBooks Online mobile app, you are able to record transactions. You are able to record receipt, sales receipt, expense, mileage, track mileage, and the invoices. You are also able to snap receipts, like by clicking this. After you've snapped the receipt, you can select use this photo. It will be uploaded to your QuickBooks. The QuickBooks Online mobile app and the QuickBooks Online web synchronize seamlessly, so you are able to access whatever information you have on your mobile app. You can also access it on the web. So that's just a handy tool there that will help you to streamline your recording of transactions on the go. Reviewing, matching, and adding bills and receipts. So once the bills and receipts have been added to the QuickBooks Online, they appear in the for review section of the receipt tab in the banking center. So once you go to the banking center, so just one quick note, QuickBooks has made some changes to the QuickBooks Online dashboard. So now this used to be the banking center, but now they call it the transactions. So in the transactions, it's there you find the bank transactions, app transaction, receipt, reconcile, do app transactions. Then it is this same place you find the chart of account. The chart of account used to be in the accounting section. So this is the accountant view, which has been modified, because previously we had business view and accountant view, but now QuickBooks is trying to roll over these changes. So we'll be having the accountant view as the default view, which is easier to navigate because of they want to streamline the navigation process, because the business view, not a lot of people are using it, and it, of course, it's kind of confusing a little bit. So this is a very streamlined, this is a streamlined view. So here, if you go to transactions, you can see receipts. This is where you upload receipt. After you've uploaded the receipt, you can see the receipt will be under the for review. So in the for review, then on the other tab, you can see these are the reviewed receipts. So since this receipt is still processing, I can use the bank transaction feed. So as an example to walk you through. So you can see in the bank transaction feed operates similar. Once you've uploaded the receipt, you have the options to match the receipt. That is, if you've already recorded transactions, relating to this receipt. Let's say this receipt that I've uploaded, let's say if there was already a transaction that was recorded, but it's just that it's still processing. This receipt is still processing for some reason. I don't know why, but it has taken longer. So once you've uploaded this receipt, you are able to match this receipt to existing transactions. Let's say you have a transaction, because this receipt is for $154 and 0.06 cent. So with this, if there was already a transaction that matched this amount, just like you have here in the banking center, you can see it will, QuickBooks will automatically match transactions. We'll say match found. You can see some of them, it said two matches found. So after you've uploaded the receipt, you will get a pop-up like this. If there is already a transaction that match that receipt, then you can see there will be a match found. So if you agree with the match, then you can just select match. For example, so currently it's saying there is a match. The date here says August 9, 2023 for a $50, 55 twin. So we also have August 9, 2023. The payment was made. So then the twin, the transaction, it's saying 55 twin lane. So you see, this is a perfect match. So if we agree with that, we click match. So that transaction has been recorded. We are going to discuss the banking center. We have a separate topic on that. It's because I'm having issues with the receipt. That's why I'm just using this analogy to explain, because it operates very similar. So you can see categorize. These are the transactions that you've matched or added. You see? Then for the receipt also, so you can see after you've reviewed the receipts and possibly match them to other transactions, you can either select match from the action column or select the drop down next to the match, then select review to view the potential match first. So after you've found a match, you can review to make sure it is accurate. The match is actually correct. So if it is correct, you can click match, just like I did on the banking center. If there is no match, you need to add it manually by selecting the review. So once you've added the receipts here, you can look from the action column here. So from the action column, you can either select the match, or you can click on the drop down. There is a drop down here, which you click. Once you click that drop down, you can select the review to view the potential match. That is if there is a match. So if there is no match, you can add it manually by selecting the review from the drop down and add any missing details on the next screen. When done, click save and select create. So that's how you record, that's how you process receipts and bills. Please note that when using the forward by from email option, users can include multiple receipts as long as they are separate attachments. So let's say you have 5 receipts that you want to send. You have to attach those 5 receipts on separate attachments. That is, each receipt should have a separate attachment. You cannot combine all into one attachment. Like for example, you put them in a compressed zip folder and just attach those 5 receipts. The forward from email won't work out that way. So you have to attach them separately. So each receipt should have its own separate attachment and then send them through the email. So if there are more than one match or matches, if there are more than one matches, you or the client will have to review them manually and select the correct bill or receipt. To do that, just select view. That's the end of chapter 20. Please don't forget to subscribe, like if you like the video, and share, and turn on the notification bell so you won't miss any new video. See you in the next video. Thank you. Hello everyone. Welcome to the channel. My name is Fuller Kamara. Today we're in chapter 21, creating vendor credit. Vendor credits, these are for refunds of product, services, or discount received on an account after the vendor has issued the bill and the client has recorded it in Quickbooks Online. They post a debit to decrease accounts payable. A vendor credit can be applied to an existing bill or held as an open and apply to a future bill. By default, QuickBooks Online automatically applies the vendor credits to the oldest bill for that vendor. If the client wants to manually apply credit, they can do it by navigating to the gear icon, select account and settings, advance, then they go to the automation, select automatically apply credit. So once you finish, click done. After we've disabled the automatic apply credit, now let's create and apply a vendor credit. So first of all, before we create a vendor credit, let's first of all create a bill so that once we create the bill, we can apply the vendor credit to it. So first we navigate to the expense center, we select bills, select add bill. So you can see you have the option to upload from computer, we have the option to create bill, then we can create a recurring bill. So in this case, we just want to create a bill. So once you click create, we can select the vendor for which the bill relates to. Let's say Books by Bessie. So this is the vendor that we received the bill from. So the terms here says net 15. The date is today's date, which automatically populate. Then we have the due date. Since the term is net 15, then our due date is September 23. So now in this case, we have no tags. We're going to cover the tags in a separate lecture or tutorial. So the amount, let's say in this case, legal and professional. So the bill is for legal and professional fee. The description, we also said legal and professional fees. So for which customer, if we want, we can put the customer, but in this case, I choose not to. We have the option to attach the supporting documentation, whether be it the bill itself through this drop down. We can either drag and drop here. So once we finish, we can select save and close. We have the option to save and new or save and close. So in this case, I would save and close. So now that we've created the bill, let's go and create a vendor credit. So to create a vendor credit, we have two options. We can create a vendor credit from the expense. Once we select expense, we can say new transaction. Then we say vendor credit. But since this is the longest way, we also have the option to create a vendor credit by selecting the plus new. We go to the vendors, we select vendor credit. So you see this is the shortest one or the easy one. So once we select, now let's create the vendor credit. Let's say Books by Bessie, because this is the invoice that, the bill that we've created was actually from Books by Bessie. So now let's select Books by Bessie. The date also automatically populate. You have the mailing address, the payment date, which is today's date, automatically populate. Then we also have the tag, whether if we have any tag, we can select the category. So this was for the refund. The vendor credit was actually for legal, right? Legal and professional fees, but specifically accounting. Then we can also add the description. So now we can select the accounting. The amount was 75. So this is the credit that we received, the vendor credit. For which customer, we say Amy in this case. Then we can add a memo. We can just say this is a test. We can also attach the vendor credits if we choose to. After we've updated all the information that we required, we can click save and new or save and close. I will select save and close. So now that we've created the vendor credit, now let's apply the vendor credits to the original bill. So we are still in the expense center. We select bills. So once we select bills for review, these are bills that we uploaded from the computer. So let's say we have those bills that we receive in bulk. We uploaded those bills by selecting the add bill, and then we say upload from computer. So once we upload, they will be on the for review section. So now we have the unpaid bills. So if you want to apply a credit or payment to a bill, we go to the bills, then we go to the unpaid bill, because these are bills that we haven't paid yet. So now we remember the name, right? The name was by Brooks. We select the check mark. So once we select the check mark, we have the option. You see, we can mark as paid. We can also do it, the mark as paid, by clicking here. So if we click the down arrow from here, we the schedule payment, view and edit the bill. We can duplicate this bill or we can delete. But in this case, we just wanted to apply the credit. So in order for us to apply the credit, we can say mark as paid. So once we click mark as paid, you can see the pay here is Brooks by Bessie. We have the bank of credit account, which is the MasterCard. The balance is 177. So in this case, we are not going to pay the full amount. We're just going to apply the credit, right? So now we can see the bill, the original bill that we received from the vendor is $75. The due date is 9/23, but the credit is also 75. So now to apply the credit, you have to check. So you can see here, this is the vendor credit. We can click add if it was not already added, as we saw it here. So that's how you add the vendor credit. That is if it was not already added. So since it was already added, we can select, let's say the client, if the client has multiple bills, we can select only the bill that relates to this vendor credit is the one that we select to apply the credit. So now once we check this vendor credit, we can add a memo or description. So now we can select either save and new or save and send. In this case, I will just save and close. So now we've applied the credit. So now to see whether we've applied the credits, we go to the paid. So now we can see the vendor bills, the bills that we paid. So you can see there is a $75 that we've paid. So now if we want to like see the details, we can view or edit bill. So you see this is the bill, the original bill. Okay, then if we can click cancel. We also have the option to show payment. So if we click show payment, this will show us the credit. You see the $75 that we've just applied. If we want, we can click view detail to see. It will take us to that same bill payment. So you can see the bill payment pin here. We have the amount, the original bill, and also the vendor credit. So you see, this is where you go to make edit. So if we good, we leave it as is. If we want to make any changes, we can make the changes and then select save and close again. So that's how you apply vendor credit. Thank you for watching. Please don't forget to subscribe, like, and share. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we are in chapter 22, pay down credit card feature. The benefits of pay down credit card feature. The client often categorize credit card payment to an expense account rather than to the credit card liability account, which leads to incorrect balances. They may also end up with duplicate entries in the bank feed if they add a credit card there instead of following the correct workflow. So let's go to Quickbooks Online to see how to create a pay down credit card. So in order to create a pay down credit card, we click plus new and select pay down credit cards. Once we select pay down credit card, you can see record payment made to your balance. So which credit card did you pay? So in this case, we can select from the down arrow to select which of the credit card, whether be it a MasterCard or Visa. We also had the option to add new. In this case, we will just select MasterCard. Then the payee. The payee means the bank that has the credit card. That is the bank bank the credit card was issued from. Let's say, for example, if it was Bank of America, you can select Bank of America. If it is Chase, you can select Chase, or Capital One, you can select Capital One. So whatever bank. So in this case, we can just select any of the payees from these options, or you also have the option to add a payee. So whatever payee we have, we can select the payee from the drop down. So in this case, let's just say we select Chains, Gas, and Oil. You have the option to choose any payee, whether be it Bank of America, Chase, or any other bank or credit card company. So how much did you pay? So the amount that you pay to the credit card company, let's say for example, if the credit card company is Bank of America, they issue the credit card to you, you spend $200 or maybe $1,000 from that credit card. At the end of the month, or maybe on the 20th of each month, you have to repay that $200 that you've used, or the $1,000. So in that case, once you repay that amount, that is not an expense. That is a liability that you've just repaid, because the time when you were buying stuff with the credit card, that's the time you were incurring the expense and the liability. Okay, in that case, so what you were doing is you debit expense and credit liability. So let's say you use the credit card to buy a laptop computer. So in that case, you debit the laptop computer because it was an asset, and then credit the liability, which is the credit card, which is in this case the MasterCard. But now you are coming to pay down that balance, the $1,000 that you've just borrowed indirectly from the bank by using the line of credit. So in this case, you are making the payment to the bank, which is a liability. So the issue comes where the clients have already recorded these transactions, like when they were buying stuff using the credit card and they connected the bank account through the bank feed. So now they've recognized the expense for that account. Then when they pay down the credit card again, they might be tempted to record that pay down as an expense instead of a decrease to the liability, because when they were buying stuff, the the double entry was they credit the MasterCard, which is the liability, the credit card account, because it's a liability, and then they debit the expense. So now they've already recognized the expense. So now if they pay down that credit card, the double entry should not hit the profit and loss. It's a balance sheet transaction. So in this case, we just debit the liability and then credit the cash or bank. In this case, the amount now will be let's say we pay $1,000. That's the amount. The date automatically populates. Let's say for example, today's date. What did we use to make this payment? Did we use a check? So in this case, we use check. So we select check-in and check this box to say I made a payment with a check. So in this case, we enter the check number. So you see you have the option to put in the check number here. So in this case, we go with the 71. So we can check this to print later, okay? Or we can just leave it as is. Then we also have the option to enter the memo. So in this memo, we can just say this is a test. So we also have the option to attach the payment. Maybe we can attach a receipt. We just select here and attach the receipt. But in this case, we're not gonna attach any receipt. So once we finish, we can select save. Okay. So once we click save, we have the option now to select more. You see, once we click more, we can see there is a journal entry. We also have the audit history. We have the option to delete this entry, that is the pay down credit. We have the option to make it void. So in this case, let's just see the journal. So once we click more, we select journal. So the journal here will show us So the journal will show us what accounts were affected. So we will see if the transaction has been recorded correctly. So now let's see. We have the check-in, the account. The check-in account was credited, which is correct because 1,000 was credited in the check-in and the MasterCard account was debited. So which is correct because this is what took place in the background. So QuickBooks record the transaction. We just posted the transaction in our pay down down credit, but this is the double entry that QuickBooks has recorded. So you can see they credited the checking account, which is the cash, because cash is reducing, and debit the MasterCard, which is a liability account, because it has a credit balance, because all liabilities have credit balance. If they reduce, we debit. So in this case, that's why they debited the MasterCard with the 1,000. So the net effect will be 0. That is, there is a debit of 1,000 and a credit of 1,000. So the difference is 0. So this is how you record pay down credit card. Thank you for watching. Please don't forget to subscribe, like if you like the video, and share. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 23, excluding bank transactions. When reviewing transactions in QuickBooks Online, clients can exclude certain transactions that shouldn't be included in their books. If there are mistakes, they can easily reinstate the excluded transaction. Excluding transactions in QuickBooks Online involves removing them from the bank feed and not recording them in the client's QuickBooks Online register. The bank can sometimes import the same transactions more than once, creating duplicates in the bank feed. Also, completing the reconciliation prior to clearing the bank feed can also result in duplicate transactions because the banking center doesn't match against reconciled transactions. A duplicate can prevent the bank statement from reconciling with the register, leading to incorrect financial report. To exclude transactions, we select the transactions. Previously, we used to call this the banking, but here now we can just select transaction and then we select bank transactions. So once we select bank transactions, you can see in the bank transactions column, we have the connected account. So currently, this is the sample company. We have the checking account and the savings account. So we have for review that we've connected through the banking center, but we haven't reviewed or add them to QuickBooks Online. So we also have categorized transactions. These are transactions that we've added to the QuickBooks Online. So for example, if we select this, you can see here it says match found. So if we say match, so now this transaction has been matched. So if we go to categorize, so previously there was no transaction, but now you can see we have the categorized transaction. This transaction has now been categorized. So you see we're able to undo from the action column. So then the excluded transactions. These are transactions that we've excluded from the bank feed. So for example, let's say we have this transaction, the books by Bessie uncategorized income. Let's say this uncategorized income, we have recorded this transaction previously and reconcile our books. So now it's still showing on the for review section. So if we want to exclude it, we can just select the transaction. So once we select, you can see we have accept, update, and exclude. So to exclude the transaction, we just select exclude. So now this transaction is now in our excluded transaction. You can see the 55. So that's how to exclude a transaction. So let's say we've inadvertently excluded this transaction and later decide that okay, this is a transaction that we still need to add. We can just click undo. So now it has been categorized to the for review transaction. So you see now if you look here, you can see it is under the for review. So this is how to exclude a transaction from the bank feed. Thank you for watching. Please don't forget to subscribe, like if you like the video, and share. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 24, managing existing bank connections. Clients can edit and customize the way connected accounts are displayed in the banking center. They can also disconnect an account from QuickBooks Online. So let's go to QuickBooks Online and see how this works. We go to the banking center. So now from the transaction menu, we select bank transactions. So this is the banking center, because previously they used to call this the banking center, but now it is called transactions. It is now under the transactions. We have bank transaction because the transactions that are connected that you can see here are actually pulling from the bank. That is your checking account transactions, whatever you use to buy something or make payment. This is where those transactions showed up if they are connected. So currently you can see we have checking account, savings account, and MasterCard. So these are the accounts with account balance that are connected. Currently we have 4 accounts that are connected. We also have Visa, but because the Visa account has 0 balance, so that's the reason why we couldn't see it on our end. So from the filter here, you can see you have the option to select which account you want to select. You can also select them individually like this. You also have the option to edit. Like for example, if you want to edit, you can click edit. So you can click out of this as well. So currently these are the accounts that are connected. Now for us to reorder these accounts, because currently we have the checking, savings, and MasterCard. So if we want to reorder this, maybe we want to move the savings account to be the first one. So the current display is based on the way the accounts are connected. So meaning they connect the checking account first and then the savings. But if we want to change this, we can still do that by going to the dashboard. So once we go to the dashboard, we look for bank account. So currently you can see checking, savings, and MasterCard. So if we want to change this, we can select the pencil icon and select edit. So now once we select the edit, so now you can see the grip icon. So this grip icon is what helps us to drag something. So you can see we have a Visa account also connect, but since it's 0 balance, that's why we couldn't see it in the banking center. So now if we want to move maybe the MasterCard, we want to make it to be like on the first order. So we can just hold the grip icon and then drag it. So now you can see the MasterCard now is in the middle. So if we click save and go back to the transaction and the bank transaction, you can see that the MasterCard is now in the middle, okay? Because previously the savings, let's say we want to make the savings to be in the first row. Dashboard, and under the business overview, there is where you make this edit. Mind you have get things done and business overview. So in the business overview section is where you can see this dashboard. So now let's move the savings account to the top. So we can use the grip icon and then drag it. So now if we save and go back to the transactions, now we can see the savings is now in the first row. So we can also customize the names. Let's say we want to change the savings. Maybe we have multiple savings accounts, but we want to change these savings accounts to something else, or maybe the checking account, we have multiple checking accounts. We want to change it to a different name. We click the pencil icon on this and then select edit account info. So once we select edit account info, so we can see on the name we have checking. So if we say maybe the account number is 011, that's the last 4 digits of the account number, we click save. So now you can see on the checking, it's not just checking, it has the last 4 digits of the account number. This is not a real account number, it's just something that I just came up with. So this is a sample company. Whatever you see here is not real. It's just for education purpose only. So you can see on this dashboard, or from this banking center, you can see when you click on these tiles, you can see that currently the savings account has one transaction connected. That's why you can see one. Whereas for the checking account, you can see 25. It means it has 25 transactions. So these are the transactions. So you can see from the for review tab, this is where you see the transactions that are connected. So if we click on the MasterCard, you can see the transactions that are connected. So currently the MasterCard has 7 transactions. So that's why you see 7. Okay, so the reason why you are seeing currently the MasterCard is showing 304 as per the bank, whereas for QuickBooks we can see 157.72. So it's because we have transactions that have not been added. So we have some transactions here that have not been added to QuickBooks. So you can see if they add a transaction, you can see them on the categorize. So that's the reason. So we can also edit like the sign-in info. Let's say if we want to update our sign-in, we can click edit and click edit sign-in info. So since this is a sample company, I would not be able to access the sign-in info. So this is where you can edit the sign-in. Let's say you've changed your bank login details. This is where you can edit to make those changes. Disconnecting an account. We can also disconnect account by selecting the pencil icon and then select edit account info. So once you click edit account info, you can see check this box. So once you check this box and save, then that account will be disconnected, meaning you won't see it on the list of connected accounts here, because currently we have 3, even though we have 4, but the ones with balances are currently 3 accounts. If an account is disconnected, all transaction in the for review tab for that account will disappear or will be deleted. Depending on the bank, the client might not be able to download any transaction older than 90 days. So let's say if you disconnect this, you won't be able to see all these transactions. Everything that is in the for review tab will be deleted as well. So let's say if you wanna connect it again, you can. Some banks will only allow you to connect up to 90 days transactions. That is if you need transactions that are older than 90 days, unless you have to contact the client and then the client will have to contact the bank. Rules relating to this account will no longer work. So if you have like bank rules, you have rules that you've set for this specific account, they will not work. So those rules will be deleted as well, unless you have to create new rules. So this is where you go to create rules. You can see on the rule section, if I create new rules, then you can add the rule name, but I don't want to whet your appetite at this point because we have a whole chapter on rules, how to create rules. So this is where you can automate. Rules and recurring transactions will help you automate in QuickBooks Online. So that's why we have separate chapters dedicated to just those. So then sometimes, and please also note that QuickBooks Online does not display a warning regarding this. So when you want to delete or disconnect an account, QuickBooks will not tell you about the 90 days saying, okay, if you delete a transaction, all rules associated with it, will be deleted. So you won't get a warning if you do that. So if let's say for example, you lost a connection, that is, these transactions are not updating. Maybe you check the bank account. When you log into the bank, you can see the amount there shows maybe 4,000, but why we are seeing here a minus 3,000. So it's because there could be a connection issue. So we have things that you can do to troubleshoot the connection. So the first thing that you can do is to select update. So if you select update, that should update the bank feed. So if you select update still did not fix the issue, you also can select a manual. You can start a manual upload. So let's say for example, you can select the down arrow from the link account and select upload from a file. So you can do a manual upload. So in order for you to do a manual upload, first you have to export the transactions from the bank. You have to log in to your bank, whatever bank that the client has. they have to log in and then export those transactions in the form of a CSV, QFX, .qbo or OFX file or TXT format. And once they've exported those transactions, they can drag them here or they can select from here and upload. You can also bring the transaction automatically by linking. To link an account in QuickBooks Online, you select link account. You can click show more to see more options. So once you select the right bank, you can follow the instructions to link your account. Because this is a sample company, that's why I'm not able to link. But this is where you go to connect the account that you see previously. So you can also manage connections. Once you click manage connections, because this is a sample company, that's why you won't see where to manage connections. So once you click manage connection, this is where you log in. So that's where you manage connection. Then you can also check the bank or the credit card website to see if there is any notification about site maintenance or anything like that. You can also update the bank info in QuickBooks Online. So just like I said, you click edit and select update. Maybe somebody changed their password, that might also affect the connection. So this is where you select to update the information that the client has or the bank login information. So you can also add transactions from e-commerce. So let's say you have transactions in your Amazon website, eBay, or Square. So if you have transactions in any of these websites like Amazon Business, you can connect the transactions from this e-commerce by selecting Connect Free App. So if you go to the app transactions, you select Connect Free App, you can follow the on-screen instructions, you click continue, and then here you can select the date. So the alias or you have the option to select the various dates that you want to connect. So you can see you can connect up to September 2022, September 15, 2022. So once you select that, you can select agree. So if you agree to the terms, it will take you to where you can log in with your credentials and then follow the on-screen instructions and connect. Then you also have the option to connect eBay or other apps. So let's say, for example, you want to connect Amazon. So you can select it. Once you select the Amazon, click next and follow the on-screen instruction. Then for this, you can connect up to June 16, 2023. Select next. So just follow the on-screen instructions, continue and agree to the terms. Then you will be able to connect the transaction. Once the connection is established, QuickBooks Online begin downloading transactions from the client Amazon Business, Square, or eBay. The imported transactions include transaction dates, customer name, product description, quantity, price, and any fee breakdowns. For imported transactions, if you import transactions, you can see them in the app transaction tab of the banking center. The client can then review and categorize the transactions. That's the end of Chapter 24, Managing Bank Fee Connections. Thank you for watching. Please don't forget to subscribe. If you like the video, please like and turn on the notification bell so you won't miss any feature upload. Thank you. Hello everyone, welcome to the channel. Today we're in chapter 25, creating banking rules. Many clients find that around 80% of their transactions are repeated transactions. Checking, adding, and categorizing these transactions can be a real chore. Sometimes clients can run into issues when they are recording transfers between accounts in the bank fee. Bank rules can help speed up the matching processes. Rules can identify repetitive bank fees and automatically suggest a match. The client can set rules to tell QuickBooks Online what to do with downloaded bank activities that meet a particular set of conditions. Rules can be prioritized, copied, copied, edited, deleted, and exported. Clients can even create bank rules to add transactions to the register automatically. Rules can also be used to automatically split transactions. Bank rules have two elements: conditions and actions. Conditions define which transactions to look for in the bank feed and can include criteria such as specific bank account, a keyword in the description, or a transaction amount. Whereas for action, these tell QuickBooks Online what to do with transactions that meet the rule conditions. For example, automatically posting transactions to the correct account. So create a rule, navigate to the transactions, and select bank transactions. So once we select bank transactions in the banking center from the left-hand navigation, then we go to the rules tab. So once we select the rule tab, we can select new rule. So in the new rule, we can enter the unique name. So mind you, sometimes we might have multiple different kind of rules. So we want to make sure that the name that we assign to each rule is unique. So for example, a best practice is to assign a rule a very descriptive name. Let's say, for example, if we look in the transactions, in the bank transaction, we look at these transactions here. Let's say we have rental. Okay, so the description is a rental. So if we want to assign a rule, we can just look from this description. We can say a rental. So let's give the rule as rental. So in this case, if we are creating the rule now, let's go and just add, say, rental. So this is our rule. So once we give the name, then we can define the rule condition to specify the transaction that the rule should apply to. So we have to specify which account the transaction will be in from the drop down. So here we can see that the transaction is a money out transaction. So we have money in and money out transaction. Then we can also assign which bank account the rules should apply to. Okay, because we have checking, savings, and MasterCard. So in this case, we can select a specific bank account. Maybe if we're using the credit card, we can say this rule apply to the MasterCard account. We can then specify the condition that the rule will use to identify the transaction. You can choose description, bank text, or we can also select amount from this drop down. So as you can see, you have the option to select the bank text. Bank text is the transaction detail that QuickBooks Online receive from the bank. Whereas for description is QuickBooks Online shorten and clean up interpretation of the bank text. Please note that it is more useful to create a rule referencing the bank text than the description. If you select description or bank text, you get the options that says it either contains, doesn't contain, or is exactly from here. Choosing contain as part of a rule permits many transactions to be assigned to one set of action. By selecting doesn't contain, clients can filter out specific transactions so QuickBooks Online exclude them when it applies the rule. Is used to create a condition for an exact match. Once the client has made the choice from the drop down, they can enter the text, let's say rental. So whatever the text or the information that you want to enter that will identify the item, that will select the transaction. Okay, so that's the condition. So we have entered the rental as the condition. We can also add multiple conditions. We can say maybe it contain another word. If we know maybe the transaction has multiple conditions, we can enter multiple conditions. Or we can say, in this case, instead of description, we say amount, okay, equals to 4,000. So that's the other condition. So if you choose to match the transaction by amount, please note you have equals, is greater than, or less than. They can add up to 5 conditions by selecting add a condition from the drop down. To check whether a rule is identifying correct transactions, select test rule. So you see currently the rule is saying this rule will apply to 0 current currently on review transactions. So let's delete this amount because we don't have the amount that meets that criteria. So now let's test the rule. They say this rule apply to 0 condition. So we can change this to something else. Let's change this rule to Hicks hardware. Okay, so now this is the rule. Then it's a money out transaction. We select the bank. So in this case, we say all bank. Then we say it contain hardware. So now let's test the rule. So you can see this rule apply to 2 currently unreviewed transactions. So now we know our rule works. Okay, defining what actions QuickBooks Online should take once the client have specified which transaction QuickBooks Online should look for. They can define what action it should take with transactions that meet the specified condition. So any of the transactions that meet the specified condition that we've given here, we can tell QuickBooks Online the action that QuickBooks Online should take. The transaction type, we can categorize it as a transfer or expense or a credit card payment. So in this case, let's just say transfer an expense. Then for the category, we can categorize this transaction, whether be insurance, advertising, or a job expense. So in this case, this is just for an example. So in this case, we can select advertising. It doesn't mean the expense is actually for advertising, but we just wanted to assign it to a category. Then the pay. So the pay depends on whether the transaction is a money out or a money in transaction. So for money out transaction, the pay can be a vendor. Okay, for this, because it's a money out transaction, the pay will be a vendor. If it was a money in transaction, the pay can be a customer. Okay, let's say if we had changed this to money in this case, the transaction type would have been something else. Like you see, it's either a deposit, transfer, okay, or a credit card payment. That would have been the option. And in the category, we can see the options here that we have. So because we say this was a money out transaction, that's why we have expense. So we have expense, transfer, check, or credit card payment. So those are the options. Then, so for the, if we had selected like a money in transaction, the pay here would have been a customer. You see, we have Amy, Sanctuary, and then bills, color cars. These are the customers. But if we change it to a money out transaction, this would have been a vendor. So if you see on the options, you can see Bob's, Brooks. So these are the options we have. So now then we can see we have customer name, but in this case we can skip the customer. Then we can also add a tag if there was any tag, but in this case we don't want to add any tag. Then we can select plus assign more. So when you select assign more, you have the option to add a memo. So you can add a memo to the transaction. Let's say this is a text. Then you can see we have the auto add, automatically confirm transaction. This rule will apply to it. So using the auto add feature, you can create bank rules that automatically accept transaction into the client's books. To turn the auto add, we move the slider here. We can turn it off and turn it on like this. This auto add feature should be used with caution and only by users who are experienced in working with bank rules. So if you decide to add the auto add, normally you have to add another condition about the expected dollar amount. Let's say for example, if we say this hardware, the description contain hardware, we might add the dollar amount. Let's say every month we pay 4,000 of this hardware. So on the description here, we can select amount equals to 4,000. Okay, so that this rule will apply. But since we don't have 4,000, that's the reason why we can just go with this. But before you can select the auto add, it is advisable as a best practice to include the amount so that the auto add feature can actually add the exact amount. So it doesn't add something that is not intended to be added. Maybe you add the wrong transaction, because sometimes the transactions might be the same text description, but they might be for a different kind of transaction. So that's why we should use the auto add with caution, and of course add more rules, more conditions, so so that until it meets all those conditions before can auto add the transaction. So once we finish, we click save. So now you can see this is the rule that we have now. So here from the action column, here we can edit. We have the option to edit the rule. If the conditions have changed, we can edit this rule. Then we can also see we have the option here to export the rule. Let's say we have another situation we want to use this rule, we can export it to be used on another transaction or account. Maybe we have another QuickBooks Online that we want to apply the same rule to, we can export it. We also have the option to import the rules. So let's say we want to bring rules from our desktop that we exported previously. We can click browse and select the rules. Follow the on-screen instructions. Please note that the QuickBooks Online applies rules on a chronological order. Okay, that is, you can see this is priority number 1. So now if we create another rule, let's say this is a rent applied to all bank accounts, then we select renter as the rule, then this is going to be an expense. Then in the category, let's say rent, okay, or we can say equipment rental. Then we also have the pay, we can select, that is the vendor's name. The tag, no, we can skip that. Then auto add, we can select that. So we save. So once we save, you can see that we have priority number 1. You see, you can reorder the priority of this rule. So currently rule number 1 will first apply before rule number 2. But if you want to change that, if you want rule number 2 to first apply before rule number 1, you can select the grip and move it. So now the A rental is now number 1 priority, and then Kicks rule will be, the hardware rule will now be number 2. Please also note that if you select the auto add, that is this feature, if you select it, the transactions won't show up in the for review tab. So you won't see that transaction because the transaction will be added automatically to the categorized transaction. Okay, so you won't see it in the for review. Let's say if we go to for review, you can see we have the for review here. So any transaction with the rule that we've selected to auto add will be automatically categorized. As you can see here, you see these words automatically added. So you won't see it in the for review. So you look in the auto add. Then we can also, if we select does not contain, like for example, if we select that doesn't contain, meaning it will exclude the transaction, it won't add it, it will exclude it. So if they exclude the transaction, it will be under the excluded. So from the action column here, you can edit. Then if you click the down arrow, you have the option to copy, disable, and delete rule. Then here also you can check the column that you want to display. Let's say currently we can see condition, the settings. So if we don't want to show the condition in our display, we can check it off. So now you can see applies to the rule name. So we have the option to change that. So if we want to show the condition again, we select. Now you can see the condition column. Then the status, if we want to show the status, whether the rule is active or inactive, we can select here on the status. Then we also have, if let's say for example, if we disable this rule, now you can see the status show disabled. Thank you for watching. Please don't forget to subscribe, like if you like the video, share, and turn on the notification bell. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 26 using bank rules. Please note, if you haven't seen chapter 25, I suggest you watch chapter 25 first before watching chapter 26, because this is a continuation from our chapter 25 tutorials. Unless the client chooses the auto added feature as we discussed in chapter 25, they will still need to review the matches with the apply rules. Some rules can lead to duplicate transactions in the bank feed. Rules apply only to unaccepted transactions, those in the for review tab of the banking screen. So if we go to the banking screen, we can see that these are the transactions. Okay, then we have the rules tab. So let's say here, if we look at the transactions here, these are the for review transactions transactions, so on the for review tab. So if we use roles without turning the auto add feature, wherein the QuickBooks Online will automatically add transactions to QuickBooks Online, then the rules will just suggest the match. You will see the match found. Okay, it won't add it directly to the categorized transactions because it will still give us the opportunity to review the transactions. So if, for example, if they say a match found, we want to review this transaction, we can click and then we can see the match. So we see that the date here, August 23, 2023, then the amount is 408. Here also August 23, 2023, the amount is 408. So if we're okay with this, we can click match. We can also change this by looking at, let's say if we want to find other match, maybe we're not comfortable with this match, we might want to look for another match. So if we turn this on, we can see all the transactions instead of just the suggested one. But if we want to like go back, we can just click cancel. So if we're comfortable with this transaction, we can just click match. So QuickBooks will add it to our categorized transactions. Then if we want to undo, we can still undo. So yeah, but before we can add, so you see here, we have the option to select and review this transaction. As you can see, currently it is under the uncategorized expenses. You have uncategorized assets, uncategorized income, and uncategorized expenses. These are accounts that QuickBooks will just send anything that QuickBooks doesn't understand where to put it. Like if QuickBooks is not sure about where to categorize something, they will just put it. If it is in the income statement, if it is an expense but QuickBooks is not sure about where to put it, they would put it in the uncategorized expense. If it is an income, it will just put it in the uncategorized income. We also have uncategorized assets. If it was an asset but QuickBooks is not sure about what kind of asset is that, they will just put it in the uncategorized assets. So here we can look at the transaction and then categorize it appropriately to where it should go based on our understanding of the client. We also have the option to split the transaction. We can split it, okay, by, so if we split, we can say maybe we can say, let's see, rental. So let's see rental. We want to put it in the, if we want, we can put the customer name here if we like. If we don't, we don't have to put a customer here. So the amount that we want to assign to the equipment rental, we can put the amount here. We can also, let's say some of it goes to automobiles. This is just an example. It doesn't mean this is the right categories. So some of this goes to automobile. Let's say the 1,000 go to the equipment rental, whereas the 200 goes to the automobile. So now the difference is 0. Then we apply and accept. So this is how to split a transaction. But we are not gonna do that. We just want to categorize this. So this relates to rental. So we can say this should go to rental, equipment rental in this case. So if we're comfortable with that, you can see the customer. We can select a customer or the pay. Let's say this relate to Bessie. Okay, then if we want to change it, we can change it so somebody else, then that is the vendor or the pay. Then we also have the option to add a tag here, then a memo, and then click add. So if we're comfortable, we select add. So now if we go to the categorize, you can see all the transactions that we've added so far. If you haven't seen chapter 25, please, I suggest you watch chapter 25 before watching this. So to create a rule, we select new rule. Then this is a rule relating to transfers. So we can say the account, I mean the transaction or the rule name will be transfer from savings. The rule name should be unique. So let's say if we have this rule, transfer from savings, you should not create any other rule in the same QuickBooks Online that has transfer from savings, because you want to make sure the rule name is unique so you don't create any conflict. So the next thing you can see, this is for money out. Then we have we have the transaction from which account this is coming from. Okay, let's say the savings, because this is a transfer from the savings account, right? This amount is coming from the savings, because the money out transactions here that we're seeing, these are the connected bank account: checking, savings, and MasterCard. So this rule that we're creating, we can say it relates to checking and savings, or we can say it relates to MasterCard, but we want to say this rule relates to savings, because we are transferring money from the savings account, which is the account, that one of the account that is connected to the QuickBooks Online, right? So if we say this rule apply to all accounts, it will still run. Okay, it will still work, because savings is part of those accounts, and the rule also will apply to both the checking, savings, and MasterCard. But if we just say this rule relate to savings only, meaning it will apply to the savings bank feed only, it doesn't mean it won't apply the other side of the entry to the checking account. It will still record the other side of the entry, but it's just that in terms of the rule itself, will only run on the savings. Let's say if we delete the savings, or we disconnect the savings account from the bank feed, the rule won't work, because if we just select the savings, meaning the rule will only work on the savings account. That's what I'm trying to explain. So for completeness sake, we say it applies to all the accounts. So even if we disconnect one of the account, the rule will still run if it sees a transfer. So here, the description, we select the bank text, then on the contains, we just say contain, because if we say doesn't contain, meaning it will exclude any transaction that we say. Let's say transfer is our keyword. Transfer is our keyword in this case. So any text that contains transfer will be selected. But if we say doesn't contain, any text that has transfer will be excluded. If we say it's exactly any bank text with transfer without any other word before or after, or that precede the transfer, then it won't be selected. Let's say if transfer in is in the transaction, but we just say transfer in our text, meaning the transaction will not be selected, because it's not an exact match. But if we say contains, meaning it doesn't have to be exact, as long as the transaction has transfer in it, it will be selected. Then the account or transaction type, this is a transfer, we select transfer, right? So once we select transfer, we can select the account. So in this case, the account will be checking. This is where we want to record this transaction, in the checking account. So we don't have to worry about the other side of the entry, because the other side has already been taken care of, right, by this. So because the bank feed, the transaction is coming from the bank feed, so meaning the other side of the entry is coming from the bank feed itself, the account where the transaction is coming from. So now the opposite entry now is, so let's say in the bank feed we just selected the savings, so now we have selected the checking, so meaning the transaction will be recorded directly to this checking account. Okay, so if we look at it from a double entry standpoint, okay, that is from a banking perspective, the bank will debit the savings because money is coming out of the savings account, and then credits the checking because checking is receiving money. Whereas in the QuickBooks Online, since it's recording like in the cash register of QuickBooks Online, in the cash register, the savings will be credited because it's cash, and cash has a debit entry. If it's reduced, they will credit it, and the checking that is receiving the money in the check register will be debited. So don't be confused with the way the transaction is recorded with the bank. So the bank will credit the account that receive the money and will debit the account that is paying the money. So the bank is still correct. We are just looking at it from our own perspective. But if we are also the bank, when somebody deposits money in the bank will treat that customer as a creditor because you have lent money to the bank when you deposit. That's why you are a lender or a creditor. That's why you have a credit entry in your account. Whereas the bank will credit your account and then they will debit their own account because the money is increasing in their own bank reserve. Okay, so that's the reason why you see the banks kind of credit your account when you pay money to them. When you deposit money into your own account, they will treat you as a creditor because they have to pay you that money whenever you need it. So you see, that's the reason. That's why when you look at your bank account, you see if you deposit money, they will credit your account. If you take money out of it, they will debit your account. So that's the reason. So that's the reason why we shouldn't confuse ourselves from that perspective. So this QuickBooks Online check register, when we are recording transaction in the QuickBooks Online, we are serving as the in the client's perspective. So this is a check register. This is the client's record, not what is happening in the bank. What is happening in the bank is different compared to what is happening in the client's book. So the debit is debiting the checking and crediting the savings, because savings is an account, an asset. Checking is an asset. So if you are pulling money from your savings, meaning you credit savings and then debit checking. So once we finish, we click save. So now if we want to see this rule, we click rules. You can see the rules that is here. So now we have to be mindful also how rules compare to recurring transactions. Rules share some similarities with recurring transactions. However, in some instances, it is better to use rules than recurring transactions because rules take into account variations in dollar amount and date. Here is a list of situations where using recurring transaction might be better. So if the client want to create reminders to invoice a customer regularly, but for a varying items amount or description, then we should use a recurring transaction because that's just a reminder. They want to like the description vary. Mind you, when we are creating rules, our unique identifier is either a description or a bank text. If we think the transaction will be different, the description will be different, let's go back to the rule so that you can see what I'm talking about. So here in the description here, you can see our description is looking for the bank text. In this case, contain transfer. If the bank text contain transfer, then we are going to use rule. But if in a situation where the description for this transaction, the amount will vary every month, meaning rule will be useless. If we use rule, that rule won't serve us any purpose because it won't be able to select that transaction in the following month, because here we've put in the transfer as our keyword. Then it happened that the following transaction has like XF. Maybe the transaction has XFR instead of transfer. So in that case, the rule won't work. So if we know the transaction will change, we have to use recurring transaction, because for the recurring transaction, we can schedule a recurring transaction as a reminder only, because it won't post. It's not a posting transaction. It will just remind us if we don't want to forget. Let's say we have a customer that we normally bill every month, but the amount will be different than the amount will be different every month and the description will be different. But we just want to remind ourselves to bill that customer every month. Then we can set a reminder or a recurring transaction to remind us on a specific date. So we have a whole chapter on recurring transactions. So if the client processes the same dollar amount at the same interval, then we can use a recurring transaction. However, if there is going to be any variation in the dollar amount, you should use a rule. So those are the scenarios. For the rule, you can use the rule if the amount is different but the description is the same, because like I said, if you look at the condition here, transfer, so it doesn't matter if the amount changes, the rule will still apply if that transaction or the bank text has transfer in it, even if the date is not the same, like on a different date, maybe on the 1st, then the next month on the 2nd, the rule will still apply because the description or the bank text is still there with the keyword. But if all the keyword, the amount and everything is different, then the rule won't apply. We use the reminder. So that's what we're saying. And that's the end of chapter 26. Thank you for watching. Please don't forget to subscribe, like if you like the video, and share. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 27, creating and using recurring transactions. Recurring transactions in QuickBooks Online can be set up to manage any transactions in any workflow, such as the sales receipt, invoices, bills, journal entries, checks, deposit, or expenses. Recurring transactions can be set up to occur on a scheduled or unscheduled basis. Or we can also set up the recurring transaction as a reminder only. Once the client has set up the parameters in QuickBooks Online, QuickBooks Online will automate the process. Recurring transactions can be used to record both money out transactions and money in transactions. For example, the clients who offer fixed price services can set up recurring transactions to automatically send invoices or sales receipts to their customers. You can set up recurring transactions to record bills, non-posting charges, that is the delay charges, checks, non-posting credit, that is the delay credit. We can also use recurring transactions for credit card credit memos, deposit estimate, expenses, invoices, journal entries, refunds, sales receipts, transfers, vendor credit, and purchase orders. As an accountant, you can set up recurring transactions to reclassify deferred revenue or prepaid expenses. However, recurring transactions can be used to record recurring bills payment, customer payment, time activities, pay down credit card type transactions, or inventory adjustment. Now let's look at the benefits of using recurring transactions. So the benefits include automating money transactions that are paid out on a regular basis and fixed amount. Then also we can automate invoicing customers for regular services provided at fixed price, setting up invoices to include unbilled charges, and automatically send emails. We can also use recurring transactions for, the benefits also include recording non-posting transactions such as purchase orders or estimates. That is, we set in the reminders. Then using recurring sales receipts with QuickBooks payment as well. We can also use the recurring transactions to use sales receipt. We can also use recurring transactions for sales receipt with QuickBooks payment. Clients should review their recurring transactions to avoid sending out automated invoices for cancel or delay work. The customer wouldn't like it to receive invoices when they actually did not owe a balance to the client. So that's the reason why we should be careful in that end. Also note that a customer, vendor, employee, product, or service or account can't be deleted if they are being used on a recurring transaction. Okay, then also now let's look at the types of templates that we have. So to access the recurring transaction, first let's go to the gear icon and then select recurring transaction. So first let's click new in order for us to create a recurring transaction. So here we can run report. You can see the reminder list. This is the so if you click on the reminder list, you should see all the reminders that we have. Then let's go back. So here we have the option to filter, right? We can filter for just the reminders. If we want to see just the reminder, we click apply, so that will show us the reminders. If also we want to see just the unscheduled, we can see only the unscheduled. currently we don't have any on schedule. Then the schedule, we click apply, we can see all the scheduled transactions. So now let's click new to create a new recurring transaction. So if we click new, in this case, our recurring transaction, we are able to create recurring transactions for both invoices, estimate, expenses, journal entry, refunds, sales receipts, transfers, and vendor credit. So in this case, since the process is almost the same for all these types of recurring transactions, the process is very similar. So we're going to use only few of the examples. So in this case, we're going to create a recurring transaction for invoice. Okay, once we select the transaction type, then we click OK. We also have the option to create a recurring transaction when we are creating the transactions. So this is the recurring transaction page. So let's close out of this. We can also create a recurring transaction by clicking the plus new and then go to the invoice. So now when we are creating this invoice, we can say make recurring transaction. Okay, so now it is QuickBooks Online is going to make this a recurring transaction. Okay, so the template, we can give this, we can say test invoice, but you can give the template any name of your choice. Okay, then we have the transaction type, the template type, whether we want to make this a recurring schedule and reminder or on schedule. So when we say a schedule recurring transaction, these are for transactions with the same detail that occur on a regular basis. So everything is the same. So nothing has changed on a monthly basis. For example, you are paying the insurance. Let's say you have a rental insurance, which you are paying maybe $20 per month on the first of every month. So if that is what you pay, you can set up a recurring transaction for that fixed amount because you know the amount won't change. The date is the same on the first of every month, and the amount, and the transaction description is still the same. So with scheduled templates, clients can instruct QuickBooks to create the transaction the transaction a specified number of days in advance of the due date. So for example, we can actually, if we say we select schedule, then we can create the number of days in advance. Maybe we can say create this invoice 5 days in advance. Okay, then also we can select the customer. Let's say in this case, Cool Cars. Then you can see the email populated automatically. Then we also have the option to automatically send email. If we want the QuickBooks Online to send an email automatically to the client, then we can check this off. Then if we can also include the BCC, that is, if we want the QuickBooks Online to copy us, we can add our email here. That is, when QuickBooks Online generates the invoice, it will send the email automatically to the client, and then we'll receive a copy of the email that was sent to the client. That is, if we select the BCC or CC. The BCC means blind carbon copy or the blind copy. So the blind copy meaning the client won't see the individual that was copied on this email. Whereas for the CC, meaning the client will see, or whoever is receiving the email will see who is the other person that received the email. So now the interval, how many times would we like this invoice to be generated? Is it on a daily basis, weekly, monthly, or yearly? So in this case, we can just say on a monthly basis. So for the on schedule template, these are for transactions where the details are the same, okay, but don't occur on a schedule basis. So all the details are the same, but it's just that it fluctuates. Sometimes it occurs on the 15th, sometimes it occurs on the 1st. So for example, purchase order for repeat orders that are made at a varying interval. The client can use the on-schedule template for the sales Z-tape, that is the template based on sales receipt. Then we also have pre-populated detail estimate, that is the template is based on estimate, and then the complex monthly journal entries, wherein the template is based on a journal entry. So sometimes we can also use for other things as well. So when we use the journal entries, sometimes we can set the QuickBooks Online to book an entry for depreciation, for example. So we say every month book X amount of depreciation. On the 31st of every month, we say maybe we've calculated the depreciation, that is the cost minus the residual value or the scrap, and then we divide by the useful economic lives. Then once we get a depreciation charge, then we can tell QuickBooks Online to debit the depreciation expense and credit the accumulated depreciation. We can tell QuickBooks Online to book these recurring entries every month, maybe at the end of every month. Maybe we can say on the 31st. So that's what we're saying. We also have the template for reminders. These are used when the client doesn't want QuickBooks Online. So you see, we have reminders and on schedule. I've explained the on schedule. So now if we say reminders, we can see that these are used when the client doesn't want QuickBooks Online to process the transactions automatically. For example, the invoice that are regularly sent to a customer, but the details can change, from period to period, So that's the reason why we can set this kind of situation as a reminder, so that the reminder will pop up in the dashboard. Okay, so those are the kind of transaction we use reminder. So now, once we've added all this detail, we can see the day. Okay, we have the option to select the day, or we can say the first Monday of every month, or of every week. We can say every month or every week, so we have that option. Or we can say the first day of every month. Okay, so we have that option as well. Let's say the last of every day of the week, we can do that as well. Then let's select the day in this case. So we say the first of every month. Okay, we have the option to say the second of every month, up to the last, or the 28th. So we can say in this case the first of every month. So this is in month. So if we say 2, that is 2 months. If we say 3, that is 3 months. So now we say the start date. When are we gonna start booking this entry? So if we just creating the template today, maybe we want to start booking the entry on the month of October. So on the 1st of October, then the first transaction will be recorded. So if we are selected on the second, meaning we can also select here when we want this transaction to be recorded. So we can say the second. Mind you, the template will be created, or the transaction will be created 5 days in advance, okay, of this start date. So if we have the first, meaning maybe on the 25th of the previous month, the transaction will be recorded in that case, or will be created. So that's the reason why we put those days in advance. Then we can put the end. Maybe we can say indefinitely, or that is if we say none, meaning it will continue indefinitely. But if we say by, to end by, we'll put the date. Let's say maybe this is a transaction for just 2-month project. Let's say we want this to end by December or November. Okay, we can say end by November 30. So that's the end. Now the term is net 30. Then the billing address automatically populate. So now we can put in the product. Let's say fountain, right? The fountain pump. Then we also have the rate at 15. Let's say we have 20. The client will buy 20 every month. So we'll be billing the client for 20 every month. So we're expecting 300. So now once we finish, we save, right? We can also add a message here. The message will say thank you for your business and have a great day. We can customize this message if we like. Then also we can also add a message on the statement. Okay, then we can attach any supporting document that we want to attach to this invoice. So once we finish, we click save. So now we've saved the template. Okay, so now after we've saved the template, template, you can see now this is the template that we've just created. So now if we want to create an invoice from this template, we can just select the down arrow from the action. We say use. So now, meaning if we just want to create an invoice using this template, we don't want to like mess with it. We just want to like use it for this, because this is, let's say we are dealing with the same customer, or we want to use similar information for a different customer. We can still use this template and create the invoice for that. Okay, so once we also have the option to duplicate this. So if we click duplicate, then QuickBooks Online will create a copy of this template. Mind you, you have to change the, you see the name here says test copy. So you can customize. Let's say you want to create this same invoice for another different customer. You can do that by creating this copy. Then once you finish, you click save. Okay, so now you can see we have the original, which is this, and the copy. So you can also click edit to edit this template. So let's say we want to change this name. So now invoice 2. Then we click save. Then after that, we also have the option you can see here. We can pause this recurring transaction. We can skip the next date. Let's say we don't want this template to run for the month of October. We can just say pause. So if we say pause, meaning this recurring transaction, you can see the next date is paused. Then we can change this also. We can say resume. Then it will resume, meaning it will start on the 2nd October. Then we also have the option to delete. Let's say we want to delete, we can click delete. So now we've deleted it, that template. Okay, then you can see if we want to show up to 300 rows, we can do that. Or if we just want to show few, we can show only the 50 rows. That is, if we have like a lot of templates, we can do that customization. We also have the option to filter. Let's say we are just looking for reminders. We click apply. You can see only the reminders. Then if we want to change that, the type, for maybe we want to be specific, we just want to get the reminders relating to invoices. You see, this is what we only have here. So that's how you filter. Okay, then you can also clear the filters so you can see all the templates that you have. If we can also print, okay, we have the option to print, right? This list. Then we cancel because we're not gonna print anyway. So we click cancel. Recurring transactions are similar to bank rules. However, it is sometimes better to use bank rules for recurring transactions that vary in amount and date. So if we know the amount and date is gonna change, then we need to use bank rules instead of recurring transaction. Then now let's look at the requirement. When do we use bank rule and when do we use recurring transaction? If the transaction details are the same, that is the date, the description, and the amount are the same, we use recurring transaction using the schedule template. But if the same transaction, the same detail, but the date is different, we can use a recurring transaction still, but it is on schedule because the date is not the same. So we use on schedule template. That is this template. Let me click edit so you can see the template. So if for some reason all the information is the same, it's just that the date is not the same. So instead of the 1st of every month, we can use on schedule. That is, so for the on schedule, it doesn't have to happen on the same date. Okay, as you can see, for the schedule, you can see when the transaction will occur. But for on schedule, you see the frequency is not there, and when the transaction will occur is not there. So that's what we use if we know the transaction will change. I mean, if we know the date will change, then also if we know the transaction will change and the details will also change, but the date is the same, we use the bank rule. Okay, we know the transaction will vary, but the date will be the same. We use bank rules. Then also different transactions detail and different dates, we still use the bank rules, because for the bank rules, as long as we know like key information that we've identified key details that won't change, then we'll be able to use the bank rules. But for recurring transactions, this is the disadvantage. Like if you are to use a schedule transaction, you can only use it when all the details are the same, like the transaction description, the date, the amount, meaning you can use the schedule. But if you know the transaction description is the same, the detail is the same, but the date is different, then you use unscheduled recurring transaction. Okay, so those are the differences and similarities. That's how you set up recurring transactions. That's the end of chapter 27. Thank you for watching. Please don't forget to subscribe, like if you like the video, share. See you in the next video. Thank you. Hello everyone. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 29, recording deposit transactions. So in this chapter, we're going to cover when do we normally use deposit transactions and also how to record a deposit transaction. So sometimes clients receive deposits that are not part of customer transactions. For example, refunds, cash contributions from owners, or proceeds from loans. Adding these as income deposits could lead to confusion and inaccuracy with future tax payments. Deposit transactions are any funds coming into the business that are not subject to sales tax or income and don't need to be matched to a sales receipt or invoice in QuickBooks Online. So when do we use deposit transaction? We use deposit transaction in the following ways. 1. When we receive funds from loan proceeds or cash contributions from owner. Then 2, when we get refund from a vendor and want to record it directly against the expense account or to refund receive income account. 3, when we don't want to record income using sales transactions. That is, we don't want to use invoices or sales receipts and want to record the deposit directly to the income account. 4, we also use deposit transactions when we receive a refund from a tax agency and need to record it to reduce the tax liability or expense account. 5, we also use deposit transaction when an employee reimburses the company and the client needs to record the reimbursement against the employee loan receivable. That is, if we have a loan receivable for the employee and then the employee gives us a deposit, we want to record it against that loan receivable. Clients can also use deposit transaction workflows with negative deposit. This could be a bounce check, like when we had a bounce check from customer, or when a customer's refund amount exceeds the amount they are depositing. So in those scenarios, we can use a negative deposit. So now let's record a deposit. So let's go to plus new and select deposit, bank deposit. So once we select the bank deposit, you can see on the top side, we have the pending bank deposits that are pending to be deposited in our bank account or in our checking. So these are currently payments that we've received and recorded in our undeposited funds but have not been deposited in the checking account. So that's why we're seeing these two transactions. But in this case, we want to record a new transaction. That's why we're going to utilize this add funds to this deposit instead of the top, because this top, which is select payment included in this deposit, these are already recorded transactions in our undeposited fund. It's just a matter of checking these check marks and then select save for this amount to be deposited in our checking. But in this case, we're going to add a deposit or add funds to this deposit. So let's say, for example, insurance. We want to record an insurance that we receive, a refund we receive from the insurance company. Let's say the insurance is Amy. So now the account, which account relates to this? So we can select the insurance account. If there is any insurance account, we can select it because we want to match this deposit against the insurance. Okay, so now let's say insurance. So we select the insurance as the account. So whatever account that the deposit relates to is the account that we're going to select. Let's say this deposit was for interest income. We should have selected interest income from here. Then the vendor or whoever will receive this deposit, I mean the customer, if it is a customer, is the one that we select from here. And the account, if it is from owner, we would have selected a different account, let's say owner's capital. So any account that is affected by this deposit is the account that we select. Now for the description, we can still say insurance. And the payment method, how did we receive this amount? Is it through a cash or American Express? Which method of payment? So in this case, I can just say check. The check number, we can say 1, 2, 3, 4. And the amount, let's just say 500. So now we've entered the amount. We can add a memo. In this case, I would just say this is a deposit And once we've entered all the information that we need to add, we've entered the date, everything. So we can just click save and new. So now we've saved the transaction. So now to check if our transaction was recorded correctly, or if we want to see the double entry that took place, how QuickBooks recorded these transactions for us, we can click this clock icon here close next to the bank deposit. So once we click that, it will pull all the recent transactions or the recent deposit. So this clock icon is available on any screen that we're currently on. So if we're in the invoice screen, then the recent transaction will relate to invoices, recent invoice transaction that we posted. Okay, so in this case, since we're in the deposit window, that's why we can see all the recent deposits. So here, let's select the dates. We have 9/25 and the amount was 2,500. So now we can, if you look on the bottom, you have the option to print. We have make recurring. So if you haven't seen our recurring transaction tutorial, I advise you watch that video to know how to record recurring transaction, because it helps in the automation of QuickBooks. So in this case, we click more. So once we click more, you see we have option to delete this deposit. We also have the option to look at the audit history. Then we can select the transaction journal. So the transaction journal is there to show us the double entry that were recorded. So you see, this is our deposit. This insurance is what we recorded as the additional fund. Remember, these other undeposited funds, these were the transactions that were already recorded previously that we saw, those two transactions on the top. So if I go back to the deposit, these are the transactions that relate to the undeposited fund. So the one that we recorded that relate to this refund, that is the refund from insurance. This is the transaction, the 500. So let's go back to the journal. Let's see. So in the journal entry, we can see the journal entry that was recorded. So here, QuickBooks Online has recorded a debit to the checking and credits to the insurance. Okay, this is going to reduce, because this insurance account is an expense. It's going to reduce our insurance expense because this is a deposit. So if we had recorded this in the form of like an invoice or sales receipt, this would have been subjected to a sales tax, which is not correct, because this is not a sales transaction. This is a refund that we receive from the insurer. So it's not subject to tax. So that's the reason why we recorded this. So now it's going to reduce our expense, our insurance. So now if we click the insurance, in this case, we can see, you see the account type is an expense. So now if we click credits an account that has a debit, meaning that account will be reduced. So let's say because we know expenses has a debit entry. So now that we've credited 500, let's say the insurance account had 1,000. So now the insurance account will be reduced by 500. So that's the double entry that QuickBooks has recorded. So for the undeposited fund, these are just the normal entries: credit, undeposited fund, and debit checking. So you can see the total individual is, this has 500, and then we have all the other entries. But these two, if you add these two together, should equal to this one debit. That's the double entry that QuickBooks has recorded. That's the end of chapter 9, recording deposit transaction. Thank you for watching. Please don't forget to subscribe, like if you like the video. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 30, using journal entries. A journal entry is a way to post a debit and a credit directly to account in the general ledger. You can also use journal entries to adjust account balances, correct errors, or summarize the depreciation of assets. There are golden rules to journal entries. We're using today my Training Pro Advisor account because the QuickBooks Plus sample company doesn't have the adjusting entry function, and I wanted to explain the adjusting entry feature as well. So in order for you to record a journal entry, you must abide by this rule. The total debit must equal to the total credit. So that's the first rule. So the second rule, we can use a product or service item to book a journal entry. The next third rule, posting to account receivable or AR, you must specify the customer. So if we are posting our journal entry to account receivable, so if we select the account here as the receivable, meaning we have to specify the customer name here under the name. Okay, then the next one, when posting to account payable also, we do the same. We have to indicate the name of the vendor. Rule number 5, you can't mark an amount as billable to a customer when using the journal entry. Number 6, you may use multiple AR or AP accounts in the same journal entry. So these are the rules that you should be mindful of. So to record a journal entry, we have two options. Like for the accountant, you have the option to select from the accountant tool and select journal entry. We also have here, if you go to plus new and select journal entry. So these are the two options you have to book a journal entry. Clients can book journal entries, but for adjusting journal entries, only users with accountant access are able to book this adjusted journal entry. So let's see the difference. So right now, when I'm in the Pro Advisor account, we have the option to mark an entry as an adjusting entry. So let's go to the client version, which is the QuickBooks Plus. So if in fact you don't see the accountant tool here, then if we want to create a journal entry, we say plus new and select journal entry. You can see that this doesn't have the option to make it as an adjusting journal entry. So that's the difference. To record a journal entry here, we can enter the date. We have today's date and the journal entry number. This is number 3. So we can say CPA. So the reason why we're adding the CPA, because we want to make sure that we separate our journal entries from the client's journal entry. Let's say we say this is an adjusting journal entry. So if for non-adjusting entry, we don't have to check this check mark. So for adjusting journal entry, we can check this check mark. So now we can record the journal entry. So let's say this entry relates to depreciation, right? So for journal entry relating to depreciation, we can debit the depreciation expense and credit accumulated depreciation. So in the account column, we debit depreciation expense with, let's say, 5 grand. And credits the accumulated depreciation. Description, we can say depreciation. So we can say depreciation for whatever month we want to put. The name, we don't have to worry about the name. Whereas if we're dealing with a vendor, account payable or account receivable, we have to indicate the vendor or customer name. We have to select the vendor or the customer name here. But since this is not, it doesn't relate to any vendor or customer. This is not account payable, so that's why. So now on the credit side, we select. So for the credit, we select accumulated depreciation. So there is a difference between between depreciation and amortization. Sometimes people might use this interchangeably, but there is a difference. Tangible, depreciable fixed asset, because we have fixed assets that are tangible but they don't depreciate. For example, like land, whereas building depreciates. Amortization is for intangible assets such as goodwill, etc. Then now you can see after you've entered the debits, the credit will automatically populate. Now, after we've entered this amount, we can also make this a recurring. You see, in our recurring transactions, when we want to make a recurring transaction, you go to the gear icon and then select recurring. But in this case, you can also make a transaction recurring while you are entering the transaction. So now let's say every month we book the 5,000 depreciation relating to fixed assets. So in this case, we can make this recurring by selecting the recurring. Now we can give this template name as depreciation. So we can make this a schedule because we want this to be posted directly without we having to intervene. So we want to make sure this is recorded without any human intervention. Then we want this to be posted 5 days in advance. Now, this should be on a monthly basis because this is a monthly entry. Then the day, we want to select the day, the first day of the month, every month, okay? Every 1 month. So if we want, we can say every 2 months, but yeah, we want to record this every month. Now the dates that we want this to be posted, we say, let's say today's date. So we need this entry to be posted starting today, but it will continue without any ending. So if we want, we can put in the end date, maybe by, let's say by 2024. Maybe we can say by the end of 2024, let's say by December 31st, 2024. So now if we save this template, let's go and see our template. We select the gear icon and then go to recurring transactions. So you can see this is the template that we've just created, right? So if we edit to see the amount, you can see we have the amount here, right? So the 2 grand. So now we can close this template. If we want to use this to book an entry, we can just click the drop down and select use. So now let's book this entry, right? So now we can we can book the entry. That is, if we want to use this, we can book the entry. So if we go now to transactions and chart of account, you can now see the depreciation. So if we view the register, you can see all the entries that have been recorded in this. That's how to enter a journal entry. So for adjusting entries, we normally use adjusting entries for accrued expenses, deferred expense, accrued income, and deferred income. Then we also have the non-cash, as I've just demonstrated. So that's how to record journal entries, both adjusting and non-adjusting journal entries. Okay, the difference: the adjusting entry, post this entry to adjust a balance. Let's say like the depreciation, we record the depreciation to reduce the balance, the fixed asset balance, because the cost minus accumulated depreciation gives you the carrying value, or the carrying amount, which is also known as the net book value. So if we book an adjusting entry, we kind of like trying to adjust the balance to a specific amount. So the adjustment can be, we adjust up to increase the balance, or we adjust it downwards to reduce the balance. So adjusting entry don't have to be on a specific direction, because sometimes we record it to increase an amount, or we can also record it to decrease an amount. So that's what an adjusting entry. That's the end of chapter 30. Please don't forget to subscribe, like, and share. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 31, using the transfer function. The client may have multiple company-owned bank accounts for different purposes. The transfer function in QuickBooks Online is for moving funds between 2 balance sheet accounts. That's the keyword right there. 2 balance sheet accounts. It shouldn't be used to record transfer between a client and their vendor's bank account, or to record income or expense account. When using the transfer function, there are no fields for customers, vendors, employees, product, service, or for splitting the amounts. So whenever we're using this transfer function, we're only using it for balance sheet account. That is for moving funds. Let's say, for example, if we're moving funds from the checking account to the savings, or the savings account to the checking, so that's where we use this transfer function. So to access the transfer, we select the plus new and select on the other column, we select transfer. So once we select the transfer, you can see transfer funds from the account the fund is coming from, and transfer to the account the fund is going to. Let's say, for example, we're transferring funds from the checking account, okay, to the savings account. So let's select savings. So now the amount. So now let's select the amount. As you can see, as soon as we select the checking account, it shows us the balance that we have in that account currently. Now, if we look at the savings also, it shows us the current balance. So now the amount that we're transferring from the checking to the savings account, let's say it's $500. So the memo, we can say this is a monthly transfer. So we can also add an attachment. We can also make this recurring. So we can set this as a template, then it becomes an automated process. So remember, we have manual entries and automated entries. So if we set this template, let's say we put in the date, we make this a schedule transfer. So we want to make sure this is transfer every month. Then we can also create the number of days in advance. Let's say 5 days in this case. Then the interval will be on a monthly basis. We want this amount to be transferred on the 1st of every month. Okay, so let's say the 1st of October. So this amount, the 500, will be transferred from the checking to the savings. Let's say we have sales tax, or at the end of the year we want to set up an amount to pay our tax liability. So in that case, we can set up a monthly transfer where in every month we can maybe say transfer $500. So we'll put it in a savings account so that by the end of the year we have something to pay our tax liability to the IRS or to whatever taxing agency. So once we finish, we can click save this template. So now if we want to use this template to post the transfer transaction, we can just go to the gear icon and select recurring transactions. So now we can see the transfer, the monthly transfer. We can edit these, or we just use this template. Let's say we want to book our transfer first for today. We can choose the dates that we want to even though we've set the dates for this amount to be posted on the 1st of every month, but we can still post if we want to post it. We can click save and close. So now once we save and close, meaning we've entered the transfer. So if we go back to, let's say we want to see these transactions, we can go to report and run a journal. So if we say journal, so let's say in this case we want to look for the transfer, right? We can go ahead and do a customization, or we can filter. If we filter, we can say by transaction type, so equals. So what are we looking for? Let's say transfer. So if we save it, so you see it will show us the transfer. So this is how we find the transaction. So you see, you can see now that the transaction, this was the transaction that we've just recorded. So there is a transfer from the checking to the savings account. So if you want to see now the balance, you can now see the checking account balance is now 701. Okay, whereas the savings, it was initially 800, now it is 1,300. So that's how to record a transfer transaction. Thank you for watching. Please don't forget to subscribe, like if you like the video. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 32, reconciling account. Reconciling account balances is crucial to ensure that the client's bank balances align with their financial data. By connecting the client's bank and using the reconciliation tool in QuickBooks Online Accountant, you can easily match transactions and reconcile their books. It is a best practice to reconcile accounts on a monthly basis to ensure that what the client have in QuickBooks Online reflects the actual income, expense, or other cash movement and adjustment. So after reconciling the bank and QuickBooks Online, so the difference should normally be 0. Before you can do a reconciliation of account, make sure that you have categorized all the transactions in QuickBooks Online. So let's say if you have bank transactions in the bank feed, make sure you have categorized all the accounts in the bank feed before you can do a reconciliation, because QuickBooks Online don't match transactions that have been reconciled. So make sure all the transactions that should have been recorded have been recorded before you can do the reconciliation. So reconciliation normally can be done for credit card, also for checking account. So why do we do reconciliation? The reconciliation is part of the internal controls. You know, like whenever we audit clients, we always look out for controls. What are the controls that the clients have in place? So one of the controls that we normally look into is the bank reconciliation. So we want to see that the client has been doing their reconciliation on a monthly basis this? Because reconciliation is a detective control that will detect any errors in the transaction. Let's say if the bank record bank charges, then the clients will not know about those charges until they do reconciliation most of the time. Let's say if somebody make a direct deposit and deposit the money directly to the client's bank account, the client might not know, except if there is an automated notification, then the client will know about the transaction. But most of the time, they will find out about those those deposits when they do the reconciliation. So that's the reason why it is always advisable to do a reconciliation, at least the bank reconciliation, at least on a monthly basis, because sometimes the client might have like other bank accounts. What we normally look into more are those operating accounts. If the client has like operating accounts, we want to make sure that there is a reconciliation of those accounts, even if the account balance is immaterial. In order for us to reduce our audit risk to an acceptably low level, we normally perform tests. We normally re-perform the bank reconciliation for those operating accounts, because as an auditor, we normally have some procedures that we re-perform. Then we also have observations that we perform sometimes. So re-performance of the bank reconciliation is part of the audit procedure that we normally perform in most of the audit that we do. So that's the reason why before you can do any reconciliation, make sure the client has recorded all the transactions that they should have recorded, because that will mitigate the amount of difference. Because if the client failed to record transactions, whereas those transactions may have been posted in the bank, then those will lead to a difference or variance. Then sometimes the client might record transactions. Let's say they might pay checks to vendors, but those checks might still be outstanding. We want to make sure that all those outstanding checks have been reflected in our bank reconciliation. So that's the reason why we do reconciliation. So today, let's look into now the bank reconciliation in QuickBooks Online, because this is a procedure which is normally performed manually. Some clients will perform this manually, whereas QuickBooks has simplified the process. If you have connected the bank account to your QuickBooks Online account, then you will be able to streamline this process as much as possible. So for our reconciliation today, we're going to use the training company that I created, which is just for this training, for this QuickBooks Online. We have gone through the bank feeds. If you haven't seen that video yet, I advise you watch that video before looking at this bank reconciliation. So you can see here in the bank feed, we have all these transactions for review, categorized, transaction excluded. So you can see if you have already connected your bank account to your QuickBooks Online, it is easier to add transactions. So now we're just going to look into the bank reconciliation. So the bank reconciliation, you can access this bank reconciliation in 3 ways. So for the QuickBooks Plus account, which is the client account, you can access the bank reconciliation by going to transactions, previously banking, but because now QuickBooks has made some updates. So now you go to transactions and then go to the reconcile, or you can go to settings and click reconcile. Whereas for the Pro Advisor account, which is the one we're going to use, to access the reconciliation, you have 3 ways. Okay, you can access it from the accountant tools and then reconcile. You can also access the reconciliation by going to transaction and click reconcile. Then you can also access it from the gear icon and click reconcile. So these are the 3 ways you can access the bank reconciliation function. Okay, so now to reconcile an account, we can select the account from this account, the drop down arrow under the account. Then we select the account that we want to reconcile. So let's say credit card account like Visa, MasterCard, etc. We can select those accounts from this account section. So in this case, I will just select the checking. Then also you can see you have the summary and the history by account. So the history here will just show you when was the last time we did our reconciliation. So let's say if we select the checking, you can see if you select the reporting period, let's say all dates, you can see all the dates when when the reconciliation has been performed for this specific account, then also we can say for the last 365 days. So if we say 365 days ago, which is for the year, just for 1 year, we can see all the reconciliation that has been performed. So let's say if you are taking a new client, this is an area also that will tell you if the client's books has been reconciled, because you will be able to see how many times the books has been reconciled. Because if the books have not been reconciled for a while, then that will tell you that there are issues with the books, because if there is no reconciliation, they might not be able to detect errors. Then you also have the summary. So as you can see, this is just the training account. This is not my pro advisor account. So this will give you a summary of the account, the type, then the ending balance, and then the date it was reconciled. So now let's go back to the reconcile. So now we can see we're about to reconcile our checking account. So currently we have 0 beginning balance, So now in order for us to reconcile an account, we need to know the ending balance from the bank statement. That is, we're not going to see any bank statement right now. Let's see if I can pull a sample. Let's see. So you can see this is an example of a bank statement. So this is not what we're going to use, but I'm just trying to show you. So you can see the closing balance, right? This is the ending balance. This is the ending balance as per the bank statement. You can see the opening balance. This is the beginning balance as per the bank statement. But what we are interested in is just this closing balance. So when you go to the bank statement, you just extract the closing balance as per bank statement, and then look out for the date. For every month, the last day of the month always will be the period end. That is the end date, the bank statement. Let's say we are in October. So the bank statement that we have access to right now will be September 30. So it will be 9/30/2023. So that's how to find the balance. That was just to clarify. So now you can see the beginning balance is 0. So this beginning balance, we don't have to enter anything here. This is pulling from, let's say if we had a prior year a prior month reconciliation, what was on the ending balance from our prior month will be the beginning balance for this month. So now the ending balance here will be the amount that we see on the bank statement, which is 400 in this case, and then the date. So today we are in October, but the bank statement that we're going to use was actually for September. Okay, so here we can add, like, enter service charges or interest earned if necessary. Let's say if there was a service charge in the bank statement that we know may have not been added to the QuickBooks Online, we can add it here. If we've connected our bank account, these service charges would have pulled directly from the banking center. So as long as we've done our categorization of our transaction, then we may have already added the service charge in that case. But if we are adding our transaction manually without going through the banking center, then it's possible that we have to add the service charge in this account, because those service charge will only show in the bank statement but not in our books. So that's the reason why we always have to add it if it has not been added through the banking center. So now once we've added all if let's say some checking accounts will earn interest. So if we've earned any interest, that interest will only show up in the bank statement. We won't be able to see it until we receive the bank statement, or maybe we look at our transaction feed. If we have access to our online banking, we can see that, but most of the time we have to reconcile our book. So now once we've entered all the information that we need, we can click start reconciling. Okay, so we currently have a difference of 400, right? So this difference of 400, after reconciliation, this balance should be 0. So this is what you should always focus on. If this balance does not net to 0, meaning there is an issue. So you always have to make sure the balance here, the difference is 0. If it is not 0, meaning there was an issue. issue. Let's say also there are instances wherein the beginning balance in our reconciliation might not be correct. Then we might have like this beginning balance, so we'll get a pop-up message that will tell us that the beginning balance that we have is inaccurate or maybe it's wrong, whatever the message will be. But yeah, you will get a pop-up. If, for example, if after making our reconciliation last month, then somebody go back and delete a transaction in our previous month, that is the month of August, then we'll end up with issues. Now to reconcile, we can see here we have the statement ending balance. This is the balance as per the bank statement. You can see the statement close date. This is the 9/30/2023. So we're doing a reconciliation for September, the last day of September 2023. So that's why you are seeing that balance here. So you can still see the beginning balance is 0. Then the payment here currently is showing 0. The cleared balance is also showing 0. Then the deposit. So payment meaning what we pay to vendor or whoever the person might be, whether be it to taxing agency, whatever payment we made, it will show here as we continue to click here the reconciliation. Whereas for deposit, it will show the amount in the credit, the amount deposited to the bank. Okay, then you can see here you have the option to save for later, edit info. Let's say we want to change the beginning balance or the ending date, we can change all that. So we have that option to make the update here, but in this case we're not going to change. You can also say save for later. Let's say we run into issues, we cannot finalize this reconciliation today, we can save for later. So once we come back, we can continue or resume our reconciliation. So you can also say close without saving. Let's say we want to close without saving, so we can close without saving by clicking this. Then also finish now. Never click finish now if you know that we still have a difference, because you see if you click finish now, meaning our ending balance will not reconcile and we will run into issues when we go back to reconcile the following month. So it is a best practice to make sure you have 0 difference before you click finish now, because you wouldn't want to get issues or errors. Then also you can see if you just want to see just the payment, you just click payment, you can see just the payment. If you want to see just the deposit, you can just click deposit. So now you will be able to see that. But if you want to see all the transactions, you can click that. Then sometimes you also have the filters here. You can filter whatever if you are looking for a specific payee, or maybe you want to filter for a specific transaction type, you can do all that filtering here. Then if you want to see the status, whether cleared or not cleared transaction, you can do all that filter and then click apply. Okay, you can also clear all the filters. So if we have a payment, so payments are something that was debited in the bank statement. So this reconciliation tab is showing exactly what the bank statement is showing. So you can see the normal double entry for the cash. You can see the cash will have a debit balance and then credits for anything that is reducing the cash balance. So but in this case, our bank reconciliation, is reflecting how the bank looks at transactions. That's why you can see here the payments are in the debit side from our journal entry, even though they don't say debit or credit, but payments are being debited in the bank statement, whereas deposits are being credited. So that's why you're seeing the payments, they are in the debit side, even though they don't say debit, but you can see them on the left, whereas the credits, this is a credit, even though they don't say credits, but it is on the right. So this is kind of like making it easier for us to compare directly to our bank statement. So if you have a debit of 500 here, you look in the debit side of the bank statement to see if this amount was there. Yep. Now we also have a credit of 1000. We'll look in the credit side of the bank statement to see if that amount was there. Yep. So now we have a debit of 100. We look in the bank statement to see if that amount is there. Yep. So now you can see we have reconciled our our account. So now the difference is 0. You see? So you have the bank statement ending balance, and then the cleared balance is 400, the bank statement ending balance. So now we just click finish now. So once we click finish, we have completed our reconciliation. So now you can see this is now our beginning balance. The 400 is now our beginning balance. Let's say if we go now to the month of October, let's say the 10/31st 2023, now this will be our beginning balance. Then we can just enter the ending balance for the month of October and the ending date for the month of October. Once we enter those dates as per the bank statement, then we can proceed with our reconciliation. So now if we look at the history by account, if we want to see our reconciliation history, you see previously it was blank, but now we can see that we have the history here. We know we did a reconciliation for the statement ending 9/30/2023, and then it was reconciled on October 2nd 2023. The ending balance was 400, changes 0. Attachment, if we want to attach any bank statement, we can do that. We can also view the report. So normally, as a best practice, some people will just attach the bank statement so that if somebody want to review, it is easier to do that. Okay, so that's how to do bank reconciliation. Thank you for watching. Please don't forget to subscribe, like if you like the video. See you in the next video. Thank you. Welcome to the channel. Today we're in chapter 33, correcting beginning balances for reconciliation. To reconcile an account in QuickBooks Online, the opening balance must be the same as the closing balance from the previous reconciliation. However, this might not always be the case. Discrepancies in the opening balances could arise from someone deleting or modifying previously reconciled transactions. As soon as you start to reconcile an account, QuickBooks Online immediately flags any issues with transactions. When it comes to discrepancies in the beginning balances, you initiate a new reconciliation. You enter the statement ending date and ending balance. If QuickBooks Online detects that the beginning balance could be inaccurate, it displays an alert on the reconciliation screen. So what could normally cause the beginning balance to be incorrect? QuickBooks Online calculates the beginning balance from the sum of all transactions posted to the account that are marked as reconciled. The beginning balance could be incorrect due to the following. Changes have been made to one or more transaction marked as reconciled. For example, a transaction was deleted, the transaction amount was changed, and the transaction was manually unreconciled in the check register by changing the status from the reconciled to clear or no status. It could also be due to changing the bank or credit card source account or voiding a transaction. One or more transactions have been manually marked as reconciled by changing their cleared status to reconciling the register. QuickBooks Online is including transaction in the calculation that it shouldn't, like where there is a duplicate. So how do we identify the cause? So in order for us to identify the cause of the discrepancy, you have to select the we can help fix it. So let's go through, because we have covered the reconciliation. So this is currently the ending balance. So now we're going to make changes to this reconciliation, to this opening balance, because this was the ending balance. Now if we want to start a new reconciliation, you can see this will now become our opening balance. I'm going to the check register to make some changes that relate to changing the status of a reconciled account transaction, then also 2, changing an amount, then 3, deleting an amount. So first, let's change the status of the reconciled transaction. So let's go to the check register. So we go to the chart of account, we look in the checking and view the register. So now you can see in this register we have the transactions. So you can see here on the status, you can see this is with an R, right? It means reconcile. So if we click on this, it will open up this detail. So now we're able to change the status. Let's say if we change this from R to blank, meaning no status, then if we click it again, it will change it to C. So now if we save, you see QuickBooks will give us a pop-up saying the transaction you are editing has been reconciled. Saving your changes could put an out of balance the next time you try to reconcile. So you see, so now let's say yes. So if we go now to reconcile, let's say we wanted to do our reconciliation for the month of October. So you can see we have this pop-up message which is saying your account isn't ready to reconcile yet. But you can see below it says your beginning balance is off by 100. We can help you fix it. So once we click this, we can help you fix it. You will be able to see the current issue. You can see the status here. So here right now we have the 100. They say that the beginning balance is off by 100. And if you look on the status saying C, so in this case we just have to click on that status and then click it again. Now it changed to meaning it has been reconciled. So now let's save. So if we click save and done, so now our balance has been reconciled. So our beginning balance is now ready for reconciliation. So if you haven't seen chapter 32, I advise you watch the video on reconciliation. So the next one is changing the amount after we have reconciled the account. So now let's go back to the check register. So the amount we're talking about, the amount relating to the previous month, because this is now in September. This was in September 9/27/2023. So now we're going to change the amount to see the impact this will have. So you see currently the check register is showing the status of R, meaning it has been reconciled. So if we go back and click on this, then we change this amount to 200 instead of 100 and save. Now let's go back to reconcile. You will see that we still get a pop-up saying your account isn't ready to reconcile yet, but we can help you fix it. So if we click on this, it will take us to here. So now you can see on this report, you have the reconcile amount, which is the correct amount after we've made the reconciliation. So now the current amount that is in the check register is saying the 200, which led to a difference of 100. So in this case, all other things being equal. So now if you look at the change type, this will tell you the issue that we need to fix. So previously, because the status was changed, they told us that status change. So now for us to, because it's an amount change, you will see the status type. Here they say reconcile in the register, meaning it has been reconciled. So no issue with this one. So now let's click on this to change the amount back to 100, which is the correct amount. So we click save. So once we click save, you see the variance now becomes 0. So you see now the pop-up message has appeared. So the last one is to delete a transaction. So now let's go back to the check register. That is the transaction that we're talking about are transactions that we've already reconciled. So let's go to the check register and delete this transaction. So if we click on this transaction and then click delete, you will see this pop-up message will say you're about to delete XYZ. We click yes. So once we click yes, the transaction has been deleted. So you see now we have an ending balance of 500 instead of 400. So if we click reconcile, you can see now we have this pop-up message which is saying your account isn't ready to reconcile. So now we can click fix. Please note that when a transaction is deleted, we cannot undelete that transaction. So the only way to correct that issue or the error is to re-enter the transaction in our journal entries by booking a journal entry. The only way to do that is through the audit log, because the audit log will log all events that happens in QuickBooks Online. So let's click we can help fix it. So now you can see this is the report, which is the reconciliation discrepancy report. So now let's see what happened. We have deleted transaction. Okay, so we can see this other deleted transaction. This is a previous transaction. So the one in question, you can see here the total difference. So this is the one you should focus on, not just this detail. So the variance, the discrepancy, this difference is what you are trying to solve, which is 100. So now we're looking for a 100. So we notice that there are a few details about this transaction in this report, but but there is no information. Even if we click it, nothing will happen, you see. Whereas for this, if we click, we're able to do changes and edit, etc. But for deleted transaction, there is no information on it unless we click the view. So if we click view, it will open in another window, which is the audit log. So this audit log, you can also access the audit log by going to the settings. So once you are in the settings, you can find the audit log. So this is it. So now let's go back. So you can see in this report, we have events. So you can see there was an edit. We also have deleted by Fuller at 5:31. So this report will show you what events that took place, who deleted what. So you see, so now we can see the transaction that has been deleted. So if we click on it, it will show us. So now if we click on this to see the detail, mind you, this audit log will just show us the event and what happened, you know, but there is nothing we can do here unless we go back to re-enter this transaction by booking a journal entry. So now you can see this is the transaction, you know, it is a charitable contribution. Then we have that's the description, and the account is also to the charitable contribution, the amount. So the key thing that you should take into consideration is this amount, then the journal entry number, which is number 8, then the date. We want to make sure all this information is the same when we are going to re-enter this transaction, because we don't want to have like enter a different amount or different date, meaning it won't work. I mean, there will be still a discrepancy. So we want to make sure that everything, all the information that should be on this transaction should be entered on our re-entry. So I'll push this to the side. Now let's open our journal entry. Mind you, if you haven't seen our journal entry tutorial, please see the previous chapters on journal entry. So the date, so we're going to enter the date. The date is September 27, and the journal entry is journal entry number 8. So we change that the 8, and it's not an adjusting entry. So you can see for if it was an adjusting entry, so you can see here on the adjusting entry, the status is false, meaning this was not an adjusting entry. Okay, if it said true, meaning it was an adjusting entry, but in this case it's not. So we're going to just enter as a journal entry. So the account here is charitable contributions. So we look for charitable contributions, and the amount is 100. That is the amount in green, which is the debit, and the credit is there was a credit to the checking. Okay, so the description, sorry. So the description should be charitable contribution to a political party. Okay, so now the credit now should be checking, because this amount was credited to checking. So once we've entered all the information, everything looks good, we click save and close. Okay, so even though we've entered this entry, the issue will still remain. We will still get this pop-up because the status of this account has not been updated. So now to update the status, we go back to the chart of account, then we view the register. So now you can see the balance is now correct, but it's just that the reconciliation has not been changed. So we go to the register. So you can see the status here is blank, meaning no status. So now to change it, we click on that and click again. So now you see when you click on it, it shows C, and then you click on it again, it changes to R, meaning reconcile. So now we click save. So once we click save, now we've corrected the issue. So now if we go back to reconcile, you see, so now our error has been corrected. So whenever we are correcting a deleted account, we have to always make sure if this transaction that was deleted was actually added from the bank feed, we can go to the bank feed and then refresh our bank feed. So once we refresh, then the transaction will likely pop up. So let's say if the deleted transaction was actually added through the bank feed, then to correct that error, we can go back to the bank feed and refresh our transaction. So once we refresh, then we can see the transaction that was deleted. We can just easily add it back or do a match. So once we add it, then we can go back and change the status to reconcile. So now undoing a reconciliation. So let's say after we've made our reconciliation, we decide to undo the reconciliation due to this errors, because sometimes the reconciliation or our reconciliation might have so many errors in a way that the only option we have is to undo the reconciliation other than like correcting the errors on the opening balance. So if in an event where we know there are so many issues with the opening balance, we can just undo. Remember that when undoing a reconciliation, this can only be done by someone with accountant access. That is, accountant users are the only one. The QuickBooks Online accountant users are the only one with access to undo a reconciliation, whereas the clients don't have that access. So in order for us to undo a reconciliation, let's go back to the summary. So you click on the view the history by account. So once we click history by account, we can see the view report. On the action column, on the view report, we click the down arrow. You can see print undo. If we want to undo, we can just click undo. But in this case, I'm not gonna undo this reconciliation. So that's how to undo a reconciliation. Thank you for watching. Please don't forget to subscribe, like if you like the video. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 34, basic reporting options. Client can run report to get an overview of data such as a simple statement, gross profit. They can also access detailed report that show a breakdown of individual transactions in a particular period. The QuickBooks Online Report Center helps clients to find the report they need by browsing report or by using the search function. Clients can also run quick report to gain insights into a specific area of their business. Two of the most frequently used report types are the summary and detailed. The summary report shows the aggregate total of all transactions for a list name. This report provides an overall view of your client's financial information for a reporting period without the need to look at all the details. Two examples of summary report that client needs to be familiar with are the profit and loss and the balance sheet. See, this is the balance sheet and the profit and loss also. This is the profit and loss. Let's say this year we run the report. This is it. Other examples of summary report include the sales by customer. So we have the sales by customer summary. So the sales by customer summary display the total sales recorded for each customer. So you can see Amy's, you have 630. We have Paulo Cars also have like 2,194. So this is the sales by customer summary. Then we have the account receivable aging or the AR aging summary. So the AR aging summary. So for these, you can browse the reports or you can search. Okay. So now let's look out for the AR, the account receivable aging summary. You have the account receivable aging detail, the account receivable aging summary. So this is the summary. It has all the account receivable by age. So you have the first from 1 to 30 days. You have the current that is less than 1 day. Then you have the 1 to 30 days. Then you also have the 31 to 60 days. So this is the aging report summary. It doesn't have like the breakdown. If you want to see like the breakdown for this customer, you can click on this amount, then you can see the breakdown of the invoice. Okay, then we also have the account payable summary. So the account payable aging summary. So this is the account payable aging summary. Let's see this. So you can see this is the account payable aging summary. It lists all the vendors and the amount outstanding for each vendor by age. So you have this here, the under the current bucket, there is 0. Then also the 1 to 30 days bucket, it also has 0. The 31 to 60 days bucket, it has 0. So the vendor, or I mean the account payable aging is currently mostly mostly at the 61 to 90 and the 91 and over, which means, well, the client is kind of slow in paying, or maybe it has like good credit terms, where they will be able to pay a longer period. Then this could also show that we're kind of behind in making payment to our vendor. This can also show a risk. It all depends on the client's agreement with the vendor. Maybe the vendor might give them option to pay maybe in 90 days or more than that. So it all depends. So if the longer it takes for the client to pay their vendors, meaning the client will be able to boost their cash flow position. But also if if they don't have like the option to pay their vendors on a later date, but the delay is due to maybe cash flow problems, then that's also a signal of liquidity problems. So now we have also the trial balance. So the trial balance display the balance as of the report date for all balance sheet accounts, and also a summary of activity during the reporting period for income and expense account. So let's see the trial balance. So this is the trial balance. Let's say this here. So normally in audit, the report that we normally ask for from the client to provide, from this trial balance, we will be able to import the trial balance to the software that we use. So it will show us the balances for each account. Then we can set our materiality level to see which account is material, which account we will be testing, to set our scoping. So based on this trial balance, we can also run our analytic, like planning analytics or preliminary analytical procedures to see which accounts have significant changes or significant unusual changes. So that's why trial balance is one of the key reports also clients might need to know about. Then we also have the customer balance summary. So the customer balance summary shows each customer's total open balance in account receivable. So let's run that. So this is the customer balance summary. So you can see Amy currently has like 231. So this shows all the open balance. Okay, and we also have the vendor balance summary. Let's look at the vendor balance. So we have the vendor balance detail and the vendor balance summary. So this shows each vendor with an open balance in account payable and the open balance amount. You can see the vendor name and the amounts, the total. Then we have the inventory valuation summary. So the inventory valuation summary lists each inventory item along with a stock keeping unit, which is the SKU, the SKU, quantity on hand, and asset value, and also the calculated average per unit. So let's take a look at it. So this is the inventory valuation summary. So you can see the calculated average value here and quantity, the SKU. So for the detailed report, they provide a comprehensive information about transactions as well as summarizing the transactions. This report contains individual transactions which offer an additional layer of detailed information about the customer, vendor, expenses, and more. Detailed report lists each transaction, allowing you or your client to drill down into any individual transaction, open them and review, potentially edit or delete them. Most summary reports have corresponding detailed reports, like I showed you previously. Other examples of detailed reports include the transaction detail by account. So you can see this transaction detail by account. So here you can see, like, for example, let's customize the date this year. So this is the report. So you can see you can also expand. You click these arrows to expand. But if you want to go expand all, you can just click these three dots. So now we've expanded all the accounts. So that's one of the detailed reports. So the transaction detail by account lists all transactions for a period summarized by account. This report is a detailed version of the trial balance sheet. See, this is the detailed version. At the end of the day, if you want to prove the completeness of this account, you can also summarize the totals and tie back to the trial balance. We also have the account payable aging detail. So the one that we just ran, So you see you have the account payable summary and account payable aging detail. So this shows the detail. So you can customize most of this balance here that you see. Then also from the summary report, if you click on the final balances, it will give you the detailed report. So see, this is the detailed report for the AP aging. So we can customize this as well. So you see, we can divide by 1000, or we can also change the dates. If we want, we can move this to the top, so we can arrange the order of the dates. We can also check if we don't want to show certain fields, we can check this. We can also check create dates created by, if we want to add the individual that create this. So currently these are the selected bills. These ones are currently inactive, so if we select it, will go to the top. Then we can also show the negative numbers in red if we want. So once we finish, we can run the report. So now you see it shows the created by here. So yeah, so let's say if we want to run a detailed report from the summary, let's say we go to let's go back to the detailed report. Let's go to the summary, the account. So the account payable summary, this is it. So now if we need the detailed report, we can just click on it. So you see now it shows us detail breakdown. This is the other way of running a detailed report. So we also have situations whether we can use a summary report or a detailed report. We use a summary report to get an overall view of the financial information for a reporting period without looking at all the details. So if we don't want to see all the details, we can use summary report. We use a detailed report to analyze the makeup of balances in a summary report. So if we want to see like the makeup, so you can see currently, like we can see the detail here. You can see the breakdown of the bills here. So you can see this is the 31 to 60 days on the top. So the total here, so the total for the 31 to 60 days, this is it. So this is the total for this top. So for the bottom part of it, this is the total for the 1 to 30 days. This is the total. Okay. Then also we use detailed report to analyze the makeup of balance in a summary report. So then we also have other report type like the list report. So report like the account list, which is the chart of accounts. If we want to run the chart of account, so let's say, so the account list is actually the chart of accounts, you see, but this is in the form of a report. Let's say if we want to generate a report, so this is it. It shows you the full name, the account type, the account subtype, and the description, also the balance. So you can see that only the balance sheet will show balance. The income statement account has 0 balances here. So this is the report. If you want to generate like a chart of account to export, this is the report that you run the account list. Then you also have the product and service list. So the product or service list, this is it. This is the product or service list. You can see all the product that the company has. Okay, these reports allow you to display additional fields associated with that list. You can add additional fields to the report by using the customize, just like I did previously. Some list reports, such as the customer contact list, can be grouped by various criteria, such as the billing, zip code. Clients can use the list report if they want a report related to one of their senders, but they don't need to see the transactions. The advantage of using the list report is the ability to customize and filter to see what they want. So yeah, like I said, you have the option to browse. You also have the option to search. For me, I feel like searching is the easiest way. As long as you know the report name, you can easily search. So you see, this is the customer contact report. So if you want, you can make a compact view. So this is the compact view. So if you like, you can also change it to normal view. Okay, then you have the option to you can sort. See, let's say you want to sort by alphabetic order. You can just click on this column header. You can also sort by the telephone numbers. So let's take it back to 10 in order. I mean, from A to Z. So you can see this is currently sorted from A to Z. So if you want, you can sort it from Z to A. So whatever column of your interest you want to sort, you can just click the column headers and it will take you to that order. So let's say if you want to group all the California the C is you sort the state. So now you can see all the Arizona customers. We have 2. Then California, we have a lot of customers from here, and then 2 New Jersey. So this is how you sort it. Then the agent report, just like I said, we already discussed that. Then we have the special report. The QuickBooks Online also includes special reports such as the business snapshot. You see, so this is the business snapshot. So here you have the profit and loss. This is also the profit and loss, but this is the income section of the profit and loss, and this is the expense. Then this is the previous year income comparison. So it compare both the current and the previous, and this also compare the expense for both the current and the previous. Currently, you can see the prior year numbers, no prior year numbers here, Joe. Then also we have the who owes me, the receiver, the customers. You can sort this customer amount from smallest to largest, or from largest to smallest. So by clicking the header, then also we have the vendors here. You can sort the vendors also from smallest to largest, largest to smallest. So for this report, you can change whether you want to see this year to date or last month. So it will show you. So currently you see a large portion is the landscape services. It's what is bringing more money to the business. Then the second largest is the design income. Okay. Then the expense, you can see miscellaneous expense is the largest. Then we also have second by the other expense. So if you wanna, we can click on that also to see the drill down of the other expense. You can run that report as well. We can either export or print, email. So we all have all those up there. If we go back, so we can go back to report. We have the audit log. So the audit log, you can find it in the gear icon, from the gear icon. We also have the audit log from the business overview here. Okay, so yeah, this is the audit log. It shows all the events. This includes transaction entered, reconciliation completed, recurring transaction created, and the sign in and sign out by users. So it will show all those events. If you're interested in any event, you can click view to see the detail of that event. Then we also have the dashboard. So the dashboard, this is the dashboard. So the dashboard has like the get things done. So the get things done has the task base, wherein this will guide the clients which task needs to be completed. Currently we have 10 unpaid invoices, so if the clients can send follow-up. Then we have categorized 33 transactions. So if we want to go see this event, we can click go, and it will take us to that event. So currently you can see these are the overdue invoices. So if you like, we can send follow-up with the customers to know why this has been overdue, or send reminders. Then also if we go back to the dashboard, we can see we have the transactions that needs to be categorized. So you see these are 25 for review, so we can review and categorize them based on our understanding of the client. Then we also have the business overview. If we go back to the dashboard, so the business overview, this is it. So this shows us the chart. Like for example, you can see the cash flow forecast. Currently we have a negative cash flow forecast. So you can see from here, you can see that if you hover over the charts, you can see the money out, money in. So the green is money in, money out is this blue. You can see the money out for October is 1,955, and the money in is 3,000, which is good. Then if you look at the money out for September, it's higher than the money in. As you can see, the blue is money out and the green is money in. Then also we have the profit and loss here, the connected bank. So if you want to drill into the detail, you can click any of these to see the details. You can also see here the invoices, the expenses. Okay, let's say we want to see the unpaid invoices. So it takes us directly to those unpaid. So currently, like the gray is not yet due, whereas the orange is overdue. Okay, you or your client can run a quick report from the relevant account in the chart of accounts or the product and service list. So you can actually run a quick report. Let's say if we go to the chart of account, we can run report from there. Then also, so you can see here, let's say if we want to run the register for the check-in, we can just click run report. Then we also have the option to view the register here. Then we can like for example, also if we want to run like the sales tax liability, we can go to the tax center, the sales tax center, and run the relevant report. On the report, you can see report here. We say tax liability report. See, this is the report. Currently shows the tax name or the tax agency name and the total, gross total, and the non-taxable amount, if any, taxable amount, and the tax amount. So it shows all that details. So that this is how you run report. So that's the end of chapter 34. Thank you for watching. Please don't forget to subscribe, like if you like the video. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 35, the profit and loss and balance sheet report. The two most common important reports you and your clients need to be able to use are the profit and loss and the balance sheet. Running a comparative profit and loss report also allows clients to compare their business's current past performance with that of a different period. This can reveal cash flow trends in spending and earnings from the business. To run a comparative report, once we've run the profit and loss, we can then select compare to another period, let's say to the previous year. So we can say the dollar change and the percentage change as well. If we check this, it will show as a percentage of the. So once we finish, we can click out of it, click run. So you see now, after we've run this, you can see now the column for prior period and the change in dollars. Okay, so as how to run a comparative report. We can also change this to percentage of rows. So if we run this, so now you see you can get the percentage of rows, that is 100% of this amount. So you see that's how to run a comparative report. So unfortunately we don't have data in the previous year, that's why you are seeing 100. Okay, so now analyzing the profit and loss report, you can help the client understand the profit and loss report, how it can help them with financial planning. When analyzing the profit or loss, look for discrepancies or things that look out of place and make a review of the total income, these numbers, to see the composition of the total income. What is the total expenses? And you can drill down into the detail by just clicking on these numbers. So once you click on those numbers, you can go into the detail to see the breakdown. Okay, you can also look at the net income. You can review the net income to see maybe if we have the prior year numbers, you can look at this number compared to the prior year to see how the company's bottom line has changed year over year. You can also compare the sales, let's say the revenue, to the gross profit. You can also look at the uncategorized income and expenses. So if you see any uncategorized income or expense, you have to try to understand why those are not being categorized, to make sure they are in the proper category. Okay, then also we look at we compare the trend. Like in audit, we have what is called a threshold. So we can set a threshold. Maybe we can say any variance greater than 1,000 and maybe the percentage change greater than 10% be investigated. So if we look at the fluctuations, if we see a variance that is greater than 1,000, if that was our threshold, or maybe 2 million, if that was our threshold, then the percentage change also, if it is greater than 10%, then we can investigate to know what caused that change. So once we know the reason, then we can discuss with the client, or maybe we can ask the client to understand maybe there is a change in the business strategy. Let's say, for example, for account receivable, if we see there is a significant increase in the account receivable, we might want to understand why, because the risk of bad debt might increase. Then also we can look at the sales. If there is an increase in sales and there is a proportionate increase in account receivable, there is a possibility also that the risk of bad debt will increase, because it could mean that most of the sales is on credit, and we might want to review the credit policy or the client's credit policy to make sure that they are in compliance. The risk of bad debt is low. So those are some of the scenarios we might look into. Then also we can look at the advertising cost. If there is any advertising cost, we can divide it by the revenue to see the amount, the percentage of advertising to the revenue. So if we see a high percentage of advertising cost compared to the revenue, it means the return on advertising is very low in that case. So let's say we see 10% of advertising. Yeah, you can set up a threshold based on your understanding of the client. But yeah, the moment we started seeing the advertising is going up where revenue is not increasing, meaning there is low return on advertising. So some companies might have like a low percentage, maybe 3%. Yes. So it all depends on the company's policy. Then now we can go back to analyze the balance sheet. So for us to analyze the balance sheet, we can look at each bank account and also credit card account. We want to make sure that this 1,201 agree to our reconciliation, to the register. That is, we tie it to the subsidiary ledger. Okay, we tie this 1,201. So let's say this is for this year. So let's do a comparison. Previous year percentage of row. Let's run it. Now let's go back. Let's look at the check register. Let's say if we go to the chart of account, so this is the check register. If we view the register, you can see that this is the balance. So this balance ties back to our balance sheet amount. So meaning we're good. Okay, so let's go back balance sheet. This balance ties back to the check register. We run the report so you can see the percentage change. Unfortunately, we don't have the prior year. Then also we can look at the account receivable, the AR, to see if this ties back to the sub ledger. Okay, or we can also drill down into the AR to see the detail. Okay, you can see the breakdown of the account receivable. This is the transaction report. So if we go back, you can also compare this to the AR aging or the AR aging detail. So let's say that we currently have 5281. So if we go to report, account receivable aging summary, so let's say this year, so you see 5281.52. So yeah, the number ties. So this is the kind of comparison that we need to do. Then we also have to review the new assets purchase, because if the company buy new assets, we want to make sure that those assets have been recorded or have been placed in service. So if they've placed those assets in service, if they are depreciable assets, to determine the depreciation charge and the accumulated depreciation. So that's the reason why we need to review any new asset that the client purchased to see if they have accounted for all those assets and also the depreciation. Then the prepaid, we need to confirm that they were accurately categorized, because prepaid means we pay for a service that we've never used. We want to make sure that information is accurate. For loans account, we want to make sure that the loans account have been reconciled to the ending balance. So let's say we have a note here. We want to make sure this note reconciled to the loan account. Then the owner transactions, we want to make sure that if the owner make any capital contribution or distribution, we want to reconcile that back to the owner's account. We want to make sure the opening equity balance ties to the prior year equity. Then we also want to make sure the net income ties to the profit and loss. So let's go, if we can see 1642, let's go to the profit and loss to see what was the net income. So currently we have 1642. So if you can see the 1642 here, so this net income here is the number that we're seeing in the balance sheet currently. So yeah, we want to make sure this number ties. See 1642, and there was no retained earnings in the current year. So normally retained earnings is the accumulation both the net income and also the distribution there minus any. So what's left is the retained earnings. This is just high level. We don't go into detail like calculating ratios to diagnose any inconsistency. We don't go into that detail. So this is just a high level, basic understanding for QuickBooks. That's the end of chapter 35. Thank you for watching. Please don't forget to subscribe, like if you like the video. See you in the next video. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 36, reports to answer common questions. Sometimes with so many reports to choose from, clients may find it hard to select which report can help them drill into the data they need. The client might have the following questions. For example, who owes me money? The report to answer this question is the AR agent summary or detail. So let's see how to generate the AR agent report. The account receivable agent summary or detail lists all customers who currently owes the client balances and how old the balances are. This helps the client to prioritize which customers to contact in order for them to collect outstanding payments from the customers. You can see we have the age of each account receivable, so we've gone through this one, so I don't want us to waste too much time on this, but yeah, this is the one that answers the questions who owe me money. So this shows the customers that owes the business and how long it has taken. You can see some of these has been outstanding for more than 91 days. So the next question is, who are my top customers? So to answer this question, we normally run the sales by customer summary or detail. So the sales by customer summary or detail list out the client customers and how much income they generated in the defined period. So let's say if we go, let's say today, the period is today, and we run the report, you can see, so we have the option to filter this to see the top customers, because right now it is sporadic, but if we want to summarize this or we want to sort this, we can just click the sort drop down, then we click sort from descending order, that is from the largest to the smallest. So you can see right now we have the color cards is the top customer, followed by Freeman Sporting Goods, and we also have the Paulsen Medical Supplies. So this is the third one. So you can see from here, we know exactly our top 10 list. We have what is called concentration risk. That is, if most of our sales is highly concentrated to a specific customer, then there is a risk that if that customer goes out of business, or if we lost the contract from that customer, we might also go out of business. So that's the reason why sometimes it's good to do like a concentration analysis. So how we do that is by dividing the total amount that we generate from that customer, which is the sales by customer, divided by the total sales. So we can see the percentage. So normally, if it is more than 10%, we need to disclose that to whoever our stakeholders are, whether be it investors. We need to tell them that we have XYZ customer. We need to disclose that concentration risk. So then the other question also, what are my top selling or worst selling products and services? So to know the worst and top selling product, we have to look at the sales by product or service summary or detail. So this will tell us the top selling and the worst selling product. So here you can see we have the various products. So if we filter this or we sort this in ascending orders, we can see that we can also collapse this, so we can see the sales. So you can see the top product is the design. The design is currently 56% of sales. That is 56% of the sales is actually the design. Whereas the landscaping is also 42%, 42.87%. Then the worst is the pest control. So you see the pest control currently is 1.07%. So this is a great insight. So it will tell us exactly which product we really need to invest our advertising on and which product we need to discontinue. Because from here you can see that our design product is making a lot of sales for us, followed by the landscaping. So if we want to discontinue a product, even though some of these products might not be making large amount of sales, but maybe it might be contributing to our sales, because some of these products might not make much sales, but they might be promoting these other sales. Some products or department might not be making profit, but they might be contributing to the profitability of other departments. So you will sometimes find out only when you do contribution analysis instead of like just looking at the sales itself, because sometimes if you discontinue some of those products, you will end up losing the main product. Like the sales from your bigger picture might decline because of the product or department that you discontinued. So sometimes you have to do that analysis as well. This is just to explain that the design is making the highest sales, followed by the landscaping. So the other area also, we want to see how much do I owe my vendors. So we want to know how much we owe to our vendors. How much did we owe? Okay, so in that case, the report that we need to run is the account payable aging summary or detail. So we have the summary and the details. So we've gone through that. So now you can see this is the report. So this shows the outstanding amount for each vendor. So we can see if we sort this in descending order, we can see that currently, Diego's Road Warrior Body Shop has the highest. This vendor has the highest outstanding balance. You see, so if we are prioritizing, we can see which one we should prioritize first based on the age and also the terms. So currently, even though the vendor looks like it has 755 on the 61 to 90 days, whereas most of the other vendors we have above the 91 and above. So meaning if we have like good terms with this vendor, we can pay the ones over 91 days first, so we don't run the risk of losing our credit. So then we also need to know how much money did I make. So how much money did I make is the profit and loss. We've gone through that on our chapter 35. Okay, so we're not gonna run that. We're not gonna go into the detail, but that's the profit and loss. It's there to tell us how much money did I make, how much profit. Can I afford to spend money? This is the balance sheet. We've gone through the balance sheet on our chapter 35. It shows how much the business has in cash and assets and how much money it owes. If you look at the top side of the balance sheet, the assets, and then the bottom side is the equity and liability. So it's more or less, we look at the accounting equation, which says assets minus liability equals to equity. You see, so that's it. And we can also look at, so on the asset side we have the cash. So if we have cash and other fixed assets, we know we're in good shape to run the business, because if the business is not making money, and if you look at some ratios, some debts might have what is called debt covenant. So they might put restrictions on our liquidity ratios. They might say your quick ratio should not go below 3 or maybe 2. Then they might say your current ratio should not go below 3. Then they might say your gearing ratio should not go below X amount, So we need to comply. So that's the reason why when we look at the balance sheet, it will tell us if we have enough cash to fund our business operation. We also want to look at how much we owe other people compared to what we have, So we have like the debt to equity ratios that we normally calculate as well. So then we have working capital ratios also. But this is not it. This is just to help you understand when we say how much are we able to fund. Are we able to afford to spend? Are we able to spend more money? So that's the question. This is not the main thing. It's just to help you understand if we are able to spend more money. Then the other question is, how much is my inventory worth? So we want to see the worth of our inventory. So we run the inventory valuation summary, or detail. So we have the summary or detail. So the inventory valuation basically is showing us the quantity on hand, the quantity we have on hand and the cost. Okay, this asset value is just the cost, how much it cost us. Then you have the average. Okay, so this average is just this cost divided by the quantity, gives you this average. That is the price for one. So that's the main purpose of this report, is to show us the quantity and the asset value and the average. That is the cost per unit. So that's it. So if we want to sort this, we can also sort that. So you see currently, so we are looking at the ones with the largest is the design. The design currently we have 500, which makes sense because it's the product that is giving us the highest sales. So that's the reason why we have large value for that and the largest quantity for that as well. So if we go the next one, how much revenue is available to cover operating costs? This is also answered by the profit and loss, because if we have the sales minus the cost, it will give us the operating profit, right? So if we have the sales and less cost of goods sold, it gives us the gross profit. Then if we less our operating expenses, we arrive at our operating profit or our net profit before tax, right? That is if it's a corporation. But if it is like a private like the LLCs, those are pass-through entities. So in that case, we don't pay tax on those because the taxes for those entities pass through to the members, that is the owners. So that's the difference. So in this case, once we are able to generate revenue, then we know that our revenue is able to cover our operating costs, meaning we are profitable. We also have scenarios wherein our revenue may cover the cost, but we are not profitable. In that case, we are break-even. So meaning we make no profit or loss. So that's the point. If we make sales and do not make any profit, it means it's just cover our cost. That means we are break-even. The profit and loss also will show us how much money we earn and spend on each category. We've looked through the profit and loss. If you haven't seen our tutorial on chapter 35, please watch 35. Then the next one, which vendor may also be classified as 1099 contractor? So we want to know, because at the end of the day, according to the tax rules, at the end of the day, we have to file 1099s for any vendor or contractor that we pay more than $600. So we need to file 1099 for those vendors. So we want to know at the end of the day the vendor and if they have been classified as 1099 contractors, because most of the time it is critical to verify and validate which vendors will or should be issued 1099s at the end of each calendar year, because you have to send it before the end of January. So let's look at the vendor contact list. So to run the contact list, we go to the report and search for vendor contact list. So we go to report and search for vendor contact list. So now you can see this is the vendor contact list, but you can see we don't see the 1099 column. You see, so there is no 1099 column. So why? Because it has been hidden. So we click columns to show, you see, any column that has this I with a strike through, it means this is not visible right now. So if we want to show the 1099 for us to be able to track vendors with the 1099, we can just click this and click this also to show whether if the 1099 has been printed. So whatever column we want to show, we can just click to remove the strike through. So yeah, so now if we look for the 1099 column, we can see this is it. So now we know this vendor. What vendor is that? So that vendor currently has 1099. So we need to file 1099 for this vendor by the name of Bros Hannon Insurance Agency. So we need to file 1099 for this. So now let's look. Have we printed the 1099 yet for this? So no status right now. We don't know. But yeah, that's how to check which vendor we need to send 1099 for. Then if I show a profit, why isn't there be any cash in the bank? Because normally not all the time we have profit and still have cash. Most of the time, if we have profit doesn't mean cash. We have what is called called accounting estimate. So accounting profit is not always the same as cash flow, because the accounting profit is subject to accounting estimates, because the management have to use their professional judgment to come up with the accounting estimate based on industry best practices and also the financial reporting framework or GAAP. So we want to know, sometimes that's the reason why you can see profit but there is no cash. Then sometimes you might also see profit but there is no cash, is due to a lot of your sales are on credit. If you make your sales on credit, you are selling to customers on credit and the customers are not paying, which means your sales on the financial statements, if you are using the accrual method of accounting, because you have the accrual or the cash basis. So if we use the accrual, meaning we can recognize revenue after the earning process has been satisfied. That is, after we've satisfied the performance obligation, we have the right to recognize revenue. Let's say the customer buy a product online. If the customer buy a product from us, we have shipped the custom to the customer, and also we have FOB shipping point and FOB destination. If free on board shipping point, that is after we've shipped, meaning we have earned the revenue. Then in that case, we can send the invoice. We can demand for payment immediately. So meaning we can recognize revenue, sales for that. But if on the other hand, free on board destination, meaning until the goods are delivered to the customer before the risk and reward of ownership is transferred to the customer. In that case, we cannot recognize revenue until the customer receives the goods. So in situation wherein we have that scenario, then you might see, if we have the FOB shipping point, we might see that we have a lot of sales, but the customer hasn't paid because they haven't received the goods. Or maybe if they have received the goods, maybe the terms of the sales, they can still hold on to the cash until certain point before the amount is due. That is, if they don't have the incentive for them to pay on time. Okay, so those are the scenarios. You might see a lot of sales, but there is no cash. It's because most of our cash is being tied up in customer balance. In that case, that's why when we prepare our cash flow, if the receivable is increasing, it means we are losing money. That's why it's a cash outflow. We have to adjust it from our profit, our net profit, when we are trying to arrive at our adjusted cash from operating activities. We need to adjust for non-cash items like depreciation or amortization, then also gain on disposal of non-current assets. We need to adjust for all this stuff. So because if for other reason we have increase in inventory, it means we have spent more on inventory, meaning cash is out. We have paid for us to buy inventory. That's why the inventory has increased from the prior year to the current year. Because if the prior year we have 10,000 worth of inventory and suddenly this year we have 20,000, because we buy more, that's why the value has increased. So in that case, if we're preparing our cash flow, we have to take that into consideration, the adjustment. So let's run the cash flow. So those are the reasons why you sell, but you are not seeing cash. Your sales is increasing, but no cash is coming in. So because cash is with the customers. They owe the money. They haven't paid you yet. That's the reason why your cash is small, even though you are making sales. So this is the cash flow. So you can see the cash flow is divided into three main parts. We have the cash flow from operating activities, which is taking into consideration all those operating activities, and the investing activities. So if we look at the financing, so we have three: operating, investing, and financing activities. Then we have the cash and cash equivalent at the end of the period. In a perfect world, this amount should tie back to our cash, our ending cash in our balance sheet. That is if everything goes well. That is if everything has been prepared. But this is a sample company. I don't expect this to balance because we have a lot of adjustments or entries in the bank that has not been reflected. So this number might not be accurate. So the operating cash, you can see it starts with the net income. Then we have all the adjustments to reconcile the net income. So in that reconciliation, you can see AR, inventory, account payable, credit card, all the payables and all these short-term, loans, all will affect the operating because these are short-term debts. So they go to arrive at this reconcile or adjusted cash flow from operating. So this is the net adjustment of 253. So if the cash is increasing, we put it as a positive. If it's reducing, we put it as a negative. Then there are also instances when we have like depreciation, amortization. They also go to this adjustment because depreciation is a non-cash expense, but accounting allows us to recognize that as an expense. But when we look at the cash flow, we just focus on cash, something that is cash to us. So that's why we adjust depreciation. We add it back to the net income. It doesn't affect cash. Why should we put it in there? So we add it back. Amortization, we add it. Gain on disposal, we add it. Gain on disposal, we deduct because we have the gain on disposal actually go to the investing activity. We have the sales proceeds that we recognize on the investing activity. So because we recognize the sales proceed already includes the gain on disposal. So if we recognize the gain on disposal in our operating and then we go back and recognize the sales proceed in our investing, meaning we have double counted our gain. You know what I'm saying? So it has double counted the gain because to arrive at the gain is sales minus the carrying value. So that gives us the gain. We are also going to recognize our sales proceed in our investing activity. That's the reason why we have to remove it from our accounting because accounting already recognized the gain. You see, the accounting profit only recognized the gain on disposal, but did not recognize like the total proceeds, like to say, okay, the sales proceeds, only the gain. That is cost minus the carrying value gives you the gain. That's what goes in the accounting profit. Whereas the sales proceeds has not been included. So that's why the cash flow only corrects the gain which was recognized in the accounting by deducting it. If it was a loss, we add it back. If it is a gain, we deduct it. What gives us a loss on disposal? If the carrying value of the asset is greater than the proceeds, we have a loss on disposal. So in that case, we add it back to our profit because when we have a loss on disposal, when we recognize it in the accounting profit, in the income statement, we deduct it from our income. So you see, but it's not actually, we don't have to deduct it. That's the reason why in the cash flow, we add it back. So now to arrive at our net cash provided by operating. Provided, if it is positive, it is provided. If it is negative, used, because we use those cash for operating. But in this case, it's positive cash flow, which is a good thing. Then the cash flow from investing. So you see, cash flow from investing, you have the truck, the cost of truck, that if we buy a long-term asset, a fixed asset, so the cost goes there. Then if we sell also a fixed asset, the proceeds on that sale goes in here. So that's why we have the cash flow from investing. Cash outflow right now. The cost is an outflow because we pay to buy the asset. But if it was proceeds, meaning we receive cash for that. Let's say we sell our old motor vehicle for 5,000. That's a proceed to us. So meaning we receive that proceeds. How did we recognize the proceeds? We debit cash, right? So we debit cash for the proceeds that we receive. Then we account for the cost of the asset. We remove it. Okay. So we remove the cost of the asset. The difference is either gain or loss. So that's how to account for the disposal. That's the end of chapter 36. Please don't forget to subscribe, like if you like the video. See you in the next video. Thank you. Hello everyone, welcome to the channel. Today we're in chapter 37, customizing report. Sometimes standard report might not present the information clients are after in the most meaningful way. Here is how clients can customize reports from the header section. So if we click the balance sheet, for example, we have the report period. These sections allow clients to select or customize the time range for the report to cover. So let's say if we want to say this year, we can select this year. That is, the report will start from January. I mean, the period will cover from January 1st, 2023 to December 31st, 2023. So if we say run, you can see this is the report for the whole year. Then we also have the display by column. These options allow clients to display the data group in columns. We can group here by days, weeks, and also months, quarters, years, customers, vendors, or products or services. So let's say if we group by years and run, you can see we have the January to December. Let's say if we want to like get a monthly report, balance sheet, or income statement, we can say by month and run. So now you can see we have the report, the amount for January. So you can see January has 0 balances. Then we have February also 0. So most of the transactions started in the month of May. So you see, this is how you group by month or by years. Then we also have compare to another. We can compare to another period. So let's say if we want to see the previous period, so we can compare and also show the dollar change and the percentage change. So if we run the report, let's change this to years so we can have a clean version. So you can see the changes. We have the dollar change and the percentage change. If we change these to maybe a month, like let's say for example quarters, if we run, so you see it also compares the current and the previous quarter. So you can see if we compare by quarter, we have numbers, right? Because the transaction started in May. So you see right now, you can see the balances as of June. You can see the prior period numbers and the current period. So the prior period shows 48.75 and the current is 2,101, which gives us this change of 2,774. So this is how you calculate. I mean, this is how you customize the report to show the previous period. Then if we say prior period, if we compare it to the prior period and also show the percentage changes, so you can see here the prior period numbers will be 0 because we don't have the prior year numbers. So now it's comparing the current numbers to the prior year numbers or prior year quarter. Let's say for example for quarter 1, it will compare the current year quarter 1 to the prior year quarter 1, which is currently 0. So the change will be this amount. So as a reference, so for QuickBooks, currently the change is showing as 0 if the prior year numbers are 0. Whereas in real life, you can see that this can be 100% because if we have 0 balances in the prior year, but now if we have something, meaning it has changed by 100 increase. But yeah, for QuickBooks, this shows 0%. Then we can also, so now to customize, so we have here, you can see the customize button. So if we click on the customize button, you can see we have the period, the report period, and also the cash, that is the accounting method, whether we are doing a cash or accrual method, the number format. If we want to get like divide by 1,000, we can check this, meaning the numbers will be divided by 1,000. Okay, so let's say if we run this, now you can see the numbers will be smaller because they have been divided by 1,000. So let me just make this more cleaner so we can see what I'm talking about. So right now you can see 1.2 because we've divided the amount by 1,000. So if we go back and change that, then we run it again, you can see the numbers has increased. So if we go back and continue with the customization, let's say if we want to like change the negative numbers to be in bracket, then we also show them in red. If we run reports, you see all the negative numbers will be in red and also in bracket. Then if we go back and customize, let's say if we want to do some changes to the amount, so it rounds the numbers, so we only get round numbers. You see it has changed all those decimal place numbers. So let's go back and uncheck that rounding. So if we click, so now you can see we have the 1,000 and then also we have 590.25. But yeah, in real life we always round the balance sheet numbers and the income statement. So this is something that we normally include because we don't want to get those decimal points. Yes, we also have the option to change the columns. Here we can reorder the columns. We have the option to reorder them. Then we can also show the percentage of, just like we have in the headers. Then we can also hide the change columns whenever we need it. To just say if we can also change this, we can remove remove the comparison that we had there. So if we go back and change it, we can filter, we can add the filters here. Let's say if we want to just filter certain, we want to see the balance sheets for certain customers, we can filter for certain customers. See, then we also, if we want to see the expenses just for the or liabilities for certain vendors, we can do that as well. We can select. Then if we want to see just for a product, specific product or service, so if we run it now, we see we have 0 because there was there for those. But most of the time you have, I'm just explaining to show you that you have those options filtering. Then for the header or footer, you can see if you want to show the company name, that is the Craig's design, you currently showing the company name. If you want to change that, we can just check this. If we want to remove it, so now there is no name. So if we go back and check it off, so now it will show. So if we have like a company logo, we can also show the logo here if we have it. But in this case, this is a sample company, the logo won't show. We can also change it to, we can also look at this, we can update the name from here as well. If you want to add name, detailed description, you can do that. So if you don't want to show the report period, you can remove it. If you say you don't want to show the report title, that is the balance sheet. Now if I run it, you see the balance sheet gone. So go back, if you want to show it, click. Now you see the balance sheet has appeared again. Then if we go back and see, we have like, for example, the dates prepared, then the text alignment. If we want to align this to the center, like or the headers, we want to align the headers to the center. You see it is in the center. But if we want to put it to the right or the left, we can do that. So let's say we align this to the left and run, which looks awkward, right? So when we center it, it's more presentable than when we put it on the side. So now we can go ahead and change it. Yeah, now you see it looks more presentable. This is how to customize. Then here you have, you see you can change the display density, whether be it compact or if you don't want to make it compact, you see now it becomes smaller. These lines, you see they are becoming smaller. If we change it to, if we uncheck this compact, you see it's now larger. I like it that compact. I like the compact more. So you have that option. You can export to Excel, PDF, or to management report. We have a whole chapter on management report where we can also print. So if you want to print this, we can print it. We can also save it as PDF on this side as well. Then we have the option to email. That is, we send it by email. You can do that. Then the next thing is the notes. We can add a note. Let's say, so let's say we put a reminder to ourselves. We can leave this so that at any time we open the balance sheet, we can see the reminder. So if we want to like delete this note, if we want to delete the note, we can just delete it. Delete and click this X. So now we've deleted the note. Then you can see here you can change the titles, but this will take time. If you make the changes, it will take time for it to show. Okay, you can change these titles here, like the current assets. You can give it a different name by clicking edit title, but it will take time to reflect change. This is where you do those changes. And also you can give a feedback. You can sort which doesn't make sense for the balance sheet, because this is the default presentation, which is in order of liquidity, so we don't advise making any change. So now once we finish the customization, we can click save customization. So let's say balance sheet. If we click save, so once we click save, now if we want to see this customized report, we can just go to custom report. You can see this is it. So anytime we need a custom report, we can just go back to the custom report. You can see the one that we customized. Yeah, so that's the end of chapter 37. Thank you for watching. Please don't forget to subscribe, like if you like the videos. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 38. management report. QuickBooks Online has many report options that allows clients to review their business's financial performance. However, clients may need a way to compile multiple reports to present to stakeholders. The management report tab in the reporting center of QuickBooks Online allows clients to create customizable, professional looking report package to share with important stakeholders. So to access the management report tab, you go to report and click management report. So remember, we've gone through the standard report. So now we're in the management report tab. So if you haven't seen the previous chapters on reporting and report customization, I advise you watch those videos. The reports that are accessible in the client company account when using the client version of QuickBooks Online is this: the company overview template. They also have the sales performance template and the expense performance template. However, if you are viewing the report from the Pro Advisor or the accountant view, the templates that are available include the basic company financials and expanded company financials. So today we are going to use the client view instead of the accountant. So that's why we're using the sample company to view the template, that is the management report template. So QuickBooks Online has the option for you to create management report. That is, if you click this, you will be able to create a management report from scratch. You see, everything is blank. You are starting from zero. However, this is not a best practice because you will spend too much time creating a template. Whereas QuickBooks has already created a template for you. It's just few tweaks. You will be able to have a professionally looking report. Management. So here you have the name of the template created by, last modified, reporting period, and also the action. Under the action, you can see that we have the preview. So if I click preview, I'm previewing the current template. So currently we can see the preview of the existing report. I mean the template. This is the template that we haven't made any changes to. But if we want to make changes to these, we can click the down arrow from the action code. We can edit this template. We can send this template to client or somebody. We can export as PDF. We can also export Word document and duplicate. So for today, we are not going to send or edit these templates that they've already created first. What we need to do is to duplicate. So once you click duplicate, you can see this is the duplicated version because you see overview 1. QuickBooks automatically renamed the duplicate as overview 1. So now we have the default version, which is company overview. So to edit this, we have two options. We can either select from the down arrow and select edit, or we can click the company name, that is the report name. So we can go to the edit field or the edit view. So in this edit view, we have options here that we can do. Okay, we can preview. Management report is divided into separate pages. So we have the cover page. The cover page has the cover style. This is where you can change the style of the report. Let's say if I don't like this view, I can change it so by clicking on the down arrow from the cover style field, so I can select the cover style that I like. You see also the logo. This company logo is actually pulling from the settings, that is from the gear icon and company settings that we created when we just set up the company. So this logo that you see here is actually pulling from the company setting. So if you want to change it, you have to go back to the company setting when you were creating the company. Then you can see the management report. This is it. That is the report name or cover title. You also have the company name, which is the subtitle, which is the Craig's design. So you see from here, the field is showing company name because this is a dynamic field. Whenever we change this Craig's name to something else, we don't have to come back and make changes here. This is a dynamic field because QuickBooks will automatically update this field with whatever name that we assign to the company name. So if we go back to the gear icon and make changes to the company name, QuickBooks will automatically reflect that name on this report without we having to go back and make the changes on this report. So this is what is referred to as a dynamic field, because it's changed based on changes to whatever the document that it's referencing to. Just like you having Excel file, then when you create an Excel, then you link it to another file. Or if you link a formula to another, whenever you make changes to the sheet, then the formula will also update. So that's similar kind of thing that is happening here. But this is a name field. Then if we also look at the report period, the report period is also for the period ended and report end date. So whatever end date you can see currently is for the period ended December 31st, 2023. So if the end date change, since this report end date is also a dynamic, so the dynamic field is only here. So this is manual hard coded, but the dynamic field is actually referencing to the report end date, which means if the report end date change, this will also change. Okay, then we have the prepare by, so we can put a name here. So let's say Fuller Kamara. So then if we preview, you can see the name will automatically update by, you see the prepare by. So if I delete it, you won't see a prepare by. So let's delete. If we preview now, it will show, you see the preparer name has disappeared. So so you see that we don't have the preparer name anymore. So if we go back and you see the report prepared date, so this prepared date is actually pulling for the current date, that is today's date. This prepared date is pulling for today's date. Then the disclaimer is saying for management use only, or we can say for internal use only. Okay, but this is saying management use, so it is restricting the use of this report to management only. So let's say this is a reporting package, right? Then if we want to put the date, if we want to add a dynamic field like a report date, we can just click this. So we can say the report end date. So now the header will have this report end date. If we want to like add another, like we want to join something else, and we add now the company name. So if we say okay, now let's preview this. If we preview on the header, we can see once we get to the header, you can see now the header has reporting package December 31st and Craig design and landscaping. So you see, even though I did not write Craig design and landscaping, I only say reporting package and just reference these fields. So let me go back so you can see what I did. So you see, I just say reporting package. All this other information is just referencing the dynamic fields, but QuickBooks Online is smart enough to pick those up. So if I press Command A in this field and then I just delete, then if I click OK, now if I preview, you won't see the header anymore because I have deleted that. So you see, there is no more header for that. So, but you still have the footer, because if you go here, if you click advanced, you can see the footer, because the footer is also referencing the company name. Even though when you look at the field, it's just saying the company name, but if you look at the footer, it's actually calling the name itself, which is Craig Design and Landscaping. So if we go back, you can see Craig's Design and Landscaping. That's the footer. So if we go back to if we close the preview and go back to this, so now these are the changes you can make to the cover page. Then if we go to the table of content, you can see this is the table of content. You can, the page title is table of content. If you want to change it, you can change it also to whatever name of your choice. Then you can include table of content in your report, which makes sense, because if you don't include table of content, it will take time for the management to go through the files to find which report they are interested in. But if we include the table of content, we can easily browse through. So let's say if we look up the table of contents right now, since we say include table of content, you can see the balance sheets. The balance sheet is currently page 5. So if I want to see page 5, I can easily browse to, the balance sheet, I can easily browse to page 5. Then I can see the balance sheet. You see, even though we don't manually add it, but automatically QuickBooks is smart enough to give us the table of content. So that's how to add a table of content. If I click on this, meaning if I go back, you won't be able to see the table of content. You see profit and loss, there is no page for table of content. See, it took us straight to the balance sheets and the income statement, which does not look professional. So it doesn't look professional. So So if we go back and create and check this box, then we will be able to see the table of contents. See that? If we go back to the pages here, so this is the first page. This is where we can add whatever additional information. Then you also have the option to add a new page. So now if you have like multiple pages you want to add, you can add them by clicking add a new page. If you don't like it, you can delete. So now you have just one page. If you don't want to add any page, or like you don't have anything to say to the client, like a description of whatever explanation to what the numbers are saying, if you don't want to add that analysis, you can delete this. You can click delete to delete that. But if you want to add explanation, let's say this is reporting package. So if I say this is a reporting package as a title, so now on the content, if I want to add the company name, I can just click this and reference the company name. So now if I preview, you can see on this reporting package section, you will see the company name. Okay, so after the content, you see reporting package, Craig Design and Landscaping Service. So if I want to add the year end date, I can also add it here. So if I can say as of the reporting date, so I will just add it. So if I go back to preview, you can see now the reporting package, Craig Design and Landscaping Services. So you see, this is how you add those dynamic fields. But this is just an example of how to add custom fields or dynamic fields in this report. So you can see here you have the undo, redo, cut, then copy, paste, B, that is the bold if you want to bold this, then the italics if you want to italicize this one, underline, then if you want to make this as a strike, you want to strike through this one, you can do that. You also have the option, let me command Z, so the shortcut or the hotkey to do all these processes. You can use the keyboard shortcut. If you're on Windows, Control Z, that is to undo. For MacBook, you can just use Command Z. So think of this like a Word document. So you can Command B, that is you bold. Then you can Command I to italicize. So for the strike through, you can click on this to strike through or delete. You can add the numbers. You can also add a bullet list. Like for example, let's say, so if you wanna like just add bullets. So if I want to change this to bullet, so now you see we have bullet point. Then we also have the option to, like, if I want to indent, you see it moves further. If I indent again, it moves further, indent again. If I want to go back, press this one, click on this. Then if I want to change, or if I want to center this, I can just click here. If I want to justify, this is to justify. This is to align right, align left. Then if you want to change the color, you click on the A and select whatever color of your choice. So once you finish, you can click save. You can save. So this page is used to add explanation. Like if you want to add analysis or whatever thing you want to add, this is where you add it. So now if I preview, you can see the table of content has now reporting package. Without we going back to update the table of content, it's updated automatically. So you see, this is it. You see, now we have this. I try not to format anything. I just wanted you to look at what QuickBooks is able to do with this management report. What you can do here, you can make this looks presentable and looks good. You can add whatever analysis. Then if we go now to the report, this is where you add whatever report, because this management report does not edit the numbers themselves. Like you cannot make changes to the numbers that you see on this balance sheet and the profit and loss from this management report, unless you go to the reports themselves, like the balance sheet. If you want to change the way how the numbers looks like, you can go back to the balance sheet and customize the balance sheet. So once you finish customizing it, you can come back here, then you will be able to see the way it looks like. So if I click on this balance sheet right now, you see the only thing that I'm able to do here is to select which type of report I need, whether be it a balance sheet or income statement. Then the report title, this is automatically populates. As soon as I select something here, this will populate. And then this year, so this is also pulling from the report, or you can change it to custom. If you want to change it, you can customize this to whatever date or period you are interested in. You can also check these boxes to compare to the previous year. That is, the balance sheet will compare to previous year numbers. So once you finish, let's just keep it as this year. So once you finish, you can click on this, so it will close. So if you preview, now it will show you the balance sheet and the income statement. So you see, this is the profit and loss. Remember, the balance sheet is the only one I select a custom. You can see we have the current and the previous year, but the previous years have 0 balances. So if we go back, if I close this, if I want to change, let's say if I want to see the balance sheet first, you can just drag it, hold this angle, these handles, and just drag it to the top. This is how you move things around. But let's say I want to add another report. Let's say based on my understanding of the client, they are interested in getting the aging, the account receivable aging. Then they also want to see the sales by customer report. Then they want to see sales by product. So we can easily add whatever report by clicking add new report. So here we can select whatever report. So you see sales by customer summary. You see, so now it has added this. So if I want to add another one, let's say the account receivable aging, we'll just say, so you see, if you say the AR aging summary, you can add it. You see, so now we've added that because they just say AR aging, but that's the account receivable aging. So you can add this. So let's say now I've added the AR aging. I want to move it to the top a little bit, so I can bring this down. So this is the order how it will present in the report. So now if you open the reporting package, the balance sheet will come first, the profit and loss will come second, and the AR aging, so on and so forth. So let's go back to preview. So now you see on our reporting package, we have the balance sheets, profit and loss, AR aging, and the sales by customer summary. So let's say we go back. Let's say we look at the balance sheet. You can see we have decimal numbers. We don't need that. We want to make it clean. Okay, we want to round this, to the nearest whole numbers. So we can go to the balance sheet itself, so we can save this and close. So if we go to the balance sheet, because we are not able to make the changes in the management report, but if we go back to report, now we go to standard report, we go to the balance sheet, we can just click the customize. So we are going to customize this. So let's say we can show the numbers, the negative numbers in red, then we don't want the cents. We can do whatever customization from here. So once we make our customization, we can click run report. So we save this customization. We can save the customization if we like. Okay, so now if we go to the custom report, we can see we have balance sheet. So we have the balance sheet this year to date. So if we go now to the balance sheet, the management report, let's go see the balance sheet. So if you preview the balance sheet, here is still the old version because this is not a custom report. So now to change this, we can go to our report. This is where we can change it. So if we click on the balance sheet, we can select the report. Now if we go to preview, you can see the balance sheet now will have rounded numbers. You see, so all the numbers after the decimal are now gone. So that's how to add report. So if you want to delete a report that you don't like, you can just click delete. So the edit option, you can either click on the report itself or you click the pencil icon. So this is where to edit. Then if we also go to the end note, here you can add, it's just like those preliminary pages. You can add whatever information you want to add as an end note. So let's say you do all the analysis, then you show the attachments to the analysis, and now you conclude. You write your conclusion on this page. So it all depends how you want to present it. But yeah, that's how to prepare the management report. That's the end of chapter 38. Thank you for watching. Please don't forget to subscribe, like if you like the video, share. See you in the next video. Thank you. Welcome to the channel. My name is Fuller Kamara. Today we are in chapter 39, setting up and using tags. Clients can always use classes, locations, and projects to track how money enters and leaves the business. But this method has its limitations. QuickBooks Online support the use of tags. Tags are customizable labels that allow clients to categorize and group transactions in a way that suits their business needs. These customizable labels make it easy to track money without getting bogged down with classes, locations, and jobs. Clients can group tags and run reports to see how specific areas of the business performing. Tags can be added to estimate invoices, sales receipt, credit memos, refund receipt, delayed charges, delayed credit, expenses, checks, bills, purchase orders, vendor credit, credit card credit, and bank deposits. At the moment, tags can't be added to general journal entries, transfers, time entries, pay down credit card transactions, customers, vendors, products, services, employees, and payroll items. The benefits of tags and tag groups. Tags provide a quick and easy way to compare data, perfect for when other categorization method may be more complex. For example, a professional service firm may tag sales and expenses for various clients based on the referral source. These can help clients see which advertising channel yield the most business. Another example could be a sales manager who uses tags to track sales made by individual team members to see who sells the most. The manager could also use tags to see who bills the most expenses. This combined data can show who contributes the most to the company bottom line. Unlike other methods that must be used consistently on every transaction to generate accurate reports, clients can assign tags as needed. They work best for items selected from a list, such as invoices. By contrast, custom fields are best for unique data, such as purchase orders. Tag can provide another dimension of data labeling, even if you or your client already use classes, locations, jobs, and custom fields. Tags are available in all subscription levels of QuickBooks Online, offering a cost-effective solution for many businesses. However, you also have to note that there are limits to the number of tags and also the number of tag groups that you can create for the various subscription levels. For QuickBooks Simple Start, Essential, and QuickBooks Plus, you can create up to 300 tags, and for the tag group, you can create up to 40 tag groups. Whereas for QuickBooks Online Advanced, you can create up to 300 tags and unlimited tag groups. So to see the number of tags or limitation that you have for your subscription, you go to the gear icon and select account and settings, select usage. You can see the limitation. So currently you can say billable users 0 of 5, then you have chart of accounts 44 of 250. So they have used 0 of users because this is a QuickBooks Plus because they have 5 users maximum. Then you can use up to 250 account. Then for the tags group, you can get up to 40 tag groups for this. However, if it was like the advanced, for advanced subscription, you can get unlimited tag groups. However, you can get up to 300 tags. So to create a tag in QuickBooks Online, you have two ways. You can either create a tag when creating the transaction or when entering the transaction in QuickBooks Online. For example, when entering an invoice, you can create a tag by going to the gear icon and select tag. So once you select tag, you can see we have money in, you have money in tags, and you also have money out. So to create a tag, you select new. So once you select new, you can either select a tag or a group. So to create a tag from the transaction, we can select plus new and select the transaction of our choice. So once we're here, we can create, we can enter the details of the transaction. Now when we get to the tag, we can create the tag from here by typing. Let's say we want to track our online sales. We want to know which channel is making more sales for us. Let's say we want to track our advertising. That is whether be it from Google, Facebook, or LinkedIn. So in this case, we have to create tags for that. So we can say online sales. Okay, so this is the group So if we the colon, then we can add the tag name. But in this case, we can only add one tag from one group. But if we want to create multiple tags for one group, we can create a group by selecting manage tag. We'll get there. So let's say online sales, let's say Facebook. So this is so currently you see we have our tag group is online sales and the tag is Facebook ad. So we want to track our sales from the Facebook ad. So now if we want to add more tags to this online sales group, tag group, we click manage. So once we click manage, we can say create tag. Okay. So now to create another tag, let's say Google. So we say Google ad. So now we select the group from the drop down, which is the sales. So once we select that, we can click save. Then we create another tag, let's say LinkedIn. So the tag name is LinkedIn. Then the group is still the sales, our online sales. So now we can close from here. So you see we've created the tag from here. We can also create manage and select a group. So if we want to create a group, we can select create group. Okay. So once we create the group, let's say this group, so we want to track commission. So this is what we want to track. But we can add a tag. Let's say we have employees that we assign to the sales who are doing our sales. So we pay them through commission. So we want to track which of these employees is making more commission. So let's say John. So we add. So commission, we've added John. Then we also have James. So we can add James. So you see, this is how you add a tag to a group. So these two tags are actually relating to this group, commission. So once we finish, we click done. So now if we open commission, you can see we have two tags there. If we open online sales, we have 3 tags. So you can also edit these tags by clicking the edit. So if we say edit, it will take us to edit. On the edit, we can change the group name, or we can also change the color. So once we change it, we can click save. So now after we finish creating the tag or group, we can click close. So now if we want to add another tag to this online sales, we can click the field, the tag field, and then select from which customer, from which employee did we get this, who processed these sales that will be getting the commission. So let's say James. Okay, then from the product, we just select the product, then the amount is there. Let's say this is 20. So once we finish, we can click save and send, save and close. So now if we want to see the tag, you can see if we go to the gear icon and select tag. So now we can see this is a list of our tags. So if we click here, you can see currently we have it will show you the number of transactions attached to each tag. So you see the tag relating to commission currently have 1 transaction, whereas for the online sales, we also have 1 transaction. Then the group also, you can see also from the group level, you can see the commission has 2 tags, which shows you the number of tags, and the transaction, it shows you the transaction. So from here, we can also run the report, that is the profit and loss by tag. Let's say we want to save this year, then we want to run the commission. So if we run the commission, you can see James, this is the sales relate that was made by James. So if we want to track let's say another one, let's say online sales. So for the online sales, if we run the report, we can see the Facebook. This is the sales coming from Facebook. So yeah, but let's say if we go back to our tags, let's say we add more transactions, let's create another invoice and add more transactions. So if we add more transactions, let's say now in this case we have John, okay, and the Google ad. Then let's say they sell concrete. No, let's say they sell design, and the quantity, let's say 10. So now we have 750. So if we save this, save and close, now we can see from our transaction, we have 2 transactions. The number of tags are still the same. That is the tag groups. So now if we go back to run the report, you can see we have 2 different individuals. You can see we have the commission for James, the sales from James, the sales from John. So at the end of the day, the profit and loss by the employees, we can see which employee is making more sales. Then if we want to track the online sales, right, we run the report. So now the online sales, we can see sales from based on Google ads. We can also see the sales from Facebook ad. So it will tell us which area we should focus our campaign on, our advertising campaign. We can click the down arrow and select whatever tag. We can delete multiple tags at the same time, or we can select from the top and delete tag. Remember, when you delete tags, the tag group will still remain. Whereas if you want to delete the tag, the group, you can go to the right and select the down arrow from the action and click delete group. So this is where you delete the tag, the groups. We can also go to the reporting. So from the reporting, you can run report. You can run in the transaction list by tag, or we can run the profit and loss by tag. So we already run the profit and loss by tag group. So if we want to run the transaction list by tag group, we can do that. So let's change this to this here. Now we change the filter by. We can filter by tag group. So let's say commission. So if we run, you can see. So now we can see the transaction by tag group. You can see the sales from John and James. You can expand this to see the transactions. Note that client can add as many tags to a transaction as needed, but only one tag can be added from each group. So let's go to plus new and select invoice. So here we can create another transaction. We can add tags to these transactions. However, you see we have commission and online sales. You can only add one tag from each group. So let's say from the commission group, we can only add either John or James, but we cannot add both. So if we go back to the online sales, we can either add Facebook or Google or LinkedIn, but we cannot add both. So you see, so now if I select James, you will see John tag has disappeared because we cannot add multiple. So if we select one of these, online sales also will disappear, you see. So now there is no more tag left because you can only add one tag from each group. You can manage the tags from here, change the color. Let's say I want to change this. I can select and change the color to the color of my choice. Whatever color I want to assign to this, I can change it. So you see, so now you can see the tags. Yeah, so that's the end of chapter 39. Thank you for watching. Please don't forget to subscribe, like if you like the video. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 40, troubleshooting issues with common workflows. Sometimes clients don't follow the appropriate accounting workflow or understand the right terminology used in QuickBooks Online, which can lead to mistakes. This results in incorrect financial data and numbers that don't balance when you try to reconcile them. The common issues include misposted checks. The client may receive a check from their customer as a prepayment deposit for a future job. To record the deposit, they may select plus new and then select check. So the problem with this is the client inadvertently creates a vendor instead of a customer and assign the fees to expenses. This action decreases the balance in the bank account and also increases the amount of expenses in the profit and loss, thinking that they've created a customer when in other words they have actually created a vendor. So in this case, they selected advertising or promotional, for example, and enter the amount. Then they save. So once they've saved the transaction, now let's go to the journal, the recent transaction. Let's look for the transaction. So this is it. So now let's go to the journal and see what the double entry is, because they have received the check for a prepayment, but what they've done is they've recorded that prepayment thinking that they've recorded the prepayment, but they use the check workflow to record the amount, which is not the correct workflow. So if we go to the transaction journal, this transaction journal here will show the debit and credit. So now you see what they've done is they've debited the advertising expenses and credited the cash. So in that case, they've understated the cash balance by 200 and increase the expenses, which will reduce the profit in the profit and loss account. So that's the problem. So the solution, as a pro advisor, you should help your clients by pointing out that all transactions in the Plus new menu are sorted by entity type. So you can see they have customers, vendors, employees. So by keeping this in mind, the client will be able to know where to record a specific transaction. So if it relates to a customer, they can go to the customer column and record receive payment instead of check. So they should have just select receive payment rather than selecting check. So if it relates to a vendor, they can use the vendor column and the vendor workflow. If it relates to employees, they can use the employee workflow. Then you also have the order, which is for other entries like journal entries or bank deposits. So that's the solution to that problem. Then sometimes also clients may record transaction via the bank register. Sometimes clients may use different financial software before they switch to QuickBooks Online. So they may be accustomed to entering checks and deposits from the bank register. Out of a habit, the clients may navigate to the transactions, because previously we have accounting, but now you can go to transaction and then you go to the chart of account and select view register. So sometimes client may be tempted to use the register to record transactions instead of using the proper workflow. So even though the client recorded a payment received using the bank register, QuickBooks Online doesn't recognize the liability as being paid, because if you record the transaction here, QuickBooks will only reflect the one entry but will not reflect the other entry. So the transaction will still show as a liability. That is, the liability will still remain. So the liability won't be recorded in that case. So the solution for this is clients who use the sales tax center must record all payments from it for them to be applied appropriately to the sales tax liability account. Like for example, if they are paying their sales tax, they should use the sales tax center to make the payment, to record the payment. Okay, then the other area also, the account payable workflow. A client is struggling to understand the account payable workflow. They've been entering bills to record expenses, but they use the check screen to create payments to vendors. Let's say a client recording bills instead of expense. So what's the difference between a bill and an expense? Bills are for payables. That is, you receive the services or items to be paid for later, okay? Whereas expenses are for services or items that are paid for on the spot. So if you paid for something outright, it means it's an expense. Whereas for bill, you haven't paid for them, but you've already received the services. For example, for your utility bills, for light bills. So you do receive your light bill at the end of every month because you haven't paid for it, okay? Whereas for expense, you've already paid on the spot at the time of receiving the service. So that's the difference in QuickBooks Online. So let's say the client record expense as bill. So in order for you to understand what the issue is, I would record two different transactions and then look at the double entry that each of them applies. So let's say, for example, when they pay $200 for stationery to a vendor, instead of recording expense, they record bill. So what they've done is they go and add this vendor and enter everything here. Let's say for advertising, for example. Let's just use advertising in this case because I don't want to create another account. So let's say the amount is $300. So in this case, they have recorded this instead of expense, because if they have recorded an expense, the double entry would have been different. So let's see, because they've used bill instead of expense, let's see the double entry. Because if they pay to a vendor using cash, so what they should have done is they record the expense and credit cash, right? But in this case, what they've done is they record a bill. So let's see the double entry because they've already paid for this. So you see the double entry showed that they have recorded a liability. They credited the account payable 3,000 and then debited the expense. So you see now they've recorded the liability. Even though the expense was correctly recorded, but they have created a liability in QuickBooks Online. So let's look at the entry that they should have recorded. When they pay for the advertising, that is, they pay on the spot. So what they should have done is, so they should have just recorded the expenses by crediting the cash and debit expense. So no liability would have been recorded. So let's see. If we click more and then transaction, the journal entry here should be a credit to the checking account and a debit to the advertising. This should have been the correct entry. So the proper workflow whenever the client has like bills is to first create a bill. So when they create a bill and then later they go and pay the bill, so it becomes an expense. So if they have a bill from a customer, then they should record a bill. But if they pay for the product or service outright or on the spot, they should use the expense instead of the bill. Because if they use bill, meaning they will create a liability instead of debiting the expense and crediting the cash that they have already paid, they are double counting. So the correct workflow, if they have a bill, they should create a bill first, and then once they make payment for that bill, then they should pay bills. So in QuickBooks Online, we have tools that will help us to identify issues. So in the accountant, like for the Pro Advisor, you have the accountant tools. These accountant tools, you can see that you have the voided or deleted transaction. So this voided or deleted transaction available only to QuickBooks Online accountant users. This helps you spot any transactions that a client may have deleted or voided, whether accidentally or on purpose. The tool is a filtered version of the audit log. So let's say if I click this, you can see that, yeah, this is the audit history. So this is a filtered version of the audit log where you can see changes happen and also who made the changes. You can see whatever the changes here. You can see the name by Fuller Kamara and the time, everything. So you can access this deleted transaction from the accountant tools. This is only available for the accountant users. So for the transaction journal, I have already shown you how to access the transaction journal. So you can either run the report, you can either run like the report, you go to the reporting and select and say journal. So this will show you all the journal entries. So you can see the debit and credit for each journal entry that you've made. You can see the debit and credit. You can see here the credit and also the debit. Then you can also access it when you are creating the entry. So now if you click more, then you can select the transaction journal. That is a quick way to access the transaction journal. That will help you see if there is anything that is out of order. Like for example, if you see an entry where you expect a debit to cash and a credit, so maybe account receivable, but the entry shows instead of a debit to cash, you see a debit to expense or a debit to something else, then you will know that the entry is not correct. That's a useful tool right there to be able to pick up some of the issues. Then we also have some tips on coaching the clients in terms of the workflow. You should try to help the client with the terminologies used in QuickBooks Online. Your clients might find navigating QuickBooks Online easier if they understand what the different terms mean and what the various menus are for. For example, like for them to know the difference between a bill and an expense, then you should also help them get into the habit of using the right words and centers, like for the sales center in their hub for viewing and recording their invoices and payment for their customers. And also the expense center is for recording bills for products and services they purchase and their payments to the vendors. So for most of the small businesses, this will be all they need to know when starting out. You should try to keep it simple and help the client understand what they need to do for current complexity of their business, no more and no less. You should try to understand their business and encourage them to use the best practice workflow. But remind them that as their pro advisor, you are their go-to expert in QuickBooks Online. Then also you should keep checking in on the client, because if you keep checking in on them, then you can add value to your client relationship as you continue to touch base with clients regularly and identify new QuickBooks Online workflows that might be benefit to them as well. This way you can catch potential errors in time and coach your clients on best practices. That's the end of chapter 40. Thank you for watching. Please don't forget to subscribe. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 41, managing the client menu. As a financial professional, you may work with multiple clients, switching between many different client accounts and keeping track of their to-do lists and unique needs can be challenging. The client menu in QuickBooks Online Accountant is a hub for all client information, even for those who don't use QuickBooks Online. It brings client contact information, notes, and documents together and offers links to access transactions and tools to solve issues and initiate process. You have 3 tabs in the client menu. You have the overview tab, which lists all clients, including clients with inactive subscription and clients who don't use QuickBooks Online. As you can see right now, you can see these are the list of clients that I have here, but these do not have QuickBooks Online subscription, but I was still able to list them here. The overview tab has columns that display the banking information. As you can see, this is where you see the banking details. It show all bank transactions. Then also payroll alerts regarding payrolls, tax payments, filings if the client has an active QuickBooks Online payroll subscription. This is where you see all the filings and alerts for payroll related. Then you have the prep for taxes, a link if the client has an active QuickBooks Online subscription that opens the prep for tax tool to quickly review balances and make year-end adjustments to your client's books. Then you also have the tax returns, any relevant tax return information, including the status of any return that has been started, or a link to access the Pro Connect, which is the Intuit tax software. Then you also have the lead. The lead is the accountant user that acts as the primary contact for the client. Then you have the action. On the action column, this is where you have the option to edit or make the client inactive. Then if you also click on the pull down, you can see you have the option to create a return. The bookkeeping tab gives an overview of the client books review status. To find out more about reviewing books, it has column that displays the following: the client or contact. Then you also have the book reviews. It tracks the progress of bookkeeping tasks for each client. Then you have the lead, that is the accountant users that act as the primary contact for the client. And then you have the action option where you can edit or make them inactive or inactive. Then you have the payroll. So the payroll tab, this tab shows the client contact, the next pay date, that is the date the next payroll is scheduled for, and then the setup, a link to overview tab of the payroll center to complete any outstanding task. Then you have the tax payment due, that is the payroll tax payments that are due or past due. You will see them here. Then you have the tax filing due date. The tax filing due that is the payroll tax filing that are due or past due. Then you have the lead accountant, that is the user accountant that acts as the primary contact for the client. Then you have the action, which also shows the option to edit the client or make them active or inactive, just like we have on the overview here. Using the client menu, we have the option here to add a new client. Let's say we want to add a new client. You can click add a client. So you can either add a business or individual. We have covered client setup in our previous chapters. I suggest you watch those if you want to see how to add new clients and how to select the appropriate subscription. Please watch the videos on client setup. That will be really helpful if you want to know how to select the right subscription and also how to add a client. So you can add an individual or business. So you can enter the first and last name, email address, and select. In terms of product, you can select the subscription. You can also click more info to add like phone number, website, and also select like the street address, then you can add all the contact information here. Then you also have the subscription. If you want to subscribe, you can click on subscription, so you will have the option to select whether the direct discount or revenue sharing or the pro advisor discount. So you have the choice to make the selections here based on your understanding of the client's needs, because if they select the pro advisor discount, they will get like 30% off their subscription. So then you can also select no subscription. This is where you just create the client. You just wanted to add them to your list, but you don't want them to subscribe to the QuickBooks Online. So this is what you select, and then add all the information. You click save once you finish. Then so for now I'm not gonna add any client because this is just for training purpose. So here you can see also if you want to like change the lead accountant. Let's say you have another person you want to make the lead, you can click the filter icon and then you click edit lead. But you won't be able to make changes right now because we don't have any active client with a subscription. So that's the reason why you won't see any client here to select a lead. So you can edit the lead. Then also you have the option to edit the client. So if you click on the client's name, it will take you to this window. So here you can add a note. So you can add a note about this client. You have the option to make it a private note wherein only you can see it, or you can make it to team default. That is, any member of your team will be able to see this note. So once you finish typing, you can click post. Okay, so now if you click on this ellipse, you will see that you have the option to edit the note. You can also delete. So let's say if we don't like this note, we can edit or delete. Okay, so or we can delete. So if I click now, I click delete. So now I've just deleted the note. Then also you can add, this is where you delete the client. So let's say if this was a client, if you click on this down arrow, that is after you've selected the client's profile, you will see this client, edit client. Then you can see a down arrow where you can delete the client. But since this is not a client, that's why we don't see the option to delete. Then you can also edit. So if you click edit, it will take you to this window where you can change the name, the first last name, then also where you can change the subscription, whether to subscribe or no subscription. You can add the address, everything here, and click save. Let's say if we want to make this client, let's say test comp, we want to make them inactive, we can just select this and make inactive. So once we make inactive, you can see that the client is currently inactive. But also sometimes the reason why you are able to see this as inactive here, because we check this to include inactive. So if I don't want to include them as in the list, so you will see only active client. So if I go back and say include inactive, so now you will see that name again. So if we want to make it active, we say make active. So now it has become active. That's how to make a client inactive. Then you can also create a tax return, but that is not covered in this tutorial. This is just to walk you through the client menu. Here you can also remove, you have the option to customize the columns. You can check off the email if you don't want to show the email, or you don't want to show the banking, the payroll alert. So if you check them off, you can see that you will only see few of the columns that you want to see. If you want to bring them back, you can go check them, and now you are able to see them. Or if maybe you have a long list, maybe you have more than 150 clients, you want to see up to 300. Yeah, if you add the 300 here, you can see up to 300 clients. Yes, so that's the end of chapter 41. Thank you for watching. Please don't forget to subscribe, like if you like the video. See you in the next video. Thank you. Welcome to the channel. My name is Fuller Kamara. Today we're in chapter 42, managing client subscription. As companies grow, so do their needs. What works for them in the past may not work as well in the future. So they might come to you to reevaluate their QuickBooks Online subscription level or update their payment details. The easiest way to check a client subscription level is by hovering over the QB icon in the client menu from the QuickBooks Online Accountant. This reveals the client's QuickBooks Online and QuickBooks Online Payroll subscription plans and shows if they are not active. But for this, you won't be able to see the details because this is not a client. This is just for trading purpose. So that's the reason. You can also access the client subscription level by going to the subscription and billing screen from the gear icon. So if you click the gear icon and then subscription and billing, you would be able to see the current subscription. So here you can see you have the accountant bill subscription, and then you also have like the client bill subscription and the billing details. Then you have the revenue share payout. So for the accountant bill subscription tab shows the subscription status and QuickBooks Online subscription levels for the client whose subscription cost you pay as the pro advisor. If you are paying for your client subscription, then you will see that client whose subscription cost you pay. Okay, let's say you have client A, you pay their subscription, then after you make the payment, then you bill them for that subscription cost. So this is the list. This is the area where you can see those clients. Then you also have the client bill subscription tab. Client bill subscription tab shows the subscription status and QuickBooks Online levels of clients who pay their subscription cost directly into it. Then you have the revenue share payout tab. So here you will be able to track payout details once you enroll to the revenue share program. But currently I'm not enrolled into any of these because this is a training account. Then you also have like the billing details tab. So this billing detail tab provides an overview and a monthly breakout of your QuickBooks Online and payroll subscription charges on behalf of your client. You can update your payment method from here. You can update whether you want to make payments through a debit or credit card, or you can also select whether you want to make payment through your bank transfer or you want to set up a PayPal. So these are the options you have. So you can also check the client usage limit. So to check the client usage limit, you can go to the client QuickBooks Online account, not the Pro Advisor account, but the client QuickBooks Online account. So for that reason, we're using the sample company in this case. So we go to the gear icon and then select account and settings. So once you're there, you can select the usage from the left navigation. From here, you can see the billable users. Then you can also see the chart of account, the tags. For example, so for the QuickBooks Plus, you can see you have 5 users, billable users, that is including the the admin, and of course the other users. So you can get up to 5 users. Then you can get like the chart of account up to 250 chart of account. Then you have the tag groups. You can get up to 40 tag groups. Okay, if you upgrade like to the advanced, the QuickBooks Online Advanced, you can get up to 25 users and unlimited chart of account, unlimited classes and locations. Then you have the smart reporting. Then you also have accelerated invoicing, then custom user permissions. So you have that option for the advanced, that is the QuickBooks Online Advanced. Then so changing the client subscription. So before changing a client subscription level, especially when downgrading their subscription level, you need to ensure that both you and they have considered any implications such as features, third-party apps, and plan discounts. So upgrade sometimes is a little bit better, but when you are downgrading, it's really tricky in that case, because like for features, downgrading means losing some features in your client's current QuickBooks Online plan. Let's say if the client was already a QuickBooks Plus user, then they decide to downgrade to a QuickBooks Essential. So in that case, the number of users that will have access will be limited to 3 users. You also have some of the discounts also. They may lose some of the discounts in that case. So you want to make sure that it really makes sense for the client to downgrade from whatever subscription plan they currently have to a lower level subscription. Then you also have to think about the third-party apps. Changing a plan might affect some third-party apps connected to QuickBooks Online. This happens when the new plan doesn't support the feature the client's apps works with. So if you go to apps, you can see if you select apps from the left navigation and then select client apps, you will see all the apps that are affected in this case. So you have to review each affected client app. So some of these apps are only available with certain subscription level. So that's the reason why before you downgrade, you have to make sure to review the apps that the clients currently have connected to their QuickBooks Online subscription. Then the plan discount also. Downgrading will remove all discounts on the current plan. However, if a client downgrade or upgrade their subscription during their first 12 months, your payouts adjusted accordingly. So it will be prorated for the number of months in that case. Changing accountant paid subscription level. Okay, let's say sometimes the client might want to switch from accountant paid subscription, that is wherein the accountant is paying the subscription on behalf of the client and then will later bill the client. They might want to change that to a direct billing wherein the client will be billed directly by Intuit. So to do this, you have to navigate to the subscription and billing screen. That is from the gear icon. So once you navigate to that, from the action option, which is currently not available because I haven't connected any client to this, but you have that option from the action column. You can select either downgrade or upgrade. Then you also have the option to choose the preferred subscription plan and follow the on-screen instructions to complete the process from there. So you have the option to do those updates from here, from the subscription and account billing, and follow the instructions. Then you can also change a client paid subscription level. If the client pays for the subscription themselves, either you or they can update their subscription plan from their company file. So if the client used to pay for their subscription, you can either do it for them to change the subscription level, or they can do it themselves from their company file. So you have to go to the client's file. Let me go to the sample company. Even though we might not be able to access some of the functions because this is just a sample company, so but we can try, okay, to see where you go. So if you go to the gear icon and select subscription and billing, that's where you can make the changes. So you can choose the preferred option from the current plans box and follow the on-screen instruction. As you can see, currently we don't have that option here because this is just a sample company, but this is where you go to change the subscription payment. So if the client is paying their subscription, they can navigate to the gear icon, and then under their profile they can select subscription and billing. So once they select the subscription and billing, and then they can select the pencil icon next to the current payment method, that is for them to be able to edit and update their payment method. That's the end of chapter 42. Thank you for watching. Please don't forget to subscribe, like if you like the video. See you in the next video. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 43, managing your team. Team menu allows you to manage your firm's users. A firm user can be anyone who needs access to the client's data. They can be full-time employees of your accounting business, but they can also be tax preparers who are not part of your team but still need access to the client's data. The team menu, as you can see, has two tabs. The Access tab, which displays an overview of each user's status and access right. You can see here the access right. So you see from here Fuller Kamara, which is me. I am the admin, and then you also have Fuller Kamara, which is also me. I have the basic access. So I created this account just for tutorial purpose. As you can see, this is a training account. It's not like a live version of the QuickBooks. This is for training purpose only. So you can see you have the access tab and also the certification tab. So the certification tab allows you to track users' Pro Advisor certification and their expiration date. You can see here that you have the name, the job title, the certification, and the expiration, if there was any certification for this. But since this is just the training, that's the reason why you wouldn't see the certification and the expiration date. Apart from the primary admin who has access to everything, there are 3 levels of access you can give to firm users. You can either give them full access, basic access, or you can give them custom access. So the full access, by default, a full access user can view and make changes to all areas of your firm, including the team users, your subscription levels, and your books and clients. So if you give someone a full access, they can gain access into everything. They have access to every area of your books. Whereas for the basic access, this gives the user view-only access to your firm's information, but no access to team subscription billing and no access to the firm's books or client. So more or less, they will have a view-only. So if I click the edit right now, just to show you the basic access, so you can see this is currently a basic access. You can see the user profile. From here, I can resend invitation because, as you can see, I have already sent an invitation to this user. So now all they need is to access the email link and then click accept and follow the instructions. Then I have the option to delete this user from here also. So if I click the farm administration, you can see for the basic access, they have a view only of the farm information, and they don't have access to any of the farm users' subscription. Then they don't also have access to the farm account receivable and customer account. Then the vendors and creditors, they don't have access to that as well. They don't have access to the client. So that's just the basic. You can see also if these have like custom access, this allows you to customize the permission the user has to your company. and the books and clients. Let's go and see, let's say the add user. So now to add a user, that is if you have a team member that you wanted to add to the team, you can just click add user. First you have to navigate to the team from your left navigation, and then you can see on your right add user. So this is where you add user. So whenever you click add user, you can add their name, let's say, then you can add any email address. So once you add the email address, you click next. So then you will be able to see the area where you can specify access to the farm administration and books. As you can see from here, you have the basic access, the full access, and the custom access. So just watch here from the access menu right now. So the basic access has default access that the individual will get. As soon as you assign a basic access, by default, the person will have a view only farm information, have no access to the farm users and subscription. Then they will also have no access to the customer and accounts receivable and the vendors and creditors. They don't have access to that. But if you make changes to any of these, the access will become custom. So from on your right, you can see custom access to administrative functions for your firm, and then they also have access to managing clients. Then the custom access also to your books and administrative access to the client's books. So if I change this right now, I say okay, they can edit. You see this has changed from basic access to custom access because I have given them some edit access. You see, so if I can change other things here, say yes, so meaning it's still custom access. So let's say if we change it to the view, to the full access, you can see they have access to everything. They have access to the firm information, the firm users, so they have access to all of that. So you can change it to view only, it's become custom access. So that's how to give access. So if we go to next, you can see here you will specify which area of the client, which clients should they have access to. So even though they have access to the firm, you can still restrict their access to specific clients. Maybe you have 10 clients or maybe more than that. Then you have somebody you just want to give access to a specific client, not all the clients. Let's say a tax preparer, maybe their tax preparer reach out saying they need access to the financials. So you don't want to give them access to all the clients that you have. You can only give access to the specific client that's requested access. So that's the reason why you can check off. You have the option to select all the clients that you want to give access to this user. But to be specific, you can select the one that you just want to give access to. So once you click save, the user will receive an email automatically that will give them the instruction as to how to gain access to the books. So right now, I only give them access to this test comp. So if I click save, meaning they will only have access. Once they accept the request or the invitation, they will only have access to test comp. They won't see this other client from their end. So that's how to give access. But I'm not gonna save this right now because this is just for training purpose, and the email address that I put in is not a valid email address. So you can see here right now we have invited. So to edit, you can click edit. This is where you make the changes as I have just explained previously. You can see the number of clients. So from here you can make changes. You won't be able to make changes to the primary admin, but you can see from the setting here you can include inactive users. You can see from here you have the option here. You can include inactive from here as well. You can change the status. See, so if you check this off, then the status will disappear. That is whether active or inactive. So then the job title, if I don't want to show a job title, you can just check it off as well. You have the option to print. You can, so if I go back to the edit, so if I go to edit, let's say for the admin user, so if I go to edit here, you can see you have the full access. So this currently has like the full access. See, because the reason why you can't make any edit to this because it's the primary admin. So the primary admin has full access to the QuickBooks Online. That's how you manage user permission. You can edit and change the user permission from the action column here. And that's the end of chapter 43. Thank you for watching. Please don't forget to subscribe, like if you like the video. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 44, managing your work. As a financial professional, you want to make sure that you meet the deadline for all clients and accounting periods, and that you have all the documents you need to do so. However, keeping track of everybody's tasks, including your teams and clients, can be challenging. Using the work menu to manage your workload. To access the work menu in QuickBooks Online, you navigate to the dashboard, and then on the left navigation you can see work. So click work. In this work menu, you have the option to create a new project. Then you can also create a request and manage templates. Then here also you have the shortcut to turn on notifications. You also have the option to go to the gear icon and then the company settings and turn on the notification. So the work menu is the quick access to turn on the notification. So once you click notification, it will take you directly to the gear icon, and then you click the pencil icon. Then you can check off which notification you want to receive, whether be it's a due date or new assignment. Once you finish, you click save. Then now to create a project, we can create a project from a template or we can create it from scratch. So let's say we want to create a project. You just click create a project. So once you click create a project, you can turn on show tips. This will activate the tips and you can select a template from here. So you see you have the option to create a project without any template and then just work from scratch. So the easy way is to create a project from a template, whether be it's you have the quick start template, which is the bi-weekly payroll, the client onboarding. Then you have the monthly bookkeeping and the yearly taxes. So let's say we want to create a project for the monthly bookkeeping. So once you select the monthly bookkeeping, we currently have the option to select for which project, for whom do we want to create this project for. You can select my firm or for the client. So I normally create projects based on client. So let's say if we want to create a project for Fuller Kamara. So now let's say Fuller Kamara is our client. So if we select Fuller Kamara, now we know whatever project we're working on, this relates to a specific client. But you can also select my firm if you choose. I prefer to create a project by client so that I know which client it relates to. Except if it is an internal project, then you might select my firm. But most of the time, if you are working on a client project, it is advisable as a best practice to select the client for which you are creating the project for. So in this case, let's say Fuller Kamara, and you can also set the due date. So you see you have the option to repeat this project, or you can just turn off the repeats function. That is, if you want to repeat, you can set how often do you like it to be repeat, whether be it a yearly or monthly or quarterly. So it all depends on your choice how often you would like this to repeat. But I will turn this off for now, so we can set up a due date. So the due date is when you expect to complete this project. So if you select whichever month you prefer, you can select to set up the due date. So let's say, for example, we want to set up a due date of December as our due date. So December 4 is what we've selected right now. So you can also go to the tasks. So you have each project has tasks which will help you to complete the project. So each each project has some kind of milestone. So because if you complete some of those tasks, then you will be able to complete the project. So the task that you are going to set, like if you are setting a due date for the task, it is normally advisable to set the task completion earlier than the project completion date, so that if you have any back and forth or any delay in the process, you will be able to complete the project before the due date. QuickBooks won't let you set up the task due date later than the project due date. So if we have the project due date as December 4th, 2023, we won't be able to set the task due date later than that. All the other dates will be blocked. The latest date you can set this up will be the December 4th. You can even bring it to November. Let's say today we're in November 1st. You will be able to bring it up to November 1st as a due date, but you won't be able to set up a due date greater than the December 4th, which is the due date for the project. So that's just a control that QuickBooks had, because they want you to be able to complete the task before the due date. For these, because we are using a template, these are the tasks that relate to the bookkeeping, the monthly bookkeeping template. So the first task is telling you to gather all the monthly statements, whether be it the bank statement for your credit card or your checking account. Then you have to do the reconciliation, reconcile the debit and credit. Then you also have pay all bills, even though we have the option to automate this function wherein the system will automatically make payment of all bills that are due. Then you also have the option, you can see the produce the month-end financial report, whether be it the statement of financial position or the income statement. You have the option also to drag. You see, you can move this to wherever you want to put it. This process is based on best practice, but if you want to like reorder these to suit your own needs, you can do that. This is organized based on best practice. You wouldn't want to run the report earlier than reconciling the account balances or making payments, because if you run reports before making payments, the report will not be accurate because some of the payments will not be reflected in your report. So that's the reason why this is based on best practice. You also have the option to add a task here. Let's say meeting. You can put in like a meeting with the client. You can put a due date for that, whatever due dates that works for you. You can say maybe on the month end, November 30. So once you finish the customization, you can just click save. You also have the option to remove these tasks by clicking the remove. Then you can add a description, like if you want to add more detail to this task, you can do that. But I'm not going to add anything other than that. So we can click save. So once you click save, you will be able to see the project on your list of to do. So you can see here you have the project. Once you click on it, it will open the project. So in terms of the view, you can change the way you want to view this. Let's say you want to change the view to a list. You can click the list, or you can change it to calendar view. So if you put it to a calendar view, you can see this is how you view it on a calendar view. So if you click on this project, you can see you have the option to create template. You can duplicate this, or you can delete if you don't like the project. So you have that. If we go back to the calendar view, so let's go to the November. So if we select the task view, right? So previously we were on the project. So if you select the project will show you the due dates just for the project, which is December 4th. That's the due date for the projects. But if we change it to tasks, so now you can see the task due date will be, you have December task due date. The first one is gathering all the information, is due on the 1st November. Then you have another one on the 10th, month-end financial report. Then on November 15th, you also have the reconcile. So once you set this up, you can see QuickBooks will send you automatic notification when these tasks are due. So it all depends on your configuration. So if you go to notification, you can change. So you see due dates, you will get notification for due dates if this is checked. So based on what you've set up on the notification, then those are the kind of notification you get. So you can filter also these to show all types. So you see it will show both projects and tasks due date. Then also if you want to look for client only project, then if you want to look for firm only project, you see currently we don't have anything for firm. Then if you want to look out for specific client like Fuller Kamal, you can see this is the projects that we've created for this client. So now we can also manage projects by going to manage template. So if we go to manage template, we can see that we have option to duplicate the templates. These are the quick start templates. So for these templates, you don't have any option to delete. You cannot delete any of these templates, but you can duplicate or preview the template. So you see if this is currently the preview. So you can see it will show you all the tasks for this particular template. So if you want to like duplicate, you can duplicate it. But let's say we want to create a new template, which is a custom template. Let's say this is a test. So we can add tasks. So first, let's say we just want to meet with the client. So we can set the due dates later. Then we can also add another task. Let's say, so we want to obtain support. So you can click save template. So now that we've saved the template, you see it doesn't go to the quick start template because this is a custom template, you see. So meaning we'll be able to delete this one. You see, you have more options when you click the down arrow from the action. You can edit these templates. You can also duplicate or delete from the bottom. So you have the option also to repeat, you see, and you can create a project from this template directly without having to go to the work tab. Okay, so you can see the tiles. Currently the tiles here will show you based on the due date. So on November 1st, this is what is due. Next week, you see the tile shows November 10, another due date. Then we have next 30 days, you have 2 tasks due. So this is how QuickBooks will show. That is if you click on the grid view. But if you want to get like the list view, it will show you the list of tasks, okay, how and the due date. So it will start from the first. So for me, if I prefer the 2 options, whether based on the grid view or the calendar view, because it helped me know which dates do I have to deal with something. So let's say if I'm on today, I can on the first, I know exactly on the right, I can see what task I need to do. It's more cleaner, so I know every date has its own due date. So here you can filter to see project, to see task or request. So if you want to see the request, you can do that. Let's say we want to create a request. We can create a request by selecting create request. So this request, you can only create a request or assign a request to a client with an active QuickBooks Online subscription. So currently we don't have any active QuickBooks Online subscription account for clients here. And this is the training file, which is the Pro Advisor file. This is not the client version of the QuickBooks. This is just the Pro Advisor. So once you click, you select the client from the drop down arrow, then you can add in the title. Let's say this is a test. Then you can select the due date. Let's say we want this request to be due on November 9th. Let's say, so we say, please send the support. So if there was an active client with an active QuickBooks Online subscription, we should have just clicked share. So you can see the share. Then you can also check notify the client. That is, if we say to notify the client, meaning the client will get a notification. So let's go to the client version of the QuickBooks. So this version, so the client will be able, so once you click share, then this is the version of the client QuickBooks Online, which is the QuickBooks Plus. So the client will go to the My Accountant, then they will see all the requests that you've sent to them. Okay, so they will be able to see the request that you've assigned to the client. So they can respond and add whatever support that you need and then send them to you. So after you've created the request, you click share, then the client receive it. We can also delete the project. So if we want to delete a project, we can just click on the project and click delete. So once we click delete, the project will be deleted. Okay, so now the project is gone. So that's the end of chapter 44, managing your work. See you in the next video. Thank you. Welcome to the channel. My name is Fuller Kamara. Today we're in chapter 45, using the books review center. Clients rely on their books being accurate to make business decisions. That's why checking transactions and reconciling accounts are essential to your period end workflow. However, closing all your clients' books can be time consuming. The books review center in QuickBooks Online automatically finds errors, incomplete expenses, and duplicate entries. This makes your typical period end workflow faster and smarter. You can easily track your progress for individual clients or even see it across the whole practice via the client list. Reviewing the books regularly helps keep the books tidy and up to date so that clients can get an accurate view of their finances and make the right business decision. So today we are going to use the Pro Advisor account, that is the QuickBooks Online Pro Advisor account, and I have created a client version of the training file, QuickBooks Plus account, that I've just created for this training only. So all the information that you will be seeing here is not from a real client. So this is just a sample data that I've just created. So we're going to do the books review. So once you receive the invite from the client, then you can accept the invitation. So once you click accept, it will require you to follow some security steps in order for you to gain access. So once you gain access, this is where you can see the client's book. So if you go to the client, if you click on client, you will see the clients on the bookkeeping tab that you have access to. So if you also click the overview, you can see a list of the clients, whether be it internally or external. So the only clients that you can see on the bookkeeping tab are the ones with subscription. You can also access the clients here. You can click on the client. So now it will open the client books. So everything that we're seeing here right now is the client books. This is no longer our books. This is the client. Whatever changes we make here, we're actually updating the client's books. So the reason why I'm explaining this, because all what we've gone through is just me going through the Pro Advisor training account and also using the sample company. But this version is actually a subscription version, but it is just the trial version. So it is the 30 days free trial that I'm using just for me to be able to explain this chapter, because this chapter requires us accessing the client's books and then reviewing each of those book review tabs. Books review, you have the setup tab, and you also have the transaction review tab. Then you have the account reconciliation, final review, and wrap up. So this makes it easier for you as a pro advisor. So whenever you have like a monthly period end review, it makes it easier for you to have access to the client's books and also knowing what you need to do whenever you access the client's book. Remember, when you look at the books review, you can see, if you click on this down arrow, you will see cleanup and monthly. So currently we're in the cleanup, which shows the 5 tabs, that is the setup, transaction review, etc. But if you log in initially, maybe you might be in the monthly review, so you might not see the setup tab. So if you are in the monthly review, meaning you will just see transaction review, account reconciliation, final review, and wrap up. So if you want to see the setup tab, you have to go to the cleanup. So the cleanup will help you do the setup. So in this setup tab, what you normally do in this setup tab, you can update you can see the industry and the tax entity, which is, for this is just a sole practitioner or sole proprietor. Then you have the accounting method, which is the accrual. So I'm not going to go into the detail here in terms of the setup, but you can check out setup chapter chapter of our tutorial for you to be able to see exactly how to set this up. But if you click this edit settings, it will take you to the company, the account and settings. So you see, this is the difference. When you are in the client books, if you click on the gear icon, you can only see account and settings. So now this settings, this is where you do the update. If you want to change anything, you can just click on the pencil icon. So then if I take you back to the practice, that is to my Pro Advisor account, which is for the training account, you can see this is here. You have the client list and also the team, the Pro Advisor. So these are the books for the Pro Advisor. Okay, so whatever you see here is the Pro Advisor. So if you click settings, you see you won't see the account and settings. You will see only the company settings. So that's the difference. But when you are in the client books, when you click the gear icon, you can see under settings, you will see account and settings. So that's the difference. So if you are accessing the client version, the settings there will be different when you are accessing your Pro Advisor account. So let's go back to the client books. So once we're in the client books, and let's go back to because we have the dashboard, but in this case, we're only going to focus on the books review. So you have the financial statement. In the financial statement, you have the balance sheet report and the profit and loss. So if you click any of this report, it will take you to the reporting section. So here, this is the balance sheet. So if we go back and click on the profit and loss, it will take us directly to the profit and loss account. So then we can customize this report. We have a whole chapter. So check out the chapter on reporting so you will know exactly how to customize report. Then we have the opening balance adjustment. So the opening balance adjustment area can be used to enter beginning balances in the new company and to verify that the beginning balances from the prior period haven't changed since the last time the tool was used. It's best to enter the balances from the last review and close reports to verify that the beginning balances match. So for the opening balance adjustment, let's say you have an opening balance that you want to adjust. Let's say if you bring the client to QuickBooks Online, maybe the client was using different software. So now when you bring them into QuickBooks Online, you have to look at you have to check the opening balances to make sure those numbers have not changed since you bring them into QuickBooks Online. So in that case, if the numbers are different, you can make adjustments. Like if you want to book adjustment, that is if you know what is causing the difference. Let's say for inventory, for other assets, let's say we have $200 difference. So if we have this $200 difference on the inventory assets account, we want to book an entry to bring this number, the difference, to 0. So the adjustment will be on this column. But once we've entered the amount, we can select which other account. So which account will be affected by this entry. So if we book an entry on the inventory, so the actual record that we have from books or from the previous software, we have like $200 for inventory, but currently it's showing here 0. So meaning we have to book an adjustment to increase the balance, so 200. So in other words, we are saying that the 200 should be the actual amount because the inventory is showing currently 0. So we have to book an entry. So to book the adjustment, we can select the opposite account here. So let's say in this case, let's just say opening equity balance, right? To just for correction purpose, we just wanted to do the credit to the opening equity and then debit the inventory. But most of the time, you will know which other account that is affected in terms of the entry. So in this case, we are just assuming that the other entry will be opening equity. So it doesn't mean this is the correct entry that we need to book. In every situation might be different. So whatever the situation is, you just have to know the double entry, which other account is affected in order for you to bring this inventory balance to 200. So in this case, we say 200 adjustment that we need to book to the opening equity account. So we have to check this. We have to check this amount. So once we check the amount that we want to book the entry, which is a 200, and then we've selected the opening equity, we click add adjustment. So you see, so now once you click add adjustment, you see this is showing now is an adjusting entry. Then you can change the date from here. So if everything is good, you can just click save and close. So if you click save and close, now you see our adjusting entry is now 200. So the variance is now 0 because previously we have a variance of 200. So we are going through the setup tab. From the setup tab, you can review the financial statement there. That is the balance sheet and the profit and loss. Then you can book adjustments to the opening balances. That is for a new client. So just to make sure the balances are accurate for the new client. Then you also have the potential issues. So this is where you see the potential issues. Potential issues can come from disconnected bank feeds. In this case, since we haven't connected the bank feed in the first place, so we should be good here. Then the next thing from the potential issue, you can see account without activities for greater than 90 days. Some of those accounts might be potential inactive account, but in this case we just go with that. But most of the time, if you see accounts without activities in the last 90 days, it could mean some of those accounts are dormant or inactive, so you might make them inactive. But in this case, most of these accounts, we still need them, some of these accounts. So we're not going to make them inactive. So if you are comfortable with some of these changes, you can see from here on the right, you have to do. As a default, QuickBooks will show to do. That is, you have a to do to review disconnected bank feed. If that is done, you can just click done. Then this will automatically update to done. If you have also reviewed accounts without activity, you have reviewed this, you think these are inactive accounts, then you can go to the chart of accounts and make them inactive. But in this case, we can say, okay, we've looked at this account, so we need these accounts in this case. Then you can see also for additional items. These additional items, these are the ones that you can add as well. If you want to add additional items, let's say you want to add the sales tax, we can add the sales tax from there. Okay, so we say the names is sales tax. Then the link name also is sales tax. Then the detail, we don't put any detailed description. Then we paste the link. Now we save. So once we save that, you see, so now we can see, now we have a direct link to the sales tax. So here also we have direct link to the chart of account. So if we want to review the chart of account, we can just click this. It will take us to the chart of account. So this is where we review for duplicates to see if there are any duplicate accounts or if there are any industry specific account that we need to add. Then for the sales tax also, if we want to set up the sales tax, we can just click that. The one that we just added, it will take us directly to the sales tax as well. If you think about anything you think is valuable to add here for easy click so that you don't have to run all over the place, you can just maintain one dashboard. That will also be helpful. So once you finish, you can just click the down arrow from the status and then click done. So this is where you review some of those. You can customize this by clicking the app. Then you have the next tab is the transaction review. The transaction review address any problematic transaction, automatically identify errors such as incomplete expenses, and allows you to categorize transactions that the review identifies. So in the transaction review, you can see you have open issues, then you also have the bank transactions. And these are the transactions that are connected through the bank feed that you have not reviewed. So if you click on this, it will take you to the banking center. So you can see this is where you connect the account, whether be it credit card or checking account. Then you also have open issues. So open issues are either uncategorized transactions. Uncategorized transaction list transaction to be classified. So these are transactions that we have not classified yet. So you see, if you select this check mark or checkbox on the left, you can see you will have the action whether to ask the client or reclassify. So most time, if you are not sure about any transaction, this has not been categorized. So you can ask the client by clicking ask the client. So once you click the ask the client, you can see the QuickBooks Online will create a request. Remember, we've gone through the request, how to create a request from managing your work on QuickBooks Online. So you can check that out if you want to see like detail. So once you click ask the client, you can see automatically create a request. See, we have a due date of November 12th. I did not type this. This just automatically populate. I need to know what these transactions were for so I can categorize them. Please be as specific as you can. So you see, this is the question that the client will see. And then also you can see you have the transaction. You see QuickBooks, as soon as you select it, you can see it has been added here on the list. Then also you can click notify, so the client will get an email. So once you click share, you can discard, that is delete. You can also click document. You can upload documents from here if you want to add a document so that the client will see what you're talking about, or anything you want to add to this request, you can do that. Then you click share. So once you click share, the client will receive the notification. So if I click share, then the client will receive a notification. So if the client receives the notification, they can go to my accountant. So they will see all the requests that they have pending. Like I said previously, we are in the client books. Whatever we are seeing here, client will also see that when they log into their book. This is the one that I just created. So you see, the client will see the to-do here. So they can upload documents. So if you click open, so now we have the transaction here. It will see what this transaction is. So the client will describe. Once they describe, so yeah, so that's how we ask question to the client. So now the client will receive the notification and then respond or send us the document. Then we should be able to process whatever open items that we receive from the client. Once we receive those, then we can update here. So you can see the client response. The client response shows there. So now we can go and classify this based on the client response. So we say payment is checking, and now we can just click save and close. So now you see the uncategorized account, the uncategorized transaction now is 0. So we can mark this as done. So we go back. The next one is transaction without payee. List transactions that have no payee. So if we select this, we can add a payee, or we can also ask the client. So most of the time, if like for minor issues that you can resolve on your own, you can resolve them. But most time, like the payee, if you cannot figure out who the payee should be for this transaction by inspecting the transaction, maybe if you look through the transaction here, if you don't know who the payee might be, you can ask the client. So if you ask the client, let's say they say a vendor by the name of Lemon Test. So if you click on the payee, you can add any payee that this expense relates to. So now you can see transaction without a payee is now 0. So you click done. So you see we have the check mark. Then the next one is undeposited fund. On the undeposited funds section, list transactions whose payment hasn't been cashed yet. So in order for us to correct this for undeposited fund, we can just click. We can either ask the client or just record a deposit, because when we receive payments, when we receive payment for an invoice, we can debit the undeposited funds and credit the customer balance. Now, if we forget to record the deposit, so it will show here. So that's the reason why we can either record a deposit or ask the client. So you see, so now you can see if you click on this and click save, the deposit will be recorded. So you see, so now the undeposited fund is now 0 because we've recorded the deposit. So you click done for that. So the next one is unapplied payment. So unapplied payments, list vendors payments that have no assignment to bill. So, but in this case, we don't have any unapplied payment. Most of the time, QuickBooks will automatically apply payment. That is if we set that up on from the gear icon. But if we choose to manually apply payment, whatever payment that we make to the vendor, then if we record the bill and then record the, let's say we've recorded a bill and we've made payments, okay, then we fail to say pay bills, then that will appear on unapplied payment. So we need to record that. But in this case, since we don't have any unapplied payment, that's the reason why we see 0. So there is nothing to review here. So you can also see the additional items which we already gone through. Then now the next one is account reconciliation. We've gone through reconciliation, how to reconcile an account in QuickBooks Online. So we're not gonna go like into the detail, but if you haven't seen how to reconcile, how to do bank reconciliation or account reconciliation, please check out the chapter on bank reconciliation, so you will be able to see. Here we'll show you the accounts that are unreconciled. So currently you can see the cash and checking account. You can select an account from here, but in this case I'll just leave it like that. Then you have other balance sheet account. If you also want to reconcile other balance sheet accounts, you can do that, like account receivable and account payable. You can do that as well. Then you can see you have outstanding transactions, that is the uncleared transactions. So if we have uncleared transaction, we can just click here and ask the client, or maybe we can book a journal entry or create a journal entry for that. So like I said previously, you can either click ask the client. So you see, so we need a bit more information about some recent transaction. Please fill in any details that you can, so we can ask the client to provide more information about these recent transactions that are uncleared. So we also have the additional items here. The additional items in this case is to reconcile the loan account and also review the reconciliation report. So if we click on any of these links, it will take us to the respective tabs. So you can see this is the reconcile tab from the accounting section. The next tab now should be the final review. So the final review, we can see unusual or unexpected balances. So if we see unusual account payable balances for more than 90 days, like for example, we see debit balances, material debit balances in our account payable, or large credits on our account receivable greater than 90 days, those are unusual because we know the account receivable has debits. So if we see large credits for a longer period, we want to know if there is any need to reclassify those accounts or transactions. So that's the reason why we have to review that as well. Then we also have the report links here to review the balance sheets and the profit and loss. We've gone through this as well, so check out our reporting tutorial. The last tab is wrap up. So the wrap up here, you have the summary tasks. So here you can prepare the management report. We've gone through management reporting, but if you click select, you will see these are the basic company financials. So if you open it, it will take you to the management reporting tab where you can customize the report. So we've gone through management report, how to customize this. So if you haven't seen the tutorial, please check it out. To save your time, I don't want to go into detail here, so I just wanted to show you how to access those. Then you can send the reporting package. So if you click send, it will take you to the management report as well. So let's just say this is done. If you click send, it will take you to here. So once you've created the report that you wanted to send, you can just click from the down arrow and click send. So it will go directly to the client. So this is access from the reporting center, and then you have the management. So the book review makes it really easier for you, so you don't have to be all over the place, so you know exactly what you need to do. So this is like a to-do list. So you also have close the books. So once you finish, you can close the books. Maybe for, let's say for the end of October, you want to close the books, you can just click close the book. So this close the books, you can also access it from the accountant tools, and then you click close the books, or you can just click from here. The easy way, as you click click, it will take you directly the window where to do the settings. Whereas if you want to access it from the gear icon, you can go to the gear icon and then account and settings, and then you go to the advanced. So from the advanced, you click the close the books. So once you turn this on, then you can enter the date that you want to close, which the books for which date, let's say October, and then you can say allow changes after reviewing a warning. So you can add a warning. It will tell you that these changes that you're about to make is after the closing date. Do you still want to proceed? Then you will say yes. Or you can password protect the previous period. The reason why some people password protect, because they don't want, after they've closed the book, then somebody go back and do an entry in the previous period. Let's say we've closed the books for October 31st. That is our closing period. Then somebody go back and book an entry for July. So that might affect our reconciliation or other report that we've already generated. So in that case, that's the reason why, as a control, sometimes some people might put like a password or warning, whatever works for you. So, but we have a whole chapter on closing the books, what you need to do before you close the books. So in this case, we're not closing the book just yet. So that's the end of chapter 45. Thank you for watching. Please don't forget to subscribe, like if you like the videos. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 46, key tasks for year end. The year end is always an important and busy time for clients and accounting professionals. Some clients may carry out daily, monthly, or quarterly review themselves, but at year end, they will likely need your support to get the task done correctly, especially in their first year of business. As a pro advisor, you can either carry out a year end review for your client or guide them through the processes, involve them to help understand which feature of the QuickBooks Online can support them. So using the books review center at the year end. So if you haven't seen chapter 45, I suggest you watch that video so that you will understand how to do the books review. The books review, by pulling all the tasks together into a single place and splitting transactions that have potential issues, will significantly help you carry out the year-end reviews. In most cases, the 5 tabs of the Books Review Center provide the checklist and tools you need to carry out the listed task for that part of the review. So if you haven't seen our tutorial on books review, I suggest you watch that video so that you can get an understanding about the books review. So we've gone through the setup, transaction review, account reconciliation, final review, and wrap up. So in this video, I'm not gonna go into the detail for each of these tabs because I don't want to waste much of your time on this. Also, please note that some year-end tasks are outside of the capabilities of the books review at this time. If a task isn't included in the books review, so you can actually add it here by clicking the add and then add all the information that you need to add, or you can also put it as either you can put it as a link or you can just add it as a to-do item. So you also have other reports and tools to support your year-end workflows, as well as the books review center. You can see that we also have other key areas in QuickBooks Online that you will find reports and tools for year-end activities, and those areas are the accountant tools and also the report center, which we've gone through. If you haven't seen that, please check the chapter on reports, because in this report center you are able to run reports relating to the balance sheets, the profit and loss, and also you can also run other report like the transaction detail report, the open invoice report, and reconciliation summary report. So if, like I said, if you have not seen the tutorial on how to run some of this report, you can watch my previous tutorial on report. So just one thing that I need to point out. So when you click click on report, there are few reports that I want to point out. So the My Accountant report, this one, the For My Accountant, these are key reports that you need to review at the year end, because like for example, you are able to run here the balance sheet comparison. You also have the balance sheet, the general ledger, the journal, the profit and loss comparison, and the profit and loss by tag group. Then we also have the accountant tool. So the accountant tool, you can find a variety of tools in here to support your year-end activities. So you can see we have the voided or deleted transaction, which is a summary or a filtered audit log, because this is actually pulling from the audit logs. QuickBooks Online has already filtered the audit log for you, so you have like a summarized version which is specifically for voided or deleted transactions. So this will show you a list of all the deleted transactions. Then we also have close the books. You can access the close the books from the accountant tools, or you can go to the gear icon, accountant settings, and you go to advanced. So once you are in the advanced, you will be able to see close the books. So we also have write-off invoices. So the write-off invoices also, you can find it in these accountant tools. Then you have prep for taxes. So this prep for taxes also, you can find it handy in the from the accountant tool. So you can see you have the year-end tasks, then you have the documents, you also have the review and adjust, then you have the grouping statements, and then you have the tax mapping. So this is also a handy way because it shows you the checklist. You send an engagement letter, review trial balance, make adjusting entries, prepare the current year tax returns, then book tax provisions, prepare financial statements, and final engagement documents, get letters, financial statements, and other documents approved by clients. Then you also have file returns and logbooks. So if you click on these arrows, you will see the details for each of these to-do tasks. Review key year-end report, which is the balance sheet and the profit and loss. You can launch this directly from the book review. So if you open the book review, you can get the balance sheet and the profit and loss account. So it's always easier if you use the book review tab to get the year-end report, like the balance sheet and the income statement. Then you can also customize to add the previous year columns. That is, you compare the current and the previous year to see any unusual balance. You can also review this report the same way as you would for any period end review. You will also need to use them to complete some of the other year-end tasks. The other thing also, you have to ensure that transactions are categorized correctly. So you go to the transaction review, you have to review the transaction to see that all these uncategorized transactions have been categorized, and then transaction without pay have been, a proper pay has been assigned to these, then undeposited funds has also been deposited. Then you also have unapplied payments. We've gone through all these ones during our book review. So if you haven't seen chapter 45, I suggest you watch that video so that you can get a detailed understanding. Then we also need to analyze the fixed assets, purchases, and depreciation expense. Let's go to Pro Advisor account, because QuickBooks has added the fixed assets schedule, which is available to Pro Advisors, and this is also available in the advanced subscription. So if your client has advanced subscription, they now have access to the fixed assets module. So this fixed assets module will help you or your client to record the purchase price, the salvage value, the depreciation start date, that is the date when the asset was placed in service. Then you have the assets account, then you have which depreciation method the client is using, whether be it a straight line or reducing balance or double decline method. they can use also, the useful lives and the accumulated depreciation. So how to add an asset? You can just click add an asset. You add the account name, description, and the depreciation detail. You can enter the purchase price, the salvage value. So once you fill in all the relevant detail, QuickBooks will automatically calculate all this information for you. So like for the first entry, for the first month, you will have to manually enter the depreciation, but the following month, once you've done this entry, QuickBooks will automatically calculate all the depreciation expense for you, will book the journal entry for you, so you don't have to worry about recording depreciation. So this is very useful. Even when you want to file your taxes, you can easily export this for your tax preparer, so you will be able to run the report, the fixed asset report. So let's go back to the year-end task. So we also have to analyze the fixed assets. We need to analyze the fixed assets purchase and depreciation expense. Start by looking at the balance sheets and also the profit and loss statement from the setup tab. Let's go back to our book review. So you can run the balance sheet report to see if there has been any addition by drilling down into the fixed asset. And then you can also compare the current and the previous balance. If there is any significant change, that might tell you that there was an addition. Then for the accumulated depreciation, if you compare the current accumulated depreciation and to the prior year, if you see an increase, it means there has been a depreciation charge. But if it remained the same, meaning if they have last year like 10,000 and this year 10,000, it means the client has not recorded the depreciation charge for the current year. So you can do that as well. Then for the evaluate the account receivable and the account payable, we've already done that in our previous tutorial, so please see report so that you can see how to do that, how to analyze or evaluate the account receivable and the account payable. Then you can also review the bills report to make sure that bill payments are applied to bills. Paid bills have bill payment recorded instead of checks. If we pay bills, we have to use pay bills from the plus new. We have to make sure that we've actually selected pay bills instead of check, because if the client select checks, it means they will duplicate the expense. Then we also have to run the following additional report: AP aging, and then also AR aging, open invoice, unpaid invoices. So also look at the report to see all these tutorials. We've covered everything like this. Then you should also know what report should you run: reconciliation summary from the report center. Then you can also run the reconciliation discrepancy report, which you can run from the reconciliation screen. Then you should also run the balance sheet and the payroll tax liability report. You can produce any management report. We've also covered that. Then we also look at the year-end review checklist. Additional tasks you may need to carry out: additional year-end tasks depending on the individual setup of client business. For example, they might be using sales tax, be required to also submit W-2s or 1099 tax forms, or need to record mileage at the year end. Although these tasks may not be included in the books review center by default, you can add them to the additional items sections that we've just gone through, along with hyperlinks to the relevant area in QuickBooks Online. So the best practice is to include these tasks on the final review tab. You don't want to run the 1099s until you've checked and, if required, corrected the relevant data. Then you can also review any sales tax liability and payment. If the client collects sales tax, you should consult the sales tax center in the QuickBooks Online to view the tax liability for each taxing agency that the client is registered with. You should also run a taxable sales report to review the balance due based on their schedule. Ensure that any sales tax file remittances are accurate and up to date. Then you also need to submit W-2s and 1099s. If you pay any employee or subcontractor let's say in 2023, then you need to submit W-2s or 1099s before the end of January. Then also to record mileage. So QuickBooks has an app that you can use to track mileage, or the client will be able to use to track mileage. The IRS guideline requires specific information to substantiate deductible expenses such as vehicle type, the date placed in service, and the mileage. In that report, you should include the total mileage, the mileage that is for business, and the one for commuting, and then the other for personal mileage. You have to separate all that. If the client uses the QuickBooks mileage tracker throughout the year, it's easy to really prepare the log for the auto expense deduction. You need to check the calculated mileage and then also look for the vehicle changes, that is whether they've bought new or sold a vehicle. Then we also need to view all the recorded trips, ensure that none are left unreviewed. Then we also need to manage vehicles. Another task you can do at year end is also to create journal entries to record the mileage expense. So we've gone through all the journal entry. So we've gone through how to book a journal entry. So because for mileage, you will have to book a journal entry for that. At the time of recording this video, QuickBooks Online doesn't automatically record journal entries relating to mileage. So you will have to record them manually. QuickBooks Online will be able to keep track of the mileage, but it doesn't record the mileage expense in the general ledger. So when the time comes for tax filing, you will need to create a journal entry to record the mileage expense on the books and download the CSV file as a backup for your book entries and the tax returns. Note, if you are recording actual auto expenses such as fuel, insurance, and maintenance, you wouldn't need to use a journal entry for those. You only need to book the journal entry for the mileage itself. So for these expenses, you don't need to book the journal entry or record journal entry for these expenses because these are actual expenses. But however, you will still need to keep record of the mileage, because if you buy fuel, you want to be able to allocate that fuel usage to both business and personal, because personal expenses are not deductible. So you have to still log, you still have to maintain a log of your mileage. That is the mileage you use. If you use your personal car for business, you have to be able to track the mileage, that is the business use, so that you will be able to allocate these expenses like insurance, etc. So you need that. That's the reason why you need to keep record of the mileage. To record the journal entry, you can select the journal entry from the accountant tools, and from the account you can select mileage. Okay, so right now we don't have a mileage account, but we can add plus new and then select from the account type. We can say this is an expense. What expense type? Auto, because it's related to the vehicle. So now we can add, we say mileage, so we can say 2000. Then the credits, now we need to record the credit. We can either record AP or cash, right? If we pay cash for this, we can record cash or just AP, whatever method. And we can add a description here. Then also we can select the client name from the drop down. Let's say Lemon Tester is the client name in this case. Then we click and save. So now you can download. So for the list, you can download the CSV file of your client's trip by going to the mileage. But I don't have mileage here, but I haven't installed the mileage. But because it's easy to download and install, you can just go to the apps and then look for find app. Then you can look for the mileage. That's the end of chapter 46. Thank you for watching. Please don't forget to subscribe, like. See you in the next video. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 47, using reclassified transactions tool. When you are reviewing a client's books, you may find transactions that were incorrectly categorized. This could have occurred because clients understand which account to assign those transactions to. In some cases, you may discover a large number of transactions that needs to be reclassified. Correcting these transactions individually could be time consuming. The reclassify transaction tool allows you to reclassify large batches of transactions all at once, saving you considerable time and effort. You can access the reclassified transaction from the accountant tools and then reclassify. You can use this tool to reclassify the transactions by account, and if the client has the relevant tracking feature enabled, class and location. However, there are situations where you can't use reclassified transaction tools and must reclassify them manually. The reclassified transaction tool is designed specifically for accounting professionals and is only available to the accountant users who use QuickBooks Online Accountant and clients with QuickBooks Online Advanced. It provides a variety of search options to allow you to find transactions that need reclassifying. So the left navigation panel allows you to search for and locate accounts in the client's company. Use the account type drop down to specify if you want to look at profit and loss or the balance sheet. Also specify whether to look at transactions in the selected account based on the accounting basis, that is, whether be it a cash or accrual. To see all the transactions in the account, you choose the accrual. If you are searching for a specific general ledger account, enter the account name in the search box. Let's say advertising. So once you start typing, you can see the name pop up. QuickBooks Online lists all available accounts for the criteria you select. So now you can see all available accounts for the criteria you select using the filter. So you can see the cash on hand, the checking, and you can also see the account receivable. So once you click on any of these accounts, you can see the filter will be turned on. So any account that you select, let's say if I select the AR, you can see the filter for the AR is turned on. So if you click on this and you couldn't see any transactions, it's because those are accounts that you cannot reclassify. So you are only able to see transactions that can be reclassified. You see, so currently it's showing 0, but if you look at the balances, you can see there are balances for these accounts. So you see when I click on the fixed asset accumulated depreciation, you can see the transactions for the fixed asset depreciation. So if you click on, let's say, the profit or loss account, if you click on the sales, you will only see transactions that you can reclassify in this case. So that's what we're currently looking at. So if you click on transactions or account and then you couldn't see anything, let's say if we say modify and select account, so you can only see account that can be reclassified. So you can use this section to search for specific account. Let's say service. In the event where you have a lot of transactions, you can search for some of these transactions. Then you can use the date range to select which date range you want to filter for. Then you can also select here the type of account, transactions you are looking for, whether you are looking for invoices or checks. You can select from the type, and also the customer. If you want to filter for a specific customer, you can do that. Then for modify, you can look for accounts that can only be modified. That is for account. If you just want to look for accounts that can be reclassified, then those are the only accounts that you will see. If you select the all under the modify, meaning you can see all the transactions for these. So you will be able to see all the transactions. So now let's say if I click on the services, you can see these are the transactions relating to that. So if I want to reclassify something, let's say for example, if we use the advertising, if I want to reclassify it, I can just select the transaction. Let's say if I have like multiple accounts, I can also select this and then say reclassify. That is in the event where you have like a lot of account or transactions that you want to reclassify to the same account, you can do that. Let's say maybe you have like multiple transactions that you want to reclassify into one account, you can do that by just selecting the transactions and then click reclassify. Now you can go and select the account where you want to reclassify it. So let's say we want to move it to this. So you see, this is how you reclassify multiple transactions. But you also have some limitations. Although you can use the reclassify transaction tool in most situations, we do have some limitations on when you can use the reclassify transactions and what you can use it for. So for example, you can't change the payment account, that is the bank or credit card account, for expenses using this reclassify. So let's say, for example, if we have an expense that we want to reclassify, you won't be able to reclassify the payment account for this. Other side of the entry, you won't be able to move this using this reclassify unless you open the transaction and you can manually reclassify that account. Let's say by the payment tool, you can select whether be it cash on hand. So now you see you can do that. But when you use the reclassify, it will only show you one side of the entry. So let's say, for example, if we move this mileage expense to, let's say, something that we can remember. So let's just say to uncategorized expense for this purpose. You can see the uncategorized expense. You can see it here. So, but if I click on this, you can see the checking account is still here. So the other side is still checked. You were just able to reclassify the account, the expense side of it, whereas the cash account side or the payment account is still the checking. So if you want to so that's one of the limitations. If you want to use the reclass, it's only available to move the one side, so you won't be able to change the payment account. Then also another limitation, also you can change the account for inventory adjustments because they are connected to the inventory shrinkage and assets account. So that's the reason why you won't be able to adjust or reclassify inventory adjustment account. So you can use the reclass to change the expense account, but not the income. Let's say you have a customer project that you are working on. So this customer project, you are spending some expenses. Let's say you have employees who are working on this project. Maybe they are spending $200 for meals, but at the end of the day, you are going to bill the customer for that. So the meals, the expenses for the meals, you still have to record that expense. That is by debiting the expense and crediting whatever the other account. Okay, but the income also, because at the end of the day, you are going to bill the customer for that. So as such, you have to record the income side, which is whether be it you debiting the AR and crediting the sales for that, because it's an income to you. The limitation for this, you cannot change the income account for that related transaction using this reclassify. Okay, so but for the original entry, which is the expense that was incurred, wherein you debit the expense and credit the cash for the payments to the employees, so you can reclassify that. But the income side of that same transaction cannot reclassify that using this reclass. So if you are on an exam, they ask you a similar question, those are areas you might want to look into, because you can only record the expense side of it using the reclass. You can only reclass the expense side of it, but not the income. So in addition, there are also restrictions on how you can reclassify certain transactions. For example, transactions that don't contain a customer name can't be reclassified to receivable. So where you record a journal entry but you did not include the customer name. So let's just say you have cash, we debit cash. Let's say we debit cash by 5,000 and credit sales. In this case, let's say this was the initial entry that we made. So we say sales So whatever we can come up with. So this is the entry that we made. So let's just change this date. Let's bring it to Friday last week. So now we've saved this transaction. So now we go back to this transaction to see if we can change this. You see, we have the cash on hand. So let's say we want to move it, because let's say we did not end up receiving, let's say this was not actually cash, this was account receivable. So we want to move this. Remember, when we created, let me go back to show you the entry. You see, on the name, we don't select any customer name on this. So if we want to reclass this, we won't be able to do that. If we want to reclass this to whether be it account payable or account receivable, because for account payable and account receivable, we have to get, for account receivable, we need a customer name, whereas for account payable, we need the vendor name. So if you want to reclass this, let's say we want to reclass this using the tool. So let's say account receivable. So you see, this is the account receivable. If we say apply, you see something wrong. We won't be able to make the changes because there is no customer name on it. So if we go back to this, the reason why we're not able to reclassify this transaction to account receivable or account payable is because there was no vendor or customer name. So let's just say we put in a customer name here. We save it. Now let's go back to let's go back to reclassify this to account receivable. So now so you see, now we are able to reclassify. So that's another limitation that you also have to pay attention to, that we cannot reclassify a transactions to account receivable or account payable that does not have a vendor or a customer name on it. So we also have other transaction types like sales tax transactions. You can reclassify sales tax transaction using the reclass tool, because the payment and tax adjustment are controlled by the tax settings. So that's the reason why you won't be able to do that. Then for inventory adjustment, you cannot use the tool to reclassify inventory adjustment, because inventory adjustment are item-based transactions. So that's the reason why you won't be able to do that. Then payroll transaction also, you cannot reclassify payroll transaction using the tool because they are controlled by the payroll settings. So that's the reason why you won't be able to do that. So that's the end of chapter 47. Thank you for watching. Please don't forget to subscribe, like if you like the videos. See you in the next video. Thank you. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 48, closing the books, protecting your work. When you or your client finish reviewing a financial period, you will want to lock it to prevent changes. Problem can arise if transactions are added, deleted, or change after the books are closed. QuickBooks Online allows you to close your client's books at any frequency you prefer. You can set a closing date or even a password to protect and prevent changes after you close the books. Any changes made to the accompanying file after you close the books will be logged. You can run an exception to closing date report to see changes. Closing the books isn't a year-end process. You or your client can close their books at any frequency. Some clients prefer to do it each month after they've completed any reconciliations. However, the books should be closed at least each year end after the tax returns have been filed to finalize all account balances and lock down the books. Before you can close the books, you need to do the following. First of all, you need to reconcile all bank and credit card accounts. If you don't know how to reconcile bank accounts, please watch our reconciliation tutorial. Then you also need to substantiate all balance sheet account balances. In other words, look for things other than bank and credit card account. For example, look at the loan balances and asset values on the balance sheet. Then also you need to review the values on each row of the profit and loss report and ensure they are correct for the period being reviewed. So now to close the books. We have several ways to access closing the books in QuickBooks Online. So the more straightforward method is to select the accountant tools and close the books. You can also access the close the books from the book review from the client's account, and then on the left navigation you can see books review. So once you click the books review, you go to wrap up, then you also have the option to close the books from there. So you can also access the close the books from the gear icon. So once you click the gear icon, you can go to account and settings, advanced, and select from the accounting, you can select close the book. So these are the various ways to access the close the books. So now to close the books, you can just click on close the books and turn this slider on. Then you can select the date. So let's say we are going to close the books for October 31st. So now we can either choose to password protect or just allow changes after viewing a warning. So for this tutorial, we're just going to allow changes after viewing a warning, but in real life we need to password protect. If we select password protect, you can enter the password. So if you put in the password of your choice, whenever someone wants to enter a transaction, they would have to enter the password first before they can post that transaction. However, for us, we'll just select to allow changes after viewing a warning. So we click save. So after we've clicked save, now we click done. So now we've closed the books for October. Please note that whenever you are setting up a date, it is best to create or update a closing date when your client is fairly certain that all the day-to-day transactions for that period have been entered. So you don't want to put in a date that you know for sure that your client is still working on adding more transaction or making changes to existing transaction. So you want to be sure that the date that you put in as the closing date is actually a date that the client would have already posted all the necessary transactions. And also the close period also applies to non-posting transactions such as estimates and purchase orders. If you create estimates and purchase orders after the closing date, you will also have the exceptions to the closing period for that. Also note that reconciliations can be conducted in the closed period without having to enter a password. So what we're saying is now we know our closing date is actually 10/31st, 2023. So if we go to do a reconciliation, let's say our reconciliation is 10/30, 2023. So we can still do our reconciliation without having to worry about like the warning. As you can see, our reconciliation here is the October 30, 2023. So even though we put in October 30, 2023, we're still able to do our reconciliation without having to worry about the warning. If we have entered a transaction to QuickBooks Online that is dated maybe October 30, 2023, we would get a warning because that date was before the closing date. So let's say, for example, let's just enter one expense transaction. Let's say in this case, Destiny. So the date, let's say we know our closing date was October 31st. Let's say our date is October 30. And now we have cash, email marketing. And let's just click save and close. Because the date we've entered is actually before the closing date, we got this message. Because we've choose to get a warning, that's the reason why we're just getting the warning. So this warning says this transaction was on or before your company's closing date. Using this date will affect your books. Are you sure you want to save? So we say yes. So we can still save this transaction. So even though QuickBooks allow us to save the transaction, we still have an exception to this because of this entry that we've entered, which is after the closing date. So now we have an exception report because of that. Users with correct permissions can edit or delete transactions after the closing date and after the books have been closed. In this situation, QuickBooks Online will do two things. First, QuickBooks Online will display a warning asking the users to enter the closing date password. That is, if we've protected the closing date with a password, QuickBooks will also log the change in the exception to closing date report. The exceptions to the closing date report list all changes made to transactions before and including the closing date. The reports allow you to track if any changes are made, regardless of whether the books are password protected or not. Once you set the closing date, you can access the report through the report center in the For My Accountant. So if we go to the report, because now we've added a closing date. So if there was no closing date, the exception to closing date report will not be available. But because we've added a closing date, now that report will be available. So now you can see the exception to closing date. So if we click on that, the exception to closing date is actually a filtered version of the audit log. So these are the exceptions to the closing date. So you can see who made the changes, the transaction ID, and then the last modify. You can see the time and the date when the entry was made. So you can see all these entries. You can see some that are system entries. So if I click on view the history, you can see the transactions that were recorded after the closing date. So now you have the option to save this. So if you want to save this, you can just click the printer icon. So once you click the printer icon, then you can select save as PDF. So once you select that, you will be able to save it to your location of choice. So now I'm not going to save, I'll just cancel. This report is only available because we have selected a closing date. So if I go to account and settings and go to advanced and now select a closing date, then I turn off this close the books. So let me just save. So now if I go back to reports and go to my accountant report, even though we know the name, we can search, but I just wanted to show you how for my accountant. So these are the reports for my accountant. So you see the exceptions to closing date report is no longer available. Even if we search, we say, you see, so this report is no longer available because we've turned off the closing date. The report will only be available after we've turned on the closing date. So let's go back to account and settings and let me just turn on the closing date. So let's go back to October 31st is our closing date. So now let's go back to the report. So you see, so exception to the closing date report is now available because we've set a closing date. If we change the date, let's say if we change our closing dates, let's go to accountant, close the books. So now let's just change this date. Instead of 12/31st, let's just change this date to 10. Instead of 10/31st 2023, let's just change it to 10/25 2023 and save. So now let's go back to the report and see if you will be able to see those transactions. So let's say exception. So you see, so we have the exceptions to the closing date. So you see, these are the exceptions. So now we still have these exceptions here. So this is how to close the books and how to run exceptions to the closing date as well. And that's the end of chapter 48. I wanted to take a moment to express my deepest gratitude to my subscribers for their support and enthusiasm throughout our QuickBooks Online Tutorial series. It is with a great pleasure that we now wrap up the final chapter of this educational adventure. From the very beginning, our goal was to demystify the world of QuickBooks Online and empower you with the knowledge and skills to navigate its intricacies with ease. We hope that we have succeeded in providing you with valuable insights, practical tips, and actionable guidance that will truly transform the way you manage and interact with QuickBooks Online. Once again, thank you for joining us on this educational adventure. Your enthusiasm and commitment have made it truly a remarkable experience. I am immensely grateful for your trust and look forward to bringing you more valuable content in the future. And thank you for watching. See you in the next video. Hello everyone, welcome to the channel. My name is Fuller Kamara. Today I'm gonna go over how to take the QuickBooks Online examination. Once you log into your Pro Advisor account, you can click on Pro Advisor under the Training tab. Once you click Training, you will see the Training Hub, Personalized Path, and the Certification Hub. Then you also have the Training Library. So the Personalized Path, this is just courses that you need to take in order for you to get prepared for taking the QuickBooks Online examination. You can set up the personalized path. Then the Certification Hub, this is where you take the exam. If you've also passed an examination, this is where you download the certificate. Then you can see right now I have already taken the QuickBooks Online, so that's why you see I have the option to download certificate. But if you haven't taken the exams, you don't have this option. Then you can see I also have now the option to take either the QuickBooks Online Advanced or the payroll. So to take the exam, you can just click take exams. So you can see also the QuickBooks Online, once you pass the exam, you have like benefits. Then as long as you pass the exam, you will be entitled to like 100 points. The way to earn additional point is if you set up QuickBooks Online Ledger subscription, you will get 25 points. If you have like an active contract or payment and 1099 filing client subscription, you will have 25 points. Then you also have 25 points for bill pay client subscription. But if you get like a payroll subscription like core or premium, you will get like 50 points. So the 25 points is for the basics. For premium, you get like the 50. Previously, as soon as you pass the QuickBooks Online exams, you'll be able to get listed on the QuickBooks Online Pro Advisor directory. So now in order for you to get listed on the QuickBooks Online Pro Advisor directory, you will have to earn 500 and above points before you can get listed. Now you all know how to earn points. So now let's go back to the exams. So basically, the QuickBooks Online exams is divided into 5 sections. So this is the Training Pro Advisor account that I've just opened. So you can go to take the exam. So once you click take the exam, you can see you have section 1, which has 15 questions, and section 2 has 17 questions. Then you have section 3, which is 13 questions. Then you have section 4, which has 15 questions, and section 5, 13 questions as well. Once you click start a section, you'll be able to complete that section, which is 15 questions. So once you finish the 15 questions, you can submit those and go back to the next section. So once you finish all the section, then you can submit the entire exams. So if you submit the entire exams, that's the time you see the result. So if you just submit one section, you won't be able to see the results because you still have 4 more sections to go. You have 3 attempts. If you still don't pass after the 3 attempts, so you will have to wait until after like 60 days before you can retake the exams. So you can see you have a minimum of, the total questions here is 73 questions to answer. Once you finish all those questions, you will get your result. So in order for you to pass, you have to score 80% and above in each of those sections. Let's say if you get 80% on section 1, 80% on section 2, then maybe section 3, if you get like 75%, you will have to retake the section that you did not pass. Once you pass those sections, then you will get the certification. So at that time, you will be able to download the certificate by going to the certification hub. So now some of the tips that has helped me to pass the exam on the first try. 1, you should make sure you practice a lot, because this exam is not like an exam that you just want to like take multiple times. So if you prepare well, you will be able to pass it on your first try. So the first tip that I recommend is for you to practice. Let's say, for example, if you've watched those videos on my tutorial, try to do a lot of practice, like knowing your various navigation, like you going to the various section. You have some questions are knowledge based, then you have some questions you need to get familiar with the QuickBooks Online navigation. You should use like 2 different browsers. That is, let's say if you are taking the test on Safari, you should try to get Google Chrome where you can open the sample, which is the test drive. So this sample, you won't be able to open it while you are taking the exams. Okay, so make sure you have 2 different browsers. If you open a private window, like for example, if you have Safari, you right click, you will be able to open a private or incognito window on Google. You will be able to open the sample company, but I don't recommend that because sometimes you might get glitch. So the best thing is to open the sample company on a different browser so that you will be able to go through the test. So let's say if you are asked a question that you don't know on the top of your head, but if you know, you understand the navigation, you know where to find it, then you can open the sample company and look exactly where to see some of those answers. So you'll be able to know how to answer that question. So the goal is you shouldn't ask people about the questions because that's considered unethical. If you are asked a question on the exam, you shouldn't disclose those questions to third party, like posting those questions, asking other people to help you solve those questions. You shouldn't do that. But you have the resources like the sample company to go through the sample company to know exactly where to get the answer to the question asked. Then the good news is you are not timed. They don't time you on the exams. That's the good news. So you can spend as much time as possible looking for answers. But try to make sure you are the one answering those questions because it's not ethical for you to seek help from third party. So just keep that in mind. But yeah, you will be able to, if you practice well enough, like going through the tutorials from chapter 1 to 48, you will be able to answer most of those questions without even Googling or asking any forum. Like you'll be able to do that by just practicing, doing a lot of practice. Try to practice because you have the sample questions here. So if you look here on the certification prep, this is where you can see the sample questions. These sample questions, this is where you test yourself. Okay, you can test yourself by answering these sample questions. If you got those answers correctly, then you know you are well prepared to take the exams. But let's say you score below the 80% on each of the attempts you make, meaning you are not well prepared. So you should try to take these sample questions until you can feel comfortable in answering those questions. And also do not rely on Google answers. Like let's say you find a question that is challenging, you wanted to ask Google, say, hey, like looking for previous response to some of those questions, you might get those wrong because I have seen some responses. Like for example, I was looking for how to delete a client from QuickBooks Online. So after I've added a client, I wanted to delete it because it was supposed to be a vendor instead of a client. So when I Googled the answer, because I couldn't delete the client, I was finding it difficult to delete. I did see some responses that are suggesting some procedure that would help you delete, which is not correct because you cannot delete a client on QuickBooks Online. So once you've added a client, you can either make them inactive, but you won't be able to delete them. You see, so that's the thing. So if I had not known the correct response at the end of the day, if I was taking an exam, I would have added the wrong response if I had relied on some Google response. Don't get me wrong, you might get good answers from Google, by searching Google queries, but when it comes to taking tests, I would suggest not to rely on some of those responses because you might end up failing the exams if you don't be careful. So the best bet is go through the tutorials like from chapter 1 to 48, then make notes like outlines. Okay, let's say try to create some notes on where do I get XYZ. Let's say, for example, if I'm looking for to add an invoice, I know where to go exactly. So you click plus new, and then you go to the customer section, click invoice. So if I have a question relating to invoice, like for example, customization, if they talk about how to customize an invoice, so I know exactly where to customize. So I can just click customize, then you will look for like new style, try to make all the customization. So if your question asks about customization, you will know exactly where to go. Okay, so that's just an example of how to answer some of these questions. So once you know the navigation by using the sample company, you will be able to answer most of the questions. And if you practice a lot, like practice answering those questions, using the practice questions, the exam prep questions to practice, then also going through the videos. If you have a section that you don't understand, go through the videos and then practice on your own how to navigate. I'm sure you will be able to pass on your first try. So like I said, make sure you take notes while watching those videos. If you haven't taken notes when you were watching the video, go back, take notes. Then after you've added like outlines, let's say invoicing, you know where to get it, just make some notes that you might be able to revise and understand exactly if a question coming that you don't know the answer off the top of your head. So you have that outline that will point you where to go and look. So as long as you are the one doing the work, you are the one who is looking, you know where to find things. Because at the end of the day, the preparation or the certification is to help you learn something that you will be able to apply on the job. That is after you've become a pro advisor. Let's say if a client asks you questions or need help on something, you should be able to figure that out and help the client answer those questions. But if you rely on somebody else to answer your questions for you, so you won't be able to do that if you've got certified and you have something technical that the client may ask you, and then you are not able to answer that. So those are some of the ethics. You shouldn't share the questions to anybody else. You should make sure your responses are from you. So it doesn't matter if you can use the sample company to figure out what the best answer might be, but even though you might have some questions that you cannot find in the sample company, because remember, you are the pro advisor. So as a pro advisor, you have your pro advisor account. Some of the questions that are coming from the pro advisor, you have like managing clients, managing your team, managing the tasks. So those are stuff you cannot find in the sample company unless you open the pro advisor account. Those are the areas you will see those. So just make sure you understand all those bits and pieces. Then I'm sure you should be good in getting this certification. Based on some forums, you will see some people have been working as bookkeepers for years, maybe 5 years. Some have worked for over like 1 year in order for them to be able to take the exams. So if you can take it within a month, which I'm very sure you should, because I only prepare for the examination like within a month, and then I took the test. So I believe if I can do it, you should also do it. So it all depends on your timing, how you manage your time. I'm sure you should be able to take it within like a month of preparation. So if you go through all the videos, because I try to cover everything possible. I know there are few things that I might not cover because everybody's exam might be different. The questions that you get might not be the same as the other person. So it all depends on how you prepare. All you need to know is where to find things and some of the notes that I told you to take that will help you answer some of these questions that are knowledge based, that you don't have to go through. Like, for example, if they ask you how many users that you have in the QuickBooks Online Plus, how many users, you can get up to 5 users. That includes the admin. You should be able to get those answers, but if you are not sure, you should know where to find those answers, right? So you see, so that's how to prepare for the exams. I hope this helps. Please let me know if you have any other questions. Let me know in the comment section. Other than that, thank you for watching. Please don't forget to subscribe, like, and share. See you in the next video. Thank you.